Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know what prices will go next? At the core of Metastock are the power tools. The power tools give professional-grade analysis tools to private traders like you. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices.
Good summer. Welcome to the Online Trader Summit August edition. It's good to see you. You look awesome. Let's go ahead and read a legal disclaimer. We'll get everything running today. So we'll start there. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and Metastock shall have no liability for investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So I hope you enjoyed that. If you're joining us on YouTube, make sure to like and subscribe. It helps a great deal. Do all that cool stuff. Make sure to say hi. Tell us you can hear us, like whatever. Anyway, it's much appreciated. Any of the interaction up there helps a lot. So want to thank our two sponsors today, CMT Association, which is a very, very well-reputed company. They do a lot of, it's actually more of an organization, but they do a lot of, we're actually going to have them talking today, but they They're a very, very well-established company. They do a lot of training on risk management, systems development, portfolio management. We're happy to be associated with them. We appreciate them for their sponsorship. Our other sponsor today that I'm going to mention is Stocks and Commodities Magazine. Stocks and Commodities Magazine has been a sponsor of the Online Traders Summit for a number of years. They do such a great job. They've been such an avid supporter of the event, and we appreciate that as well. So without further ado, I hope you're doing well. I hope you can hear me. And we do have a note that the audio is not audible. So I'm sorry you're having some issues there. If you can't hear me and you're in the chat, please let me know. It will make me feel better. I will type some instructions to Nanda Kumar in just a second in terms of ways he can help that quite a bit. So in any case, our first speaker today is Steve Bigalow. Steve Bigalow is a good friend of mine. We've been doing business with Steve for a number of years. I love his candle profit systems that we developed for Metastock that kind of identifies all of his patterns. I've traveled around the world. Steve is a very, very entertaining speaker. I hope he gives us at least 2 or 3 jokes today because they're the best. And but the substance, the stuff that he likes to talk about, I absolutely love having Steve on here. So let's go ahead and bring you on here, Steve. How are you doing?
Good, Jeff. How are you doing?
I'm doing great. I'm going to go ahead and make you the presenter.
Share my webcam. All right. Show my screen. Start. Let's see. Did I do the webcam? I guess so. Is my webcam working? Yeah.
Yep, I can see you.
Okay.
I'm going to go ahead
and then I hit start broadcast.
No, the broadcast should be started already.
Oh, okay. All right.
So.
All right. Well, good morning, everybody. The first question I always ask is, how many people have seen my presentations before? Put a Y for yes and for no. That'll give me an idea of how much time to describe each chart. Whoops. Anybody? Whoops, are they coming into the questions area?
They should be, yes. They
okay.
should be. Do you see a start broadcast button on your console still, Steve?
No, it's now disappeared.
Oh, okay, all right. Now they're coming in. Okay, good.
Okay.
No, well, you have some questions that there's no sound, which is interesting because I can hear you.
Huh. All right. Well,
Yash says he can hear us.
Yeah, so far 50-50. So, all right, I will start and hope everybody, I'll try to give as much information as possible. But
okay, that sounds good.
One of the main prospects or the main aspects of candlestick analysis is that if you just know the psychology that created the signals, you're putting yourself into situations where you're in high probability trade setups. Oh, I did lose one screen here. Anyways, so and I'll let Jeff explain the scans that can find some of the strong signals and patterns. And again, everything is kind of based on identifying information built into a candlestick chart that tells you there's a new strong investor sentiment, either bullish or bearish. And this gives us a heck of a lot more information than just looking at any other chart. And not only more information, but it reveals where the money is flowing in and out of based upon these candlestick signals. Now, for those that have not seen candlestick signals before, a bullish candle is created when it opens here and closes above where it opens. A bearish candle is where it opens and closes below where it opens. That doesn't necessarily mean it's up or down for the day. It's just telling you where it opened and closed. And that information is dramatically, what do I say, full of information that other chart services don't don't provide. So what we're looking for are patterns. There's about 8 candlestick patterns that we use. This is a fry pan bottom, and as you can see, it's a big rounding bottom that you couldn't trade one way or the other. However, here is the important information using the patterns. Look where the 200-day moving average is, which is also corresponding where this pattern started. And then this is a doji day, a day of indecision. But there is a very strong candlestick signal created by a doji. And that's the doji rule that says the price is usually going to move in the direction of how they open after a doji, which means when it opened here, even though we were in the overbought area, and I'll try to get to that here in a second, even when we're in an overbought area, if they open this positive, they're going to do a doji sandwich. And a doji sandwich is merely a big bullish candle, a doji, and if they open it positive, they're likely going to trade positive, and the probabilities are extremely strong that this candle right here is going to be the same magnitude as this candle right here, which pretty much identifies the fact that this fry pan bottom has now broken out, and here's the price move we expect from that breakout. So a lot of times you don't have to sit around and wait for a breakout. You just put a buy stop above this level. So if it's still waffling for the next few days, you're not sitting here watching it. But if they do go through that level, again, the probabilities become extremely strong that investor sentiment that was building up has now broken out to the upside. One of the, I always kind of refer to this screen as being the strongest, most powerful screen that I put on my my presentations. And that's the T-line. The T-line is the 8 exponential moving average. It has Fibonacci characteristics, which basically means that if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. So the point of that previous screen was that if candlestick signals are the graphic depiction of everybody buying and selling, or the graphic depiction of investor sentiment, and the T-line acts like a natural support and resistance level of human nature, this becomes an extremely powerful combination that not only are you seeing a change of investor sentiment, but now you can watch investor sentiment to tell you when it has finally changed. And the reason that's important is if you were like me, I was one of the worst investors in the world. And when candlesticks came along, it finally turned me around and started making money. But when we applied the T-line, what is the normal reaction of most investors? Well, I've got a profit and I don't want this profit to turn into a loss, so I'm going to take my profits. Instead of letting the chart tell you what the investor sentiment's doing. So I was making good money when I started learning candlesticks, meaning good money was not losing money all the time, starting to make money. But then my big money was starting to be made when I applied the 8 exponential moving average. So on my chart, you're going to see the 200 and the 50 simple moving average. The reason for that is every major money manager in the world uses those moving averages to make their decisions about their portfolio. We don't use it to make our decisions. We use it to see what everybody else's decisions are at those levels. Then we've got the 34 EMA that works extremely well, but this is the most important one, the T-line. So it works just as effectively on the downside, that if you see candlestick sell signals and a close below the T-line, you can stay short until you see that candlestick buy signal and a close back up above the T-line. I forgot to mention that if you've got questions as we're going along, feel free to ask them. I'll try to answer them as quickly as possible as we're going through this presentation. So what are the benefits of identifying candlestick patterns? There's a couple. One, you're probably identifying price movement that has an extremely high probability of price identification, which direction it's going to go. And two, the magnitude of that move is usually going to be much stronger than just a mere uptrending stock during an uptrending market. So here are the patterns, and I tell people you don't have to be a rocket scientist to use candlestick analysis. You don't have to be a great technical analyst. All you have to do is recognize what human nature does time after time that recreates these patterns. And there's 50 or 60 candlestick signals in the candlestick universe. You only have to know 12. Oh, for crying out loud. Oh. Six longs and 6 shorts. Now, when you know what these signals tell you, they dramatically enhance the identification of patterns. So why do patterns work? Because human nature works the same way time after time. So if we can recognize a pattern, now we can apply the signals. Notice how we have a little bullish harami, one of the 12 major signals. Notice how we have the doji sandwich closing back up above the T line. And now it's identifying for us, especially coming out of the oversold area. Now, my overbought and oversold, I use stochastics. My stochastics are 1233, and that's nothing set in stone. Somewhere around 30 years ago, I was sitting in my living room saying, well, if candlestick signals work, we should see buy signals in the oversold area, and we should see sell signals in the overbought area. And so I was looking for the signals down here. Now, in this case, not only could we see the buying started, but this is what we call a scoop pattern. Notice the flat handle. Now you've got this scoop, and what do we expect coming out of a scoop pattern? A slingshot effect that gives you a very strong price move. Now, how long do we hold this? I mean, there were some sell signals along the way, but what was our criteria? You stay long until you see a sell signal and a close below the T line. The best friend signal is one of your top ranked signals and patterns. It is basically a doji in the oversold area, and the next day they gap it up. The reason we call it your best friend is, number one, the probabilities of it heading higher is extremely strong. And number two, the magnitude of that move is usually going to be pretty strong. So there are, out of the 12 major signals, some that we consider the strongest. The kicker signal. Notice how it opens here, closes here. The next day they gap it up above the previous day's open and go the opposite direction. That's a kicker signal. That's telling you the investor sentiment has been dramatically changed, giving you a very strong up move. Now you apply that to what do we expect coming out of a fry pan bottom? A very strong price move. That's just what I call 2+2 analysis, when you start adding everything together and confirming your patterns are going to work. There's our best friend little hammer signal breakout through the 50. Now we see it as a strong candlestick signal that came up through the 200 and the 50. What's everybody else watching? Well, if they're not familiar with candlestick signals, they're watching to see what's happened right here at the 50-day moving average. Again, providing a very strong probability you're going to be in an uptrend. So again, I always repeat, this is not rocket science. This is just identifying what the Japanese rice traders have identified for us over the last 400 years as what happens in human nature to start very strong price moves. Same thing on the downside. We made big profits on Carvana. Again, there was our bearish engulfing signal right here at the 50-day moving average. And then what was happening from that point? They could never get this back up above the T line. There were some potential buy signals, but they could never close it above the T line. This stock over the last, I don't forget, year went from 375 down to 20. Now, again, what helps your investment decisions or keeps your emotions out of your trading, like it has for me, is I had big profits. And what was I always constantly thinking, oh, I got to start taking profits, because what if I let this, I can't usually hit big trades like this. But all I had to do was just keep watching. As long as it didn't close above the T line, those profits got big. That's what takes your emotions out of your trading, is what is happening in human nature and what is the T line telling you. So there it is on a much more clear chart. So again, the T line keeps you in good trades without getting whipsawed in and out. Netflix, a while back, same thing. There was your bearish kicker signal. What's that telling us? We just stay short until you see a buy signal and close back up above the T line. And if you can recognize a pattern, which is now being confirmed by what everybody else is watching, like a resistance level of the 50-day moving average, that just adds that much more credence to the fact that they're not going up. And when they did that little bearish kicker signal, that told you that was time to be shorting this stock. Same thing right here, a high probability trade, a bearish best friend, it's time to be short. So what is the candlestick analysis, what I call psychological logic? That if you can put all the pieces of common sense into your graphics, you now can identify the high probability trade setups so that you're prepared for them. So again, if we know what the signals are doing to kind of confirm what's going on in investor sentiment, that just adds that much more credibility to identifying when a pattern is working. So what's the first analysis that we want to be doing? We want to see what the market direction is. So common sense says, if we can see the direction of the market, if it's heading down, we're looking for bearish charts. If it's heading up, we're looking for bullish charts. If it's moving sideways, we might have both long and short positions in the portfolio. ANEO, yes, the T-line is the 8 exponential moving average. The 50 and the 200 are simple, and the 34 is an exponential. Now, a lot of people say, well, why do you have the 34 on here? The nice thing about candlestick charts is the most important facet of this chart is what is the signal and where is it occurring. The Japanese rice traders have a very simple philosophy. If you see a candlestick buy signal in the oversold area, you're probably seeing a reversal. If you're seeing a candlestick sell signal in the overbought area, you're probably seeing a bearish reversal. Now, I forgot to mention a caveat to the T-line. The T-line also has a caveat that says the further away you move from the T-line, the higher the probability it's going to come back up and test it. So that makes this signal in the oversold area as a doji that far away from the T-line. What's our doji rule? It's going to move in the direction of how they open after a doji. So when they open this positive, where do you think our first likely target was going to be? At least back up to test the T-line. So again, this is just taking the probability factors of what normally happens in human nature. The T-line is that graphic of the natural support and resistance level of human nature. Regarding the T-line, should the daily and weekly T-lines both agree? No, not necessarily. Now remember, the candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. They work just as effectively on the 1 minute chart, the 5 minute chart, the 10-minute chart, as they do on a daily, weekly, or monthly. It all depends on what time frame you want to be trading. I used to trade in my younger days successfully the E-minis off the 1 minute, 3 minute, 10-minute combination. Right now I trade futures like soybeans, cattle, the dollar, using the 10-minute chart as my bellwether. Each person has to figure out what their trading schedule and what their trading nature is. And then you can apply the correct time frame as far as using the candlestick charts to fit your time frame. So this is Friday's chart. Right now the Dow is down 71. But here's where you add everything together. Look where your bottom was. And then look what happened when it pulled back. The downtrend has been in progress for 6 months now. But one of the cannot see the chart, only you talking. All right.
Let me chime in on that.
Okay.
Hakan, what you're doing is you're probably watching on the GoToWebinar app. And in that case, you're probably on a phone and you want to slide either left or right. One of those directions will actually bring up the chart for you.
Okay. So here's the analysis. There was a bottom. They couldn't come back to a new bottom. In the downtrend, every time they came up, they couldn't get to a new high. So that told us the downtrend was still in progress. But now we have another buy signal. Look at the hammer signal, one of the 12 major signals. They gap it up the next day and close above the T line. So what's that tell us? We've got a candlestick buy signal and a close above the T line. We're in an uptrend. Now we can see what pattern is setting up. Over the last week, notice how they pulled right back to the T line and curled back up. That's your J-hook pattern. The J-hook pattern is one of your strongest identifiable patterns. You can see the little J-hook or wave 1, wave 2, and we know what wave 3 is going to be. Wave 3 is usually the same magnitude as wave 1. That should tell us that wave 3 should at least bring us back up into this area to test to see if they can go through that area. Now, if I'm looking at the, I think the Dow is down 71, so it's trading right here. Now, do you just use the Dow? Everybody asks, well, why do you use the Dow? It's only 30 stocks. Well, it usually represents what's going on in investor sentiment. But you can look at the Dow, the NASDAQ, the S&P 500, and the transportation index, all in the matter of 15 seconds total. Look what happened here on this J-hook pattern. Not only did they break out through the 50, which everybody was watching, they pulled right smack dab back to the 50. And then what type of signal did it create? One of your strongest bullish signals, a kicker signal off the 50, creating the J-hook pattern. What did that tell us? That told us if this was wave 1, wave 3 should be the same magnitude. And if it did, what did it tell us about this level? They're probably going to go through that level. And what did that tell us about the downtrend that everybody else would be watching? We've finally now hit a place where the recent high has now been breached. That's a much stronger bullish indication that we're at least stop the downtrend. We might be in an uptrend, or worst case scenario, we might be moving sideways. But as you can see, the visual aspects of candlesticks give you a lot more clarity as what is happening in investor sentiment. A J-hook pattern starting with a kicker signal, that's a strong implication that pattern's in progress. So when you can use a metastock for scanning for breakout signals and patterns, we know that one of the patterns is the J-hook pattern. Now, this is an unofficial correct trade probability. This is just my research over the last 47 years of investing, 30 years directed toward candlesticks, that approximately 81% of the trades are going to act positive or negative, depending if you're a bearish J-hook pattern. Now, I always put the caveat on, this is my going back through hundreds, if not thousands of charts and finding the recommended CPNG for that same scenario. Look at our kicker type signal right here at the T line. So we started buying. What was our expectation? Wave 1, wave 2, wave 3 of the same magnitude. Where was our stop loss? There was our doji. What's our doji rule? The price is usually going to move in the direction of how they open after a doji. So this is another aspect of candlestick analysis. If that's a signal, and we know that if it opens lower, it's probably trading lower, where do you put your stop losses? This is the nice thing about the charts of candlesticks. You can pick out a logical place that says this is where I should be taking profits. If it opens here and trades here, I'm fine. If it opens and trades below that level, where do you think the first target's going to be? Back to the T line. PayPal. This was last week. There's your J-hook kicker signal. We'd be buying PayPal today on positive trading. NVIDIA, 2+2 analysis. Wave 1, wave 2, right here to the 50. They do a kicker signal off this level through the T line. We'd be buying this one on positive trading today, because what would that be indicating? That they've broken out into wave 3. Now, on the other hand, if it opens here and trades here, what do? We don't do anything. It didn't confirm that trade setup. Do you look for 1 or 2 candles to confirm a J-hook? No, there's 2 methods you can trade a J-hook. Now, these are sharp reversals, but sometimes they curl up like this. You can either be buying here with the anticipation they're going to come up to this level, or you can be more conservative and wait to buy it once it comes through this area. There's that reversal again. A kicker type signal off the 50. Then a gap up through the resistance level. I told you they're going into wave 3. So there is even a more defined J-hook pattern. I'm just kind of concentrating on these patterns right now because that's what is being produced in the markets right now, are these J-hook patterns, because the indexes are doing J-hook patterns. So a lot of people ask me, which are the strongest candlestick signals? And the answer is the 12 major signals have already been researched for you over the last 30 years as ones that are going to produce your high probability, high profit trade setups. So a lot of people say, well, which ones of those are the strongest? They're all strong. It all depends on what the market conditions are. So all you're having to do is learn 6 bullish and 6 bearish. So it's not like you're learning a lot. But here's one thing I want to stress. I was looking through some of the other candlestick charts on YouTube, because I put my stuff out on YouTube every couple of days. And I was looking at one and saying, how does this guy get 50 some odd thousand hits in a matter of 1 or 2 days? And he was doing a signal that was called 3 white soldiers. Well, as he described it, it wasn't even the correct description, number one. And number two, he spent 20 minutes describing this signal or pattern. The problem with 3 white soldiers is it might occur once every 6 or 8 weeks somewhere. So it doesn't even occur often enough to even spend mental time and energy trying to learn it. And that's the case with most of the candlestick signals. The reason I have identified the 12 major signals is they occur constantly, meaning the doji or the hammer, the kicker signal, you're going to find those almost on a daily basis, number one. And number two, when you do find them, they are going to be the ones that are going to be producing the major profits versus what I call the secondary signals, the rest of the candlestick universe. So I always kind of am now pushing people to say, you don't need to learn all the signals and patterns. You only need to learn the ones that are going to produce the best results for you, which are the 12 major signals. What time frame does the T-line work best? All time frames. Every single, I'm getting off track here a little bit, but every single signal and pattern is based upon the same criteria that the 8 exponential moving average, no matter in what time frame, is still showing the natural support and resistance level of human nature on that time frame. Which time frame should better 15? Again, that's up to you, Harris. Harris, it's if depends on how many times you want to trade. Now, when I was trading the E-minis off the 1 minute, 3 minute, 10 minute combination, I was trading very actively. Now I don't have time to trade actively. I might only, if I'm trading soybeans today, I might only do 2 or 3 trades. So I'm using the 10 minute as my bellwether and then using the 5 minute for my entry. So it's based upon each person's trading nature, how fast they want to be trading each day. So let me go back to the J-hook pattern. The bobble breakout is a more defined J-hook, and it's even more correct as far as trade probabilities because it's got a major feature, which is the pullback started at a level that everybody else was watching, right smack dab at the 200. Notice how it pulled back, and where did it pull back to? Right here to the T-line. Now, when it came up the second time, what's everybody watching? We're watching the J-hook pattern that's more defined by the resistance level and the breakout level. Everybody else is watching to see what it's doing at the 200. That's their criteria. So we can be buying right here, knowing that this pattern is working, that this wave right here is probably going to be the same magnitude as this wave right here. That's the secondary consideration. The first consideration is we're buying right here because we know there's an extremely high probability this is going to be moving in a positive direction. Same thing on GPRE. Look where it failed. We would have been taking profits right here as it came back down through the open of that candle, because there's very simple logic when using the candlestick charts. If you're in an uptrend and you're in the overbought condition, your stop is right here at the previous day's open, because logic says if they come back down through that level, the bears are in control, close out the position. Now we're watching, and you can see the J-hook pattern setting up. When it started opening positive, we would be buying. Now remember what I said earlier. We're usually buying the candlestick signals when we're in the oversold area. We're buying the patterns on the breakout, which usually means your stochastics are up here in the overbought area. So here's Carvana. There's your J-hook pattern setting up. There's your breakout through a resistance level, kind of a bobble breakout. Now the bobble breakout happened right here at the 50-day moving average. If this opened positive today, what was it telling us? That not only did the bobble breakout support here at the T-line, notice our doji gap up. If it opened positive, what was it telling us? Wave 3 was taking you through this level, probably going to be in a positive trade setup. Same thing on AZEK. Observe the obvious. When they pulled back after breaking through the 50, this is not an uncommon trading movement. But if they break through a resistance level, what do? They usually come back and test it to see if that resistance level is going to act as support. How can we tell this was acting as support? Because there's our bullish harami. Our bullish harami is, in Western terminology, called the inside day, where it opens above the previous day's close and they close it above or below the previous day's open. The Japanese rice traders illustrate that as the selling has stopped. So if we know the selling has stopped, and they did it right here on the 50, if they start trading positive, what do we got going on? Our J-hook pattern. And if it started trading above this level, what's it also telling us? Wave 3 is now in progress. I think I saw before we came on, it was trading lower. So what'd that tell us about our trade? We wouldn't pay attention to it until it came back up through this level. So not only does the charts tell you when it's time to be buying, but it also tells you when to stay out of a trade that's not working. So if we know that the best friend signal, a doji gap up, is one of your strongest bullish signals, and we can see that it failed here at the 200, and then they did a best friend signal up through that level, that's just additional confirmation that we're now in wave 3. So this should be illustrating the fact that every time we put on a trade based upon a signal that we can confirm is producing a pattern, we're just putting ourselves in situations where the probabilities are extremely strong. We're in the right direction at the right time. Is there a way of telling how long the trade is positive? No. All we know right now is that this trade would be positive. How long would it be positive? Until we see a sell signal. That's and then we have other elements to tell us, well, if we see a sell signal, is it doing it at a level that everybody else is watching, or at a major resistance level like a 50-day or 200-day moving average? The benefit we have of using candlestick signals is we can tell exactly what investor sentiment is doing at levels everybody else is watching. Bullish harami toes, green candle body, cover previous red. No, that's an inside day. Let's see if I can go back. That a bullish harami is an inside day. It opens above the previous day's close and closes below the previous day's open. That's different than a bullish engulfing signal, which opens below the previous day's open and closes above the, it opens below the previous day's close and closes above the previous day's open. That candle completely engulfing the previous candle. That is a reversal signal. So there's your bullish engulfing. There's your bullish harami. When using the T-line for a protective stop, are you looking for a close below the T-line or on a long position as a stop, or just a penetration? Depends on where you are. Let's see if I can find one. If it is trading, I can't see one here, but let's say right here, when your stochastic's not in the oversold area or overbought area, that's when you give it a little bit more time. But if you happen to be in an overbought area, and let's say it closed or it's trading back below the T-line, yes, I'd be more apt to start taking profits up there. It all depends on where you are in the trend. See if let me go down to these questions. Bullish harami, green candle body cover, previous red. Did we get that answered for you? Do you include the overnight trade? No. The overnight trades are on any given trade. You might be looking at Apple trading 7 million shares during the day. There might be 30,000 trading at night. That is not the representative of everybody buying and selling. So I only trade off the what the daily charts are telling us. Is there a way of telling how long the trade is positive? Ollie, yes. That's based upon the strength of the signals. We know a kicker signal is usually going to produce a very strong uptrend. the best friend signal. And they're on, we've got some of these strong signals and patterns already built into the Metastock scanning, so you don't have to look for them. All you have to know is which ones are the ones you want to trade. So if I see a best friend signal, I forget which one I was looking at. If I see a best friend signal, I'm buying, because that best friend signal has extremely strong probabilities that not only are we heading up, but we're heading up strong. If I see kicker signals, that usually implies the bulls are stepping in. Didn't really do anything here. If I see the morning star signal, a big down day, a day of indecision, and the third day closes more than halfway up this candle, that's also a very strong signal. So again, I always suggest people learn the 12 major signals. They're the ones that I've already cultivated over the last 30 years of saying, you don't have to learn all 50 or 60 signals. Just learn the 12 major signals, because they're going to occur 99.9% of the time. And learn which ones are the strongest, which we call the top ranked signals and patterns. Let me see if I can find something. So if you're going short, look at your shooting star. Where did it occur? Right smack dab here at the 200. When they gapped it down, what's all the information we can see immediately? Well, they failed at the 200. They gapped it down through the T-line. Where do you think the next likely target was going to be? At the next major moving average. And then what happened down here? They couldn't get back up through the T-line, and they were still selling it off. So if we had shorted BABA in here, we'd still be short because it's never gotten back up above the T-line. QCOM right now, look at the bearish Harami right up here at the 200, and they open it lower the next day. What's the bearish Harami tell us? The buying had stopped. Now look at this. You've got a bearish doji sandwich. What do we expect from a bearish doji sandwich? More downside. Look what they did here. Another gap down kicker type signal to the downside. Where do you think the next likely target's going to be? Down here. Where's your stochastics? They're rolling over and heading down. So you don't have to be a sophisticated analyst. All you have to do is identify what strength there is either in the bulls or the bears. Is there a possibility to get a copy of this video? Fanny, I think there is. Oh, Jeff has already told you. All right. So look at your fry pan bottom. Look at your wedge formation. Now, do we use all these other indicators? Not as our primary indicator. We use it to identify what everybody else is watching. So if we can see a wedge, we can see a fry pan bottom that's supporting right smack dab off the 50. And then there's our hammer gap up starting your uptrend. Now what do we have? A gap up through the resistance level that everybody is watching. That tells us we're probably wave 1, wave 2, wave 3. Once again, the nice thing about the visual aspects of candlesticks is not only does it tell you that it's time to buy, but it will also tell you or show you when it's time to sell, when the sell signals start kicking in. There's your kicker signal breakout of a wedge right here at the 50. How long do we hold this one? Until we see a sell signal and a close back below the T-line. Right there would have been a little bit testy. But what's our doji rule? The price is usually going to move in the direction of how they open it the next day. Had they opened this lower the next day, we'd have closed out the position. The fact that they opened it positive told us the T-line was still acting as a support level. So this is what I call 2+2 analysis. The more elements of bullish sentiment, like a breakout through a level everybody else is watching, a strong signal, a kicker signal, the higher the probability that not only are you going to be in the right direction of a trade, but a strong trade. We just recommended FLNC. There's your best friend signal, a doji gap up. What's your visual analysis? They did it right off the 50, up through this breakout level of a wedge. What'd that tell us? Wave 1, wave 2, now wave 3. So now every single trade we put on or that you analyze and put on going to work? Absolutely not. One of the things that really boggled my mind when I was learning candlesticks was, man, these work so great. I'm going to make a lot of money. So every trade I put on, I expected to have it work successfully. But what I discovered was, no matter how great a trading program is, it's based upon probabilities. And the term probabilities kind of give us the illustration that not every trade's going to work. So when I finally realized that approximately 30% of my trades aren't going to work, I got away from having that being a personal effect. It was more that that trade didn't work. Don't take it personally, close it out, and you move on to something that has probabilities of working. So what are the benefits of identifying candlestick patterns? Again, they create high probability direction identification, and they produce a much stronger magnitude price move than just merely an uptrending stock during an uptrending market. And why is that? Because over 400 years, the Japanese rice traders, observing and using the results of human nature, they have shown us which signals and patterns work the best because of human nature. I think that's about all I got for today. So again, I'll let Jeff explain and maybe not do it today, but the metastock scans already have our formulas built into them to where if a signal sets up, if you're still learning it, it identifies which signal that is. And we've already put in what we consider the high, the top ranked signals and patterns.
All right, Steve, before I let you go, I have one question from YouTube for you.
Okay.
It's from Sunil. And he said, how can we build confidence on the candlesticks and moving averages?
Repeat that again. How can we?
Yeah, sure. Build confidence with candlesticks and moving averages.
Oh, because it's not that we're buying signals at those moving averages. Those signals are being created at the moving averages because of what everybody else's decisions are. So it doesn't take very long, and it didn't take me very long to take a historic chart. I'll see if I can find one. To go back through and see where did the bullish signals work. And that one doesn't have as many on the, trying to find one that's using a lot of the moving averages. Look what's happening on this one. When they pulled back to the 50, what was happening? You started seeing a lot of candles. There's a bullish engulfing. There's a hammer. There's a hammer. There's your stochastics turning up. What was that telling us? That those signals are being formed, not because of the signals being formed, but that's where the buying was that created those signals. So remember, the signals are not something that are created by magic. They're created by what investor sentiment is doing and what the decisions are. And that's the strongest element of candlestick analysis, is these signals are not based upon expectations or prognosis. They are the actual buying and selling decisions that are going on between the bulls and the bears. All right. Any other questions?
No, but people can find you at candlestickforum.com.
Yes, and I don't know if I have given you the link. What we do is we've got a chat room that is open every day. We've got one chat room is for stocks and one is for option trading. But there's a double benefit for these the chat rooms. One, it allows you to see what some of the experienced traders in candlesticks are already finding as good trades. So if somebody says, take a look at XYZ, you might pull up the XYZ chart and see what it's doing that they are recommending it. Number one. And number two, if you don't understand why they're recommending it, that's where your learning process is expedited by just saying what's on XYZ chart that makes it look good. Somebody say, well, there's a strong kicker signal, or it's setting up for a J hook, or it's a fry pan bottom breakout. So you learn a heck of a lot faster what the visuals of candlesticks are telling you.
All right. Thank you, Steve.
Yeah, the T line.
Yeah. Go ahead. Sorry.
The T line.
Go ahead.
T line's the exponential moving average, and it just acts like a natural support and resistance level of human nature. Why? Have no idea. All we know is that anytime you use the T line, there's a very simple statistic that as long as you're above the T line, you're in an uptrend. As soon as you see a candlestick sell signal and a close below the T line, you close out the position. Or the further away you move from the T line and you see a sell signal, the higher the probability it's going to come back and test it.
All right.
All right.
And
Thank you, everybody.
One more comment.
Okay.
Udom says, namaste, Steve. Namaste. So thanks for coming.
All right. Thank you for the invite. Come join us.
Of course. Ricky says, very useful presentation. Thank you. I appreciate all the work you've done with this, all the presentations you've done. Thank you for coming in today, Steve. It's good to see you.
Thank you.
All right. Okay. I've got a chart ready on Amazon that I want to show real quick. And so let me make the presenter real quick. And I just want to kind of show these patterns and how they work. So, and we'll just talk about the work we've done with Steve over the years to kind of perfect the training that he's doing. So I'm going to make myself the presenter. In total, actually, we'll come back to this chart. This is a daily chart of Amazon that I'm going to just show you real quick to kind of give you an idea of how this works. But in total, with Steve, we've developed one of our most popular add-ons called this Candle Profit Systems 2.0. And what we've done is we sat down with him, and it took us a long time to develop, but we developed all of the patterns that he talks about. So you can see all the patterns kind of listed out here. And then there's also some single day patterns. And so we can identify these and we can scan for these. One of the questions we get quite often is like, how do you find these patterns and that kind of stuff? So I have my MetaStock chart open. I'm going to show you this. I'm going to kind of give you an idea of how it works. Keep in mind though, we do have about 3 minutes. So I'm going to do it very, very quickly. So this is the chart of Amazon that we're talking about. Steve had talked about like his bull kicker. This happened right before kind of this run up. On Friday, we had a bit of a doji, which is an indecisive sign, but it looks like we've had a bullish continuation, at least so far today, right? Here, a few days before that, on the 22nd of July, we had a bearish engulfing. Here we had another bull kicker. Here we had a bullish engulfing, a dumpling top, and I think you get the idea. All of these patterns that I showed you are going to be identified in real time, and they're going to show up on your chart. And not only that, there's going to be a little bit of an English definition, or what we call commentary, that's going to show you exactly how those work in MetaStock. And I'm just going to show you that real quick. So to open up our commentary window, we're going to go back to this bullish kicker. So you'll see there's a little bit of a triangle right above that bullish kicker. And you'll see right here, the bullish kicker presents consistent trading opportunities for long positions. This signal is even more powerful when it performs at a major support level. The larger, the darker candle, et cetera, et cetera, et cetera. We won't really spend too much time reading today, just we don't have it. But all of these are identified. All of those patterns are identified. They're shown to you on the screen, and there's a good English definition right here that you can open up and look at to kind of help you understand the pattern, how it's calculated, what you should do with it. Did a very, very good job with it. One other thing, we get this all the time, it's like, how do I scan? And I think scanning is actually one of the things that MetaStock does best. It's certainly a tool I use every day. What I'm going to do is I'll just show you real quick how to run that scan. I've come in here, I've opened up our Power Console, and I'm on the scanning tool. Okay, in the CPS, the candle profit systems that we've created with Steve, there's about 8 different scans. And if I hover over them, you'll see that this one's going to scan for doji at the top, doji best friend, the left-right bullish, the left-right bearish. I'll just leave this doji dynamite selected here. And you can scan this against just about anything that you want to. You'll notice that we have equities that are in Asia, Europe, North America, South America, Canada, London, India, Australia, just about any place you want to scan, you'll be able to scan for. And what I've done here, though, is I've just selected the S&P 500, the NASDAQ 100, and the Dow 30. So I'm going to run just that Doji Dynamite scan for the purposes of time. And it's going to go through and it's going to identify any of the actual signals that have that particular pattern. And so there's only going to be about 529 in that scan. It's rejecting right now about 99% of those scans, those explorations. And what's going to actually happen as soon as this bar gets down to the bottom, any that aren't rejected will be right here in the results tab, and it'll show you what actually has those particular patterns today. So I don't think we'll wait for the results tab. We'll show this in just a minute. But again, you can do scanning for all of the patterns that Steve talks about. You can get commentary for all of the patterns that Steve talks about. And it's been a very, very popular add-on. We sent it over and had it reviewed by Stocks and Commodities magazine, both when we released version 1. Dennis Peterson did that review. Barbara Todd did the second. We're on Candle Profit Systems version 2 now. She also reviewed it, and it was very, very well received by both of those reviewers at Stocks and Commodities. And it's been a very, very popular add-on as well. So again, in total, it's going to include 6 explorations, the expert advisor, the expert commentary. You'll be able to see 36 of those patterns, and it comes with a 40-minute training session as part of it. So it's I'm very, very proud of that particular add-on. You can buy it at the show today. What we're actually going to do, I'm going to mute this computer over here so it's not beeping at you. What we're actually going to do is if you pay for the CPS add-on, you'll get it. We're going to give you a $100 discount on it. It's normally $4.99. That's a one-time cost. It's $3.99 here at the show. We're going to give you a trial of Metastock if you need it, our award-winning Metastock platform, and any technical support that you need. So you can give us a call, 800-882-3040. You can also visit us at metastock.com/saleschat. Now, we have a lot of really, really good speakers today. I have a hedge fund manager kind of speaking to us next. He can tell you a little bit more about that. But all of a lot of the speakers that we have today are actually add-on creators and people that we've written add-ons. So as part of our Traders Summit Action Pack today, you can get the CPS. You can get 3 months of Jeff Tompkins' Trade Trend. Vince Vora's very popular Victory Method. The Silas Peters 3S Code. The Daniel Sinnig's Power Bundle 360. 2 years of Stocks and Commodities from our partner Stocks and Commodities magazine, 3 months of Learn Metastock, and Unleash Your Power Metastock. So it's a huge package with some of our most popular add-ons. Normally it's $5,126. Today you can get it for $2,385. So you can do that at metastock.com/summit deal. You can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. So there you go. Do want to say real quickly thank you to Stocks and Commodities for sponsoring the events today. They're actually providing those 2-year subscriptions. If you're joining us on YouTube because you found the stream or whatever, if you go to metastock.com/traders-summit, what you can do is you can fill out a little registration form to register for today's event. And just for doing that, they're going to give you a free issue of the magazine. So you have to sign up for it. It's an offer that you can go for. But anytime today, go to metastock.com/traders-summit, fill out a little registration form and get a free copy of the magazine. It's great. They've done 17,000 articles. They've had 1.3 million subscribers. They've been publishing since 1982. So it's a great magazine. Great sponsor. We appreciate it. Thank you, Stocks and Commodities, for sponsoring the event today. So, of course, we're Metastock. We're going to talk about us all day. Our next presenter today is Jeff Tompkins. Jeff, we've been working with for right around 5 or 6 years. He had a great start with, I think it was udemy.com, if I'm remembering right off of my head. Had a lot of people that he taught people how to trade. And we'd helped him, he wanted to automate his methodologies. We've been working with him for a number of years. Since I met him, he's just on fire. He's started, I think, his hedge fund. He can tell you a little bit more about that. He's a great presenter. I really like the way he speaks. Let's go ahead and bring him on here. How are you doing today, Jeff?
I am well. Thank you for such a kind introduction.
Well, it's always great to have you. Let me go ahead and make you the presenter, and I'll get out of your way. So,
always great to be here. Yeah, I want to make sure I share the correct screen here. So I'm working on dual monitors. So let's see.
I'll make sure that you have it right too. We can't hear you well. Steve, the Bigalow address was candlestickforum.com. And thank you for all the Ricky, Ollie, and Neil. Thanks for all the Mark, Petit. Thanks for the comments on how much you enjoyed that presentation. So
cool. All right. Can you see me? See my screen?
Not yet.
Let's see.
I just can't. I'm going to pull it away from you. Sometimes if it doesn't work the first time, we have you do it again. So let me show your picture again, and let me send it back to you again.
Okay.
And then we'll cross our fingers too.
All right. So let's see. How about that? You got
Second time is a charm. Yeah, it worked perfectly.
Cool.
So I'm going to go ahead and turn off my camera, my mic. The floor's yours. Go.
All right. Well, thanks, Jeff. Great to be here. It's always a pleasure to, number one, talk about such a great charting platform. Metastock is, as you'll see today in our presentation, has a lot of really powerful tools and great features that I think make our lives as traders and investors so much easier. So it's a pleasure to partner with them. As Jeff said, it's hard to believe it's been, I think, around 5-6 years we've worked with Metastock, and just a great group of people, and really can't say enough positive things about Jeff and his team. So we're going to obviously be focusing on the Metastock platform today, and our indicator that we've developed in partnership with Metastock, and it's a leading indicator, and it's designed to help us predict market direction up to 3 days in advance. And we'll talk a little bit about how that works and how we use it as a leading indicator that will give us some degree of advanced notice of an anticipated move in the market. And it can be applied to any market. It can be applied to futures, forex, equities, ETFs, as well as in any time frame. So before I get into all the fun stuff, I'll read a quick disclaimer. Of course, trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. We won't really be talking a whole lot about options today, but might get just kind of some high-level option stuff if we have time. Of course, investors need a broker to trade securities and options and must meet suitability requirements. We will go over some results today, and just know that any past results that we share in our educational events are not indicative of future performance. Performance figures are based on trade signal algorithms, and due to the time-critical nature of trading, brokerage fees, and the activity of other subscribers, we don't guarantee that subscribers will mirror our performance. But the performance numbers that we show are based on trades users could enter based on trade signals or on my personal trading account results, and I'll share some of those with you today as well. So as Jeff mentioned, the tools and strategies that we're going to cover in our time together today, I use personally in my own personal trading account, as well as in my hedge fund. So while we'll look at some hypotheticals, we're also going to look at some real money results. So by the end of our session, my hope and goal for today is for you to discover how to use predictive indicators to spot turning points in the markets. It's incredibly valuable information that we can use to help predict markets over the next 30 days. And we're going to talk a little bit about volatility and how to use volatility to your advantage in terms of a predictive tool. So whether you're just starting out or you're a seasoned pro, this is really must-have information for today's markets. We've been in unprecedented volatility conditions as of late, and there's really no sign of those subsiding. So I think it's really crucial that we understand volatility and how it impacts us as traders and investors. So let's talk a little bit about that. We're going to be looking in particular at the VIX, or the CBOE volatility index, often called the fear gauge. And we'll also talk kind of why that is and how it's used, to measure fear and greed in the market. But we'll refer to it as the VIX, right? Because that's the ticker symbol for the CBOE volatility index. And what it does is it's a measure of the stock market's expectation of volatility based on S&P 500 index options. So it measures the frequency and magnitude of price movements that a security experiences over a specified period of time. And so basically, the more extreme the price swings in the security, or let's say the market in general, the higher the level of volatility. And so the VIX is a measure of expected future volatility. There's different ways to look at volatility, both historical volatility and implied volatility. And we're going to mainly be focusing on implied volatility. So implied volatility is truly, and one of the few forward-looking indicators of market expectation. And that's important because a lot of the indicators that we use, and not to say that they're not useful or valuable, but we need to realize that they largely use historical price movements to forecast future price movements. So there's a lagging component there. And our goal today is to try to overcome that. So digging a little deeper, the VIX estimates expected volatility by aggregating the weighted prices of S&P 500 index puts and calls over a wide range of strike prices. So if you are familiar with options, that may make a little bit more sense than if you're not. But the key really to understand here is that the prices used to calculate the VIX are midpoints of real-time S&P option bid-ask spread price quotations. And those calculations are actually incredibly reliable over the long term at forecasting future market movement and volatility. So we'll look at a VIX chart here shortly, but what we want to understand in terms of the VIX reading, and there's many different kind of schools of thought and ways to interpret VIX readings, but I think if we look at it kind of in a simple fashion and we use it to gauge whether there's more fear or more greed in the market, and whether the markets are more volatile or less volatile, 20 is a good line in the sand or number to use to determine that. So a VIX greater than 20 generally indicates that we're in volatile market conditions, or there may be a market sell-off or a market crash. So basically, when the VIX is at higher levels, there's more anticipated or implied greed and fear in the market. And due to its inverse correlation, the markets tend to go down when the VIX goes up. And so then a VIX less than 20 would generally indicate we're in more normal market conditions. So if you look back, over the past decade, as we've been in this very incredible long bull run, secular bull market, we've seen lower VIX readings. As we go through these periods of market sell-offs or market crashes, or more recently dipping into a bear market, we'll see the VIX elevate and move higher. Okay, so that's kind of the high-level overview of the CBOE volatility index, or the VIX. And so what does it really tell us? Well, these are some of kind of the important features of why we use the VIX, why we look at it, why we take the readings into consideration when we make trading decisions, and why it's not a lagging indicator, why it's a forward-looking measure of volatility and market movement. So it's a real-time index. You can't trade the VIX itself, but there are options that trade on the VIX. But even if you don't trade the VIX, it's a very useful tool, even if you're trading, Forex or equities or futures. And that's what we're going to focus on. here shortly. So it is a real-time index, and it represents the market's expectations for relative strength of price changes of the S&P 500 index options, or index. So it's derived from prices of the S&P index options, and it provides a 30-day forward projection of volatility. So again, volatility is how fast price changes at its most basic level, and it gives us insight into market sentiment, especially the degree of fear among traders and investors, and that's why it's often referred to as the fear gauge. And it's typically inversely correlated with the S&P 500 index, as I mentioned. So when the S&P goes up, the VIX tends to drop, and when the S&P drops, the VIX tends to go up. So that's an important thing to understand, is that inverse correlation. So how does volatility impact most indicators and trading systems? Well, volatility, although it's often feared and leads to us calling the VIX the fear gauge, we don't really have opportunity in the market without volatility, but it can also create difficulties for us, right? When markets become very volatile, they can also become extremely difficult to trade. And so while it creates opportunity, it also creates challenges. And here's just kind of a simple demonstration of that, of market volatility. So if you look at the left side here on this chart, if we start at point A and end at point B, and the market just goes straight up and doesn't make any zigzags or turns, that would obviously be very easy to trade or invest in. We would basically just put all of our eggs in one basket and let it ride, right? And we'll start at point A and end up at point B, and we'll all be fabulously wealthy. Well, that's not obviously how markets work. So this is kind of more of an accurate picture of what happens when we approach the market and interact with it and make trading decisions. Is we get a move up and a move down and a move up, move back down and move up, move back down and a move up. So if you look at these two side-by-side comparisons, they both started at point A at the same spot, and they both ended at point B at the same spot. But when we look at volatility as it relates to trading and investing, there was a lot of turns in the windy roads, right? A lot of turns that we had to navigate to get to point B. So even though we may start and end up at the same place on, let's just say, a generic ABC stock, it's the volatility in between point A and point B that creates challenges for us. And that's really where the VIX can come in to play as a tool and help us navigate those, in addition to the indicator that we're going to look at on Metastock today. So here's what I want to give you guys today on our session to make it easier for you. We're going to look at how to use the VIX as a forward-looking predictive indicator, how to spot potential market sell-offs and corrections, how to protect your portfolio. So even if you're a buy and hold investor, or you've got a 401k or IRA, and you've got basically a long portfolio, and you want to protect it, right? We're going to look at some tools to help with that. Also, how to buy cheap insurance when it makes the most sense, and that's what the VIX is also a great tool for. When used correctly, it can actually allow us to buy insurance at the right time to protect a long portfolio. We're going to look at how to apply volatility and momentum to any market in any time frame. So everything I'm presenting here is fractal. It's we often get the questions of, well, does this work in this time frame, or does this work with leveraged ETFs? Does this work with futures? Everything that we're going to look at works in a fractal nature, so it can be applied to all of these things. I'm going to show you how we've developed an algorithm that helps us stay out of a lot of bad trades. Now, there's always losing trades, and they're an inevitable part of the trading business. But there are some really effective ways to eliminate getting out of a bad trade to begin with before you're even in it and you get whipsawed. So we're gonna look at that as well. We'll look at a few trade examples, and then stick with me to the end, and I'll show you guys how you can get my top indicator that I use in the markets. And I mentioned that I do trade myself for a living, as well as run a hedge fund. So I'll give you a little bit of background on myself if you haven't attended any of my past educational events. I have 23 years of experience trading the stock, options, and futures markets. I received my professional training at Morgan Stanley as an intern at the trade desk. The founder and chief investment strategist of Altos Trading. We have over 50,000 members in over 100 countries across the globe. As Jeff mentioned, I'm also a hedge fund manager. Won't talk a whole lot about that today, but know that what the strategy and tools and things I'm sharing with you are are ones that we use in our hedge fund Altos Capital. So I think this is a great opportunity for you to kind of an insight into how a hedge fund manager analyzes the market and navigates it and then trades it. And so that's also part of my goal today during our session. And then I'm the founder and creator of the Trade Trend Signal software, which we'll be looking at here again shortly, and that we developed in partnership with Metastock. So let's start out by looking at Trade Trend, what it is, how it works on Metastock, and then we'll apply some of these things that we've talked about so far to the VIX, and we'll look at charts and things together so we can visualize how this all kind of comes together. So let's start by looking at what Trade Trend is, and then we'll look at it on the Metastock charting platform. So what we designed Trade Trend to do, and what we after using and analyzing so many other indicators out there, hundreds and hundreds of them, right? And they all have their advantages and drawbacks. So our goal was to eliminate as many of those drawbacks to other lagging indicators that we can, and really focus in on the components of an indicator or anything that tells us or anticipates a directional market move, to do that in a way that is more forward-looking and not so much lagging. So for that reason, we designed it to give us a buy or sell notification up to 3 candles in advance of an anticipated trend. So if you're trading off a daily chart, it's designed to give us up to 3 days of advance notice of an anticipated trend. Trading off a intraday, let's say 5-minute chart, it's designed to give us up to 15 minutes of advance notice of an anticipated trend. And it does that with a proprietary momentum algorithm, and it reads the market in real time. And not only does it give us the entry and exits, it gives us trailing stops, so that when we get into a successful or profitable trade, the algorithm continues to gauge volatility and momentum to prevent getting in, taking that successful profitable trade and having it reverse on us and wiping out any open profits or even turning those into a loss. That's probably unfortunately happened to all of us. We can sympathize with that, but that's the idea behind including a trailing stop algorithm, and we'll demonstrate that as well. So you're going to find that our algorithm predicts short-term and long-term trends with really astounding accuracy. And as I mentioned, we can use it with stocks, futures, Forex, and Metastock has an incredible scanning tool that allows us to find these opportunities in any time frame really very quickly. With the click of a mouse, we've got a list of opportunities right there in front of us. We'll look at some of those too. So again, works on any time frame. And we have a lot of members. Our company is very focused on options, and a lot of members who trade options and use our tools for option strategies. So again, we won't get real deep into options today, but great tool also to use for directional option strategies. The indicator does not repaint, so that's important. If you're not familiar with what that implies, it's a lot of indicators out there will put a signal on the chart, and then if the signal doesn't pan out, the algorithm removes the signal and only leaves the ones that look good. So it can be very deceptive. So our indicator does not repaint. Once the confirmed signal is on the chart, it's there. We have built-in protection to avoid whipsaws, so we're going to look at that as well. And we really built this to capture trends, right, before they reverse on us, and limit losses, because there, of course, are losing trades, right? But when something doesn't work out, it's really crucial in order to have a positive trade expectancy over time that we limit our losses, right? That's our biggest overhead as traders and investors. And so it's important to limit your overhead costs, and that's where that comes into play. You can use this with other indicators and systems for added confirmation. We have a lot of members who use other indicators or tools, and you're going to see a lot of really great tools like we just saw from Steve on the session today. And we also designed this so that it can be used as a standalone, but it doesn't have to be. It can be used with other indicators as well. And so ultimately, our goal is to remove the guesswork provide accurate entries and exits, and when a trade is entered and is successful, to let it go as long as possible to maximize profit and limit loss. All right, so as we get over into the Metastock platform here momentarily, I want you to discover why volatility is one of the only leading indicators of market direction, how to identify when markets may be vulnerable to a sell-off, and it certainly has for me, and I hope for you, can completely turn your trading around, because emotions are a big part of the trading and investing game, and it's, unless you're trading completely with a robot or an algorithm, they come into play at some point, right? And so it's really important that we have confidence to interact with the markets and not let human emotion get involved as much as possible. And so I think if we can be confident and have good tools to warn us of potential market sell-offs, which is, again, where the fear factor comes in, it makes a really big difference. So we'll also look at how to identify when the market's likely to go up, even after a sell-off or a bear market like we're in now. So this is a very timely topic. How to determine exactly how far the market is likely to go up, and how to get your hands on a tool that will change your trading forever. And I say that with sincerity because it has for me, and I get a lot of satisfaction and reward out of presenting this and teaching it to our membership and seeing that happen for our own members. So so let's get into the fun stuff. Let's let the fun begin, and get over to the platform and take a look at some charts. So we're going to start by looking, and hopefully you guys can see the Metastock charting platform here. If you can't, please let me know in the chat box. But we're going to start by looking at the VIX and then the S&P. And so we're going to kind of look at the broader indices, and then we can do some scans and look at charts and things, or individual equities. So let me see if I can grab a drawing tool here. There we go. All right. So you're going to see a series of diamonds and arrows on the chart. And I'm going to start out kind of zoomed out. We'll zoom in here. So this is a chart of the VIX, the CBOE Volatility Index. Now, I mentioned that 20 is kind of the line in the sand for indicating whether we're in volatile or less volatile market conditions, where the market tends to kind of be in more of a steady uptrend. So you'll see, looking at 2022, right? So to the right of this line, we've predominantly been above 20 on the VIX, right? Even going back into late 2021, we spent a lot more time in that last 4 or 5 months of 2021 below 20, but we've hardly been below 20 on the VIX. So most of us know, I'm sure, that the markets have sold off tremendously this year, and we've dipped into bear market territory on all the major indices. All right, so let's look at something interesting that happened here, and I'm going to explain what these signals mean. And starting in 2022, right? So the diamond that you see here, and this is our trade trend algorithm, is a buy warning. Or if we want to be more kind of general, it's a warning or notification that the algorithm anticipates a move up in the security. So in this case, the VIX. And then you'll notice that some of these diamonds might be followed by arrows, others might not be. In this particular case, there's a green arrow on the candle following the green diamond. So the green diamond was our notification that the algorithm anticipated a move up. The arrow, and I'll show you in the commentary here in a second, but there's going to be a suggested entry price on a buy signal above the high of that candle. So that's kind of where I just drew this horizontal line. And so if there's follow through on that and the security moves up into that entry price and hits the trigger, you're going to see the green arrow, right? So what we really want to focus on here, let me just kind of clear this out so it's not getting so messy, is VIX below 20. Okay, so this is when, again, I'm kind of getting in the DeLorean and going back to late 2021, start of this year. VIX below 20, right? So markets hitting new all-time highs. And I'm going to pull up a side-by-side S&P chart here so we can look at this side-by-side. If we get a buy warning, there it is right there. When the VIX is below 20, markets are moving up. Most people are going to be buying into the market at that point, right? There's irrational exuberance and euphoria happening on the emotional side of things, where the market's going up and people don't want to miss out on the big bull market run. And then all of a sudden you get trapped, right? The market crashes or sells off. And so what we want to look for to warn us of that, if we are long the market, or our 401k or IRA is filled with baskets of mutual funds and ETFs that track long market performance, we actually want to take a contrarian approach and be fearful when the VIX is below 20 and the algorithm gives us buy warnings, right, on the VIX. So that's the green diamond. So when we see that, very reliably, the VIX will spike up. And because remember, it's inversely correlated with the S&P, the S&P will go down, right? So this happened, this one came in right at the beginning of 2022, right there, okay? We've only gotten one other one in late March, below 20, right? But you can see the magnitude of these spikes when we get the buy diamond below the 20 level. All right, so let's look at how this correlates to the S&P. So I'm just going to put these side by side here. Let's see. This one first. Okay. So I'm going to zoom in here. All right. So you'll see that we have the trade trend indicator also plotted on this chart of so this is the SPY, the S&P 500 ETF. All right. So if we look at, let's see. So again, here's the buy. The CBOE volatility index is low. It dipped down around, to around 16.5 towards the end of last year into the start of this year. All right. Around the same time, look what happens on the S&P. Okay, there's a sell warning from the trade trend algorithm. So the entry, if we were shorting the SPY or using a bearish strategy like buying put options, our triggered entry would have been just below the low of this candle. And then you can see that it hit that trigger the next day. So what we look for is on just a broader level, when the market's moving up and we're in this incredible bull market, everyone's making tons of money. This is our warning here before we went down into bear market territory this year on all the major indices. There was the warning. So remember, inverse correlation. So buy on the VIX below 20, spike. And then we get the sell on the SPY, the S&P 500 ETF, and crash, right? So we could spend hours and hours, and we do spend a lot of time on this in our weekly sessions. I'll tell you how you can join those on our time together today. Going into all the different, this is the very basic start of it, but all the different ways to play these. Because also there were opportunities here for bear market rallies, right? So here was a buy towards the end of January. This one actually, remember how I said up to 3 days in advance? So here was the buy towards the end of January. That's not where we would buy into the market. That's just the anticipated warning. We need the follow through to be above the candle. This one came in 3 days later, right? So that's up to 3 days of advance notice. We got 3 days ahead of this bear market rally, right? Up into the 460 level. Then we get another sell, morning. This one gave us 1 day of advance warning, right? We're looking at a daily chart here. There's the follow through. There's the entry. We get another little bear market rally here. Or sorry, bear market rally. Here's one that didn't follow through. So recall that I said we've built into the algorithm a method to help eliminate us getting into bad trades. Now, are we still going to have losing trades? Absolutely. But the reason that we use a buy stop or a sell stop, and I'll show you here in just a second on the commentary how that works. So here was a sell signal. So the entry would have been with a sell stop below the low of this candle, roughly where I've drawn this horizontal line here. But there was no follow through over the course of the next 3 days. So this, and that's why you don't see a red arrow following this. It never hit the trigger entry price. So I said the indicator doesn't repaint, right? It's still kept that sell signal there, but it was not followed through and did not result in a triggered signal. In fact, the market reversed, right? And then we get another buy. This one did trigger with 1 day of notice, right? More recently, we just got a sell. All right. So that's how we use the VIX and the CBOE volatility measure for anticipating market direction or market sell-offs, and as also rebounds, right? So if we look at the VIX here, we see a very clear resistance zone, and we've been this year spiking up into this level frequently. So when we start to see sells off this resistance zone, and they correlate with buys on the S&P, that's our added confirmation that there's a greater likelihood of a turning point in the market, whether it's back to the upside or back to the, a continuation of a sell-off. So sorry, this got a little messy. It kind of looks like a Picasso now, but that's how we use the VIX in combination with the S&P to gauge future, market expectation, whether it's volatile, not volatile, whether we're anticipating a market sell-off or rotation lower, or a rebound, or a bear market rally, where we're just getting these still significant up moves, but basically in the context of a broader trend down in the market. All right, so let me go ahead and clear these out. So that's the VIX and how we use it. And now I want to just kind of show you some of the other tools and trade trend on some other charts, so you can kind of see how it works on the platform. So let me minimize these. Okay, so as Jeff demonstrated earlier, you have your power console, right? So this is kind of the starting point. You've got charting, exploration, system testing. You can run all kinds of back tests, and really powerful engine here that they've built. And so if you want to find opportunities with trade trend, they've made it very, very simple. So you can search for both long and short, or just one or the other. But if we ran just like a scan just for long and short signals, and then we can scan across many different baskets of securities, different asset classes, right? You can even create your own. So there's a really nice, easy way to customize these. And you can see I've done that. I've created my own futures list and Jeff's weekly options list. So if we were to run a scan on just the, let's say Jeff's weekly options list off the daily chart. And by the way, you can run these in different time frames, right? So I just ran this one for today in the daily time frame, right? So it's going to give you a series of, and this is just on equities that have weekly options available. So you're going to get a series of results for both long and short signals, right? And so this makes it very easy to find current signals for trade trend in whatever basket of securities you want to look at. So like we got a nice little list here to start our research process, right? What do we want to trade? What do we want to look at? So just open up. Let's look at IBM. So we can click on the chart, or sorry, click on the instrument name on the scanner, and it's going to pull up your chart, right? And because we ran this today, it's going to show us the current signal, right? So there's currently a long signal on IBM, right? It actually came in on July 29th and then triggered today, August 1st. So it went up and hit the triggered entry. So I'll just kind of highlight some of these and show you, just to reiterate, how it works. And then I'm going to actually show you the, let me do that right now, the commentary. So what I really love about Metastock as well is that that they have an expert commentary. So I just went under view, and you can look at the expert commentary. And what the expert commentary does is it spells out in very nice, clear terms what's happening with the signals on the chart, right? So we had a buy signal on the 29th, which was what, Friday, right? Last week. All right, so you'll see in the commentary, you can go back as far as you want on the chart and look at the commentaries. And they spell everything out for us. So they give us the projection, right? And on July 29th, trade trend anticipated a move up in the security, and it gave us a suggested entry price. So if IBM in this case moves up to this price of 131.04, then if you want to take a trade off the signal, you do as a buy stop limit order right at that price. So it tells you the type of order you use. Also, if something were to happen between when you get the signal, if you're particularly trading on a daily chart and the stock gaps up the next morning, it tells you not to take the trade if the stock moves too far in the anticipated direction and it's no longer viable to get in because the move's already taken place. And then it gives you a stop loss order. So it gives you everything that you need. And then if it triggers, and we'll just fast forward to today now, so now we're looking at August 1st, right? It's going to tell us the suggested long entry trigger price was reached, initiating a long position. And it gives us our stop loss order. So I mentioned that there's a trailing stop algorithm built in here. So each day, once you have a triggered signal, it's going to tell you, or I should say each time interval. So if you're trading intraday, it would do the, let's say off a 10-minute chart, it'll do this every 10 minutes. But in the case of this example on a daily chart, each day it's going to tell us where to move our stop value as the trade is moving in our favor, right? So that's what the commentary does for us. And it's very, very handy. I wish that more platforms had something like this because it eliminates a lot of the questions or, uncertainty around the signal, right? It basically spells it out for us. But you can see we had some really nice signals on IBM. I'm just kind of looking back at some of these, but two big sell warnings before this crash. Nice little brief bear market rally there. This one was another nice buy, but you can see that the accuracy of the warnings at major turning points in the markets, right? Right, so you're going to see a lot of these anticipated market moves at major turning points in the market. These diamonds are printed before the move occurs. They're not printed after the move occurs, right? That would be lagging, right? So it'd be too late. You wouldn't be able to move on the trade. Let's take a look at one more. Get this. So I ran the scan for both shorts and longs. Let's take a look at a short, since that was a long example. The market was moving. We gapped down this morning, but looks like looking at the S&Ps, we reversed, so we're moving back up. So if we look at short signals, let's just pick one out of here. Kinder Morgan. Okay, so here's our short signal. So this one also came in Friday, and we got the trigger today. This is on Kinder Morgan. All right, so if we pulled up the expert commentary, it would say, let's just do that real quick. Right, so it's going to tell us that one also came in Friday. A trade trend projects a move down. Criteria for sell occurred. So it's going to give us the suggested entry price if there's follow through. In this case, there was, using a sell stop limit order. Okay, so it gives us all the pricing there in the commentary. All right, so that's our warning. So our warning would have came in Friday, and then we can basically, spend the weekend or before the market opens Monday, setting up our order if we want to take a trade off that signal, right? And this particular one is already triggered. But again, just to kind of look at some of these, here was a really nice sell there. So this candle here was the warning. So all we needed to do if we wanted to, take a sell off of that particular signal is enter our sell stop order based on the instructions in the commentary, which would have been right down here, and wait for the follow through. If there's no follow through over the course of the next 3 days or 3 candlesticks, be clear about that, because if you're trading intraday, that's important. Then you would cancel the order out. But in this case, you got another really nice one. So again, if you look at a lot of these major trend turning points, you see the predictive candle move, right? This one didn't trigger, even though it got the direction correct. You'll see in the next 3 candles, we didn't, I'm surprised this one didn't quite hit it, probably because the algorithm used volatility to set the range of the entry. Didn't quite come down enough to hit the entry there, but still got that one correct. So again, you can use this on any time frame. Let me clear these out. Right, so on Metastock, you can go down here and you can adjust this to any time frame you want to look at: daily, weekly, monthly, quarterly, 1 minute, 5 minute, 10 minute, 30 minute, hourly. Right, so you can pull these up on basically any time frame you want, and take a look at those signals. So again, it's fractal. They're going to get, it's going to give you the signal regardless of what time frame you're on. Most of the demonstration obviously we're looking at is on daily, but again, can be used on any time frame. So that's kind of the high level overview. We get a lot deeper into the tool and strategy behind it on our weekly sessions. I'll tell you about those here in a minute. But a demonstration of how to use kind of the basics. Metastock is such an incredible advanced platform, and we can get so deep into it. But in terms of charting and scanning and using the expert commentary, kind of the basic things I wanted to run through with you guys today, so you could see how the tool works and how our indicator works on other platforms, and particularly how we use volatility and the VIX to help us time some of these market moves, in addition to the trade trend indicator. All right, so hopefully you guys got something out of that demo and enjoyed looking at some of those charts together. As I mentioned, I use this tool myself in my own trading, and I think that's really important. I think when somebody educates you on a methodology or strategy or a tool, that it's something that they use themselves, because otherwise, where's the trust, right? How do you know that it really is going to work? And while we can't say that everything's going to work for you the way it does for me, I think it's important for me to demonstrate, examples with real money that I've used the tool in, and how it's helped me. So this is not the purpose is not to boast or brag. It's just to show you that I do use the tool myself, and I like to show examples of really bad conditions to demonstrate that it can work, and I'm not just going to cherry pick some easy market condition to show you that. So this is a screenshot of my TD Ameritrade brokerage account. And if you see the date there, and you were, in the markets or paying attention back in early 2020, we all know what happened there, right? That was the COVID crash. So this was at the end of February, right? As the market is crashing, S&P's lost like 35% over the course of a couple weeks. Ugly time, right? So I used the trade trend algo and I wasn't trading big position sizes because of the levels that the VIX were spiking to. I was going very small and being conservative, right? So these are examples of futures contracts that I traded, and you can see I only had 1, 2, 3, 4 contracts per position, so nothing big, but over $13,000 in profit as the market lost. The S&P's lost 35% in the matter of a couple of weeks. Then at the end of March, I started to get a little bit more aggressive because I saw the VIX subsiding, and I used some of the strategy that I demonstrated for you today, and got a little bit more aggressive with my entries and positions and things. And you can see I was in more here, but did over $27,000 just again trading 1, 2, 3 contracts in the futures market in the month of March back during the COVID crash. So between February and March, over $40,000 in real money using the exact methodology and tool that I showed you today in our session. All right, so I think it's important for me to back up what I'm preaching, and that's my purpose here. So again, you can apply trade trend to any market, any time frame, any size account. These are just some of the common questions we get. So want to let you know that yes, you can use it with any asset class, anything that produces a chart. It's going to give you the buy and sell signals before a potential move occurs, and it does it up to 3 candles in advance. So again, if you're intraday trading and trading off an hourly chart, you'll have up to 3 hours of advance notice of a buy or a pending buy or sell entry, right? So you have time to put your order in if you want to take a trade off that signal. And these are just some examples of really bad market conditions where trade trend did a nice job at warning of a sell before the market actually crashed. This is the flash crash of August 2015, August 19th. We got the sell signal from trade trend and then a buy early October as the market rebounds. This is going back to the 08 mortgage crisis. May, we get the sell signal. Market loses over half its value in the second half of the year. But then, of course, rebounded since and got a nice buy signal there towards the end of November from trade trend. This is going back over a couple decades. 2000.com bubble, September rolls around and boom, the market crashes. And we got the sell warning there from trade trend. You can actually go back even this far on your charts and look at these signals, from decades past using the trade trend indicator. And these are just, I won't spend much time on these, but more examples of some of my personal trades in my TD Ameritrade Thinkorswim account using the indicator, as well as the methodologies and the VIX strategy that I've taught you on our session today. So here's my promise to you guys. I want to help you be successful in the markets. That's why I'm here. And I'm going to give you access to my trade trend indicator starting today. So you're going to have an opportunity to begin using trade trend on your own charts today. It's a one-time opportunity to join me to discover how I trade with consistency. And that's my goal, is to help anyone that wants to use trade trend in their own trading to become more consistent. So I reveal every one of my special techniques and indicators that make what I've revealed today possible with absolutely nothing held back. So our team here at Altos is here to help you be successful, not to give you a tool and send you on your way and say good luck. So we're here to help you and not just give you a tool, but work with you on a weekly basis to provide strategy and things that will help you become more successful. And that's our goal. So what we're going to offer today on the Metastock event is 12 months of trade trend on Metastock, which gives you the exact entry and exit signals as I demonstrated on the charting platform. You get your trailing stop levels for any triggered signals. You get live interactive trade sessions with us, and I host those with my partner, Richard, and I'll give you some more details about those here shortly. You get members area access for all of our replays and recorded trading sessions. So this is really where we get deeper into methodologies and strategies, and we go over option strategies and different ways to use the tool. You get full support and personal coaching for me and my team, right? So we give full telephone, email, and member support for you guys, And I'm also going to throw in my top 2 weekly trade trend picks every Monday, and I'll tell you how you can get those. Okay, so ultimately, we've built a really nice package today for you guys and everyone who's in attendance to help cut the learning curve and start trading with more consistency. And we actually want you to start today, right? It's a Monday, so you guys can get started with this today. So let's go through everything that's in the package. Again, 12 months of trade trend signals. We retail that for $1,499 a year. So these are our retail values if we were to go to purchase these from us individually. You get our live trade sessions. So we hold these every Tuesday. I host them again with my partner, Richard. We spend about an hour to an hour and a half together every Tuesday night at 7 p.m. Eastern. So our next one is tomorrow night. And this is where we get deeper into using the tool and strategies built around using the trade trend tool, as well as a lot of our other tools and indicators that we use here at Altos. Those retail for $550. We're throwing those into the package as well. You get to attend those at your leisure every Tuesday night. If you can't attend, we do record those, and you get members area access to watch all of our past recordings as well. And I provide personal coaching for you guys on those sessions. Normally, if you were to buy coaching from me and have me, talk to you about strategy and different methodologies and money management and trading psychology and all these things, that would retail for $1,997. But I'm going to be available on every one of our live sessions, and I'm there to help coach you guys and teach you to achieve what you're attempting to achieve. You also get exclusive invitation-only Facebook group access. So we have over 800 members in our private group. Normally retails for $199. You can learn strategy and interact with other members, not just with us. So I think that's a really valuable tool to incorporate into the package, and it's why we have it there. So if you are not a Facebook user, not a big deal. We have another members area that you'll get access to, but I think it's a great way if you do use Facebook to interact with us and our members. We're also going to teach you some different techniques for adjusting trades that don't work out. So we have a really nice trade adjustment educational package that applies to options and equity strategies. Normally retails for $900. And ultimately, we're here to help you guys learn to trade any asset class in any time frame that you're interested in, right? Most of what we teach can be applied, it's fractal, it can be applied to basically any time frame in any asset class. So the 2 bonuses we're going to add to the package as well. First one I've already mentioned, my top 2 weekly trade trend picks. So you get access to those. Normally those retail for $997 for a year of those picks. Bonus number 2, you get my ebook, How to Create Risk-Free Trades. This is a really valuable tool and resource, I think, to go along with the package, because it teaches some money management strategies to help mitigate risk in our trades, and mitigate losses, and even take a lot of that risk out of the trade once we get into it. So I think that's going to be a great tool to have alongside of the other things that we're including in the package. Normally that retails for $97. So the total value on this package today is over $5,000 retail, but we are taking 80% off, and it breaks down to like $2.37 a day. So $9.97, you get everything you see on the screen here for only a matter of a couple bucks a day. Pretty great value. And again, if you bought these all individually from us, over $5,000 in retail value. We are going to limit this to 25 seats. And the reason we do that is because this is a tool, and it does require setup and help from us and from Metastock to get you guys up and running. And by the way, Metastock provides an incredible white glove treatment to get you guys up and running. But we can't, as much as we'd love to, take on unlimited members, and we're not going to do that to sacrifice customer service. So we limit it to 25. So the first 25 seats get this offer, and then we take it down. All right. So if you want to be one of the 25, you can go to altostrading.com/Metastock and go ahead and claim one of those seats today. And I mentioned we're having our first live session tomorrow. So I would love for all of you that join us today to be on that. If you're not able, we do record them again, but that'll be tomorrow at 7 p.m. Eastern time. It's done over a Zoom meeting, and we'll send out an invite to all of you who join us today. And then we're going to throw in a guarantee here as well. So we do really believe in our product, and we want you to as well. And we want you to be successful with it. So if you're not convinced, and you don't need a reason, if you're just simply not convinced it's the right indicator for you, we offer a full 30-day money-back guarantee on this as well. So again, altostrading.com/metastock. And then if you're one of the 25 people to join, we're throwing in these bonuses, the 2 weekly picks. So I spend every Monday evening finding 2 weekly trade trend picks that I think are the best opportunities for that week. And I send those out to you by email as well. So it's a nice way to kind of get up and running more quickly. And again, normally those retail for $997 for the year. And then you're also going to get my ebook in addition to everything else in the package. I'm a little short on time, so I won't really go through all of our testimonials and what our members have to say, but we have a lot of very happy, positive members that have used our tools and strategies along the way. And very, very happy to see the success that a lot of them have achieved, and am hopeful that we can help you guys do the same thing. All right. Well, I think I timed that pretty well down to the, to the
That's great.
hour.
Yeah.
But if there are any questions, yeah, you can. Oh, but let me put that back up. So if I don't get to questions, you guys can email us, support@altostrading.com. And again, there's the link to join. I'll put the offer slide back up again that has everything that's in the package. And then if there is any time for questions, Jeff, I could take a couple of those.
Let's do rapid fire. You ready?
I'm ready. I'm ready.
All right. It's okay. Hagen says, what if you get a signal and it gaps after that signal? Does that go into? That's a good question.
Very good question. So you'll, without going back into the expert commentary, you may have noticed it gives you an order type. So what we use is what's called a buy stop limit or a sell stop limit. So if you just use a buy stop or a sell stop and there's a gap after a signal, you could get filled after, way above where you want to get filled on a buy or way below where you want to get filled on a sell. But by using a limit order, if you put that exact price in that the algorithm gives you, you can't be filled at any other price except for that price, even if there's a gap. So if a gap's way down, like on a sell signal, and you have a sell stop limit, it won't fill you.
Jerry wants to know if you know what the accuracy is.
Accuracy, and we get that question a lot. I don't know if that means like what the win percentage is or what the profitability is. And I basically can tell, and that's why I show real money results from me using the tool, because you could run a back test on 5,000 different stocks and you're going to get 5,000 different results. So there's no way to say what the accuracy is. It's variable on which stock and time frame and everything that you're using it on. But you can run those in Metastock. You can run a back test on the security that you're looking at trading and the time frame you're looking at trading in, and see, run those back as far as you want and see what the results were. And I think Metastock is really good for that because it gives a lot of different profitability metrics, which of course is more important than win percentage or loss percentage. Hard to interesting question, but hard to answer because there's not one answer for that. So
for sure. All right, thank you, Jeff. I appreciate it. Great job. I really appreciate your spending some time with us this morning.
Well, thanks so much for having me. It's always a pleasure to be here, and I wish you guys a success, and welcome to everybody who's joined, and look forward to being back.
All right. Thank you very much, Jeff.
All right. Take care.
All right. Cool. Very good. Thank you, guys. Sakar, I did promise that I would show you that chart on the Nikkei, and I did load it up in Metastock. So let me go ahead and make myself the presenter here. I'm going to go ahead and show my screen so you should be able to see that. Hello. You should be able to see me too. Here's a picture of the box. Sekar, let me go ahead and show you it on the NSEI as promised. So I did actually go in and load that. Jeff does a really good job of showing both the commentary and how everything works. But on the Nikkei, look at how well this worked here. Back in 6-7, you actually had a setup followed by a trigger and a fairly decent sell-off into an exit right here on the 16th. Again, you then had a setup followed by a trigger the next day. Had a little bit of an exit here. It was working out pretty well on the Nikkei. I think you'd like that in terms of the results. Now, I do know that there's a lot of, I'll show real quickly the S&P for, I can't remember who it was up in the chat earlier. Okay, that it doesn't matter. I did promise to show the S&P real quick currently for somebody I think can go to webinar. And here's what that looks like. So S&P recently, we had kind of a nice little buy signal here. You had your setup, your trigger came in a couple of days later, sold that out. Nice little trade. Here you had a setup, a gap, and then an enter the next day, another gap, and then an exit. And so you can kind of see how that looks. If you want to see any chart examples from any of the products that we talk about today, you can chat online with us at metastock.com/saleschat. They'll be happy to pull charts for you, send them over to you. You can take a look at them. And let me go ahead and type that in over here. I'll type it in the YouTube links in just oh, it's already there. Okay. So there you go. And Neil says, I unfortunately have to leave, but I believe that a YouTube link will be sent so that we can go through the recorded versions. Yes. So I've already got it set up. So I don't even have to do anything. As long as you're registered, which you are, Neil, because you're in the GoToWebinar room, within an hour, you get a link. An hour after we close the session today, you'll automatically get a recording. So have fun going through that recorded link, and we'll leave that up and online and available forever. So there you go. Okay, to reiterate, there's the picture of the package. Jeff does a really good job of showing, but you do get the real-time signals, the setups, the alerts, the exits. You get that detailed commentary breakdown. You get the full market scanning, the system testing, a comprehensive user guide, and there's even a training that's available, a bootcamp training that's about 40 minutes long that comes as part of this. If you don't have Metastock, you can get that as a trial as part of your purchase, but this has been a very, very great package. So for that $9.97 annual offer, you can visit us or you can visit Trade Trend at altostrading.com/Metastock. If you want to talk to somebody, you have some more questions, you want to set it up with a person, 800-882-3040, and you can also go to metastock.com/saleschat. So that's that $9.97, comes with all of the training, the ebook, all the bonuses that Jeff talked about. Give us a call, 800-882-3040. You're welcome, Anil. Thank you for the questions. So it is also, we are including 3 months of Trade Trend as part of this package that includes like all of the add-ons that we're talking today. And I was just looking at the speaker list today, and I'm like, wow, we have such a great list of speakers. But you can get Steve Bigelow's Candle Profit Systems 3.0, one of our most popular add-ons. Trade Trend. You can get the Vora Victory Method, which is something that I use very extensively since we released it a couple years ago. You can get 3S Code, the Daniel Sinnig Power Bundle 360. 2 years of Stocks and Commodities. Thank you to Stocks and Commodities for throwing that in. 3 months of learnmetastock.com and Unleash the Power of Metastock. The price for that is normally $5,126. Here at the show today, at the event, we're going to give you a discounted price of $2,385. So you can take advantage of that by going to metastock.com/summit deal. You can give us a call. If you're here in the US or if you're up in Canada, you can call us at 800-882-3040. No matter where you're at, if you want to join us at metastock.com/saleschat, you can answer any questions or work through an order or whatever you might want to do. And our sales guys are ready to help you get set up, all that kind of good stuff. So again, great package today, $2,385 instead of $5,126. So there's the information. I'll type it in as we get the next speaker going. But let's go ahead and kind of talk a little bit about our sponsor real quick. CMT Association has been sponsoring our event since November-ish last year. They sponsored our big conference that we did back in November, and they've sponsored all of the events since. We really appreciate the work that they've done with us. There's a great the only association that I'm aware of that does kind of the work that they do and the accreditation that they do. If you're trading as a professional and you want to have more assets under management, or you want to just learn some really good classes, you might want to look into getting a CMT association or accreditation, and you can do that at cmtassociation.org. So a big thank you to them. While we are saying big thank yous, Diane, it does require that you use Metastock for the Trade Trend. It's an add-on to Metastock. If you're not familiar with Metastock, it's hugely popular product. It's been rated #1 in its price category. I think it's like 27, 28 years in a row. And we'll give you a free trial of that award-winning platform as part of your Trade Trend package. So there you go. All right. Our next speaker is Vince Vora. Vince has been a great friend of mine for I think it's been a decade for sure. He's a really, really good system designer and a very good teacher. He's going to be showing you a system that he created after the Corona and with all the volatility to kind of take advantage of kind of the more volatility that has been injected into the market ever since then. I think what you're going to find about Vince is I love how he speaks. He's very clear. It's very understandable. And I always seem to learn something when he's here. So let's go ahead and bring you on here, Vince. How are you doing today?
I'm very well, Jeff. Thanks for having me on. How are you?
Yeah, I'm doing great. I'm doing great. I can hear you good. You sound really good.
Excellent. I'm going to try to share my screen and my webcam here. Give me 1 second. See if I can get these both going.
Screen to go.
Okay.
And I can see you as well.
How are you? Good to see you again.
Good. I always love it when you have all the clocks in the background. We just have this boring gray background here. So anyway, before I go on a soapbox about how our background is, I'll get out of your way. It's all your turn.
Okay. Well, again, thanks for having me on. I really appreciate it. Welcome, everybody. Good morning. I'm happy to be with you here again and happy to share my victory method with you. Before we start, I do want to say, obviously, trading does carry risk, so please don't trade with real money until you are completely comfortable with the system that you are using. Now, in today's presentation, what I want to do is make the most of the time we have together and show you exactly what the victory indicator can do for you. I'm going to explain in a moment what you're seeing on your screen, and more importantly, how you can use it to your advantage. Like Jeff said, I created this right around the time that the pandemic started. I started working on it before that, then we went into lockdown. And shortly thereafter, we released it. The whole intent was to find a system that would be very responsive to changes in the market. I expected volatility ahead. I certainly wasn't expecting, a COVID lockdown and all the swings in the market that we did get. But it was timely and it actually worked out quite well. But what victory really does is help you identify the current trend and trade with momentum. Whenever you're trading with trend and momentum on your side, half the battle's already won right there. And that's what I want to make sure that you're doing, is trading on the right side of the market, not the wrong side, right? This game is all about putting the odds in your favor. There is no system that is 100%. We know that, and nor is victory. It's not 100%. Losses are part of this game. You should look at them as a cost of doing business. But what you want to do is make sure that your losses are small. In the end, what you want are more winners than losers, but have your winners be greater than your losers. With that kind of math, it's really tough to lose money. So that's what victory will do for you. So let's get into it. I'm going to show you as many charts as I can fit into the next 50 minutes or so here. Please, by all means, type any questions you want in the chat or symbols that you want to see. Okay, I don't want to cherry pick charts. Please type in whatever symbol you want to look at, and I'll show you how victory would have done on that symbol. So let's get started with what you're seeing on your screen. So you're seeing a lot of arrows, both red and green, a lot of circles, red and green, and some yellow bars here and some exit symbols. So obviously the arrows are new trade ideas, meaning we get a green symbol like this, it's highlighting a new trade entry for us to the long side. Right now, if we get a trade a symbol like this, once we're in that trade, all the bars will be painted green. Okay, as we're normally, as the market fluctuates, you'll see both, right, red and green along the way. But the intent here is to help you remain disciplined and not get scared out of that trade. I'm sure you've experienced at some point in your trading career, you get into a trade and it seems to be going well and all is fine, and suddenly you get a couple of red candles and you start second guessing yourself and worried about giving back profits, and a lot of times we end up selling only to see the trade continue going, in the direction we thought it was going to go. So we're going to stay or keep all the candles green until we get an exit. Now, when it comes to exits, what I want you to remember is that it's the change in color that matters more than seeing an exit flag. The system will highlight, a trade in one direction and then immediately go into a trade in the opposite direction, okay? As opposed to seeing an exit and then a trade set up in the opposite direction, okay? Also, sometimes it will go into a yellow status, which means you do not want to be in that market at that time, okay? But the intent here is not to take every single symbol, okay? In other words, even though this is highlighting a short trade, we will not be trading short here, and I'll explain why in a moment. Before I do that, I want to explain the circles. The circles are basically the exact same formula that's behind the arrows here. So if it highlights a long trade here, what the green circle is telling you is that the exact same formula came together again, and it's highlighting another entry for you. The reason why it's marked as a circle is because we're already in that trade, okay? So officially, it's labeled as a long re-entry, okay? Meaning, if you're already long, you can add to your position. If you missed the original entry, now you can use the re-entry as an opportunity to get in and take advantage of the rest of that trade, okay? So the idea is to get in here, maybe add to your position here, add to your position here, add to your position here, add again here, and eventually, as soon as you see the change in color, you exit completely. You don't exit one portion of that, you exit it completely. What you see here, this blue line, that is a 20-period simple moving average. It's not exponential, not weighted. It is simple. Now, you can feel free to use whatever you want, but over my 30-plus years in the market, I've used one moving average consistently, and that is the 20 simple period moving average. Reason being, I believe it is the most widely used moving average out there by both professionals and retail traders like me and you. Again, I didn't go into a whole history of my background, but I did start off doing this professionally. I did it for many, many years professionally, managed money, etc., and then went out on my own. So I've got both backgrounds, and I can tell you from experience, the 20 is the most widely used moving average out there, and that's why we use it. And the other reason why we use it is to judge momentum, okay? So judging a trend is fairly easy. If you look at the pivots, right, these turning points on your chart, and you can say you have higher highs and higher lows, you're in a trend. But how strong is that trend? That's the question you really want to ask yourself. And that's easily judged with a 20-period moving average. All you need to do is look at the slope of that 20, okay? The more dramatic the slope on that 20 in the direction of the trade, the more momentum you have in that trade in your favor. So what you really want to focus on here is not every single entry. What you want to focus on are the ones that happen along a sloping 20-period moving average. So if you're taking a long trade, right, you want that 20 to be sloping upward. If you're taking a short trade, you want that 20 to be sloping downward. So those are the only setups I want you to focus on. There are times where things kind of go flat, right? Like in here, and the 20-period moving average is flat, all right? You do not want to take these symbols because that's where you're going to lose money as a trader. You're going to get chopped around, right? You're going to get in, stopped out, get in, stopped out, get in, stopped out. And that's what you want to avoid. Now, I will, time permitting, explain a little bit about how you want to trade in these areas, okay? It's basically looking for a breakout out of that channel, but otherwise, you want to just avoid them. Now, here's an easy way to avoid these with victory, right? The re-entry signals, the circles, those usually appear after the trend is well established and after we're already in the trade, right? So you'll notice that during the flat periods, it's rare to see a circle. You see one here, but only one, okay? You don't see any along the way. So when you're scanning for setups, and I'll show you how to scan for these near the end of the presentation, there is a scanner that comes with this indicator that will save you a ton of time. You could just be scanning for the reentry signals, not the original ones, okay? And that's an easy way to avoid those areas and only focus on areas where you're sloping, okay? So let's get back to it here. Again, I see one person put in a symbol here on GoToWebinar. If there's others you want to see, by all means, I'll start flipping through a few. And I do want to say this works on any market, any time frame, anywhere in the world. So traded this around the world, tested it in on the Nikkei over in India, the Nifty, Australia, UK, all over US and Canada. It's simple technical analysis, okay? So let's start looking at charts. So again, if we focus on the trending markets, that's all we want to do, and we identify those by looking for slope. You can see that we would have done very well here. There are times like this, for example, where when we get this signal, we look at the 20 and we say, that looks flat to me. So I am going to skip that setup, okay? Now, if you're more experienced as a trader, you can look at things like this prior high here was the prior all-time high for this market, right? So we look to our left and there's nothing above here. So obviously, if you want to take that breakout, you can, but what I do, being a more conservative trader, is I wait for the next setup, right? And that happens to be the re-entry. Now, at that point, is there slope on the 20? I say yes, there's great slope. So the other thing I look at when I see a setup is how far are we from that 20-period moving average? Because sometimes the bar, when we get the re-entry, can be far away. So if we're far away, I tend to skip those. Why? Because when price moves away from the 20, it will eventually snap back. It always does, right? So you're more at risk if you take your entry up here and it just snapping back to the 20 right after your entry. So I like the ones that appear closer to the 20. They're a little more conservative. The other thing I do is look for areas of support and resistance. So I'll ask myself at this point, is there a lot of overhead resistance? And the answer here was no. This was the high at the time, the prior all-time high. So this has a good opportunity to move to new all-time highs. Now, did it happen right away? You know, we got in on this bar, it moved up the next day and then came back, or actually the next week. This is the weekly, and then came back and you know, we exited that trade at a loss. But the key here is a small loss, okay? If you follow the rules, and along with this indicator, we are going to give you training, okay? There are training videos that go with this where I explain in detail exactly how to use it. It's just an extension of what I'm teaching you here. Now, we take a small loss here. Then we get a new entry here. Again, we ask ourselves the same set of questions. Is there slope? Yes, there is, and it's great slope. What do I consider great slope? About a 45-degree angle, right? That's what I would consider significant here, okay? You can take slope that's not quite as dramatic, right? But you want to definitely take 45 degrees and anything higher than 45 degrees. The bigger the degree of slope, the better. And with the scanner that we're giving you, it'll tell you what the slope is. We spend a lot of time on that, so that's going to be a huge help for you. Now we get in here, and this time the trade works out well, right? We ask ourselves the same question. Is there a lot of resistance? No. Is there slope? Yes. So great. Off we go. We're in beautiful. Pulls back. We get another entry. We ask ourselves the same questions, right? Is there slope? Yes. Is there a lot of resistance overhead? No. We add to it. Same thing here. We add to it, add to it. And then we get out here, the full position. So we had one minor loss, but we had 1, 2, 3, 4, 5. Well, this one would be a minor loss as well, right? So 4 and 2 in that sequence, but by far, we had a real good run, made a lot of money there. It turns around, calls a short here. Do we want to take this short? No. Why? We don't have an established downtrend, right? We still have higher lows and higher highs. Really, if you look at this, you can call this a minor lower high. But look at the 20-period moving average. It is completely flat, right? So we skip that. But then it pulls back here, it sets up again. Do we want to take this? Well, we ask ourselves the same type of questions. Is there a slope in the direction of the trade? Yes, there is. What's the degree of slope? It's pretty dramatic. It's good enough. Is there a lot of support below, right? Well, and we're going to go through in the training several ways to judge whether there is a lot of support or resistance. But whenever you get a strong run in one direction, it doesn't tend to leave a lot of support below. So the answer was no here. So we take the short and off we go. And then we exit here when it changes in color. So another nice trade. Do we take this long? No. Why? The 20 is not sloping upward. Okay. It really is this simple. So now I'm going to run through several signals, different markets, different time frames, and show you. But that really is it. Okay. It's very simple. It's very responsive to changes in the markets. It will get you out very quickly when things don't go well. Okay. This was the pandemic. Okay. So we had a nice strong trend going. It got you out right at the beginning. And this is the weekly chart. I should show you the daily as well. Okay. And we can go back here to the lows or here. Here's the start of that pandemic when we first got locked down, right? And everything went for a drop. So we were in a real nice bull market and then it flipped, right? So there you go. So it gets you out very quickly. So tends to keep your losses very small. Again, would we have taken this short right from the beginning of the downtrend? The answer is no. Why? No slope on the 20. When it had its first pullback and set up again, was there slope? Yes, dramatic slope. And there we go. Caught the rest of the move, right? When it turned around, did we catch this one, right? Did we take any of these signals in here? No, we didn't. Why? The 20 wasn't sloping in the right direction, right? Or even if we took this one here, we would have got out a very small loss. Did we take this one? No. Again, we didn't have the 20 in our favor, but we did here. We did here. We did here, here, right? Again here, right? Again here, and here. And here. So, you catch most of the run. That's what you will find with this, okay? Now, this is the NASDAQ 100. We can look at the SPY, right? Oops, that's not the SPY. Let me try it again. There it is. The S&P 500, right? Now, this is the daily. This, again, is how difficult the market has been lately. It's just been in a complete chop zone here ever since May. Really, May, June, July. It's just gone sideways. Actually, sorry, this is Sentinel. My mistake. I thought I had SPY here. There it goes. There's SPY. Okay, but before I get to that, let me just address this. If you were trading in here, if you were taking these signals, right, going long, getting stopped out, going short, getting stopped out, going long, back and forth, you would give up a lot of profits from other trades, wouldn't you? And that's what we want to avoid. So what you want to do in a situation like this is draw a line across the highs, right? Draw a line across the lows. Okay. Now, if you're more aggressive, when price breaks out of there, you can consider taking a trade as a breakout trade, right? And the longer that consolidation happens, the bigger the move should be when you come out of it, right? Or you can just use that as a guide. And once you break out of there and the 20 starts to slope one way or the other, then you start looking for new setups, okay? Let's go back to the SPYs here. and show you it's the exact same thing, right? We don't want to take the ones with no slope. We want to take the ones with slope in our favor. That's what we want. Okay. So although it has been choppy lately, there are trades happening in both directions that we can catch. Okay. Now I've got a bunch of signals here that some of the attendees want to look at, starting with gold for Oli. So again, I mentioned it works on equities, options, futures, Forex, crypto, you name it, any market, any time frame. Here's the gold chart. Now, gold futures has been very choppy, very difficult to trade. Look at this mess. You wouldn't have wanted to touch this, right? When it's trending, though, there's some real nice trades, right? So now we can look at different time frames, right? Here's the weekly. So had some real nice trades on the weekly here. You can look at it on the monthly. You can look at it on 1 minute, whatever you want. And I'll show you a few. So the longer term signals, on the monthly, right now, we've gone completely flat here. But look at this formation, cup and handle, right? We've been waiting for gold to tip these highs and go on a massive run based on this cup and handle formation, right? If any of you are more experienced with technical analysis, you'll know what that is, or eventually you'll learn. But the beautiful part of victory is that you don't have to try to spot these. Okay, just follow the signals and that one line, the 20-period simple moving average, and that slope. Okay, because it not only helps you take advantage of massive moves like this when it's sloping and you get an entry, whether it's an initial or a re-entry. But if things turn on you quickly, it reacts very quickly. So, this one, we were flat from here, okay? We could have looked at this as a channel, drawn those highs and those lows, right? And waited for a break here and jumped in if we're more aggressive. Or if you're more like me, you would have waited for the next re-entry. Well, it was here. Did it make us money? No, this one was a loss. But was it a big loss? No, it was not. It was a small loss. Okay. Now, there's always the chance of a gap. Okay. I don't want to mislead you. You could get in here and see a huge gap against you. But gaps are rare. And we can mitigate that risk by trading options or following a strict set of money management rules, which I go into in the training that's added to this indicator. Okay, so if you follow those rules and you follow the signals that I'm telling you to follow here, not only will you not take a big loss, okay, but you should have what I said at the beginning that you should be looking for as a trader. You should have more winners than losers, and your winners should be greater than your losers. Okay, let's look at a few others here. Daniel wanted to look at Apple and Amazon, two of the more popular stocks out there, and since they split now, they're a lot more affordable for everyone. Now, this is the monthly time frame. We talk a lot about trading here, but there's a lot of people out there that want to invest, okay, or do both, right? Trade on a shorter time frame for a smaller account, but have their retirement funds in a different account with longer term trades. Well, for the longest time, Apple was nothing, right? It was just completely flat. It was in single digits. No one really cared about Apple. And then, it started to get more popular as their products really started to go viral. And again, you can see that if you just focus on the areas with slope on that 20, okay, yes, you will miss some trades, okay, but you will catch plenty of huge moves. Let's go down to the weekly. And the other thing about the higher time frame charts, like the monthly or the weekly, you can use them as guides, right? So, let's say you got this signal and it was somewhere in here, where you were actually on the daily time frame and you saw a signal long, right? If you come to the weekly and you see that we're not only in a long trade, but you got that slope on that 20, then you know that's going to be a stronger trade. And if you can also look at the monthly and it's in one of those areas, then even better, right? When you have the daily, weekly, monthly time frames aligned, you've got a really strong setup there. Again, if you focus on the ones with slope, here, along here, it's really hard to go wrong. Honestly, it's really hard to go wrong. And again, I don't want to mislead you. You will have losses. It's part of the business. But the key is to keep them small. And if you follow the rules, you'll find it. And every once in a while, you'll come across a chart like Amazon here. Now, this is the weekly. I'll go to daily in a second, where for the longest time, it was trending really nicely. We were getting some monster trades. Then it went flat, right? Went on a run, and then it went completely flat for like a year. Like it was horrible during this time, right? And you just ignore it. You just have to be patient and ignore those trades. Again, one of the best ways to filter those out is to look at re-entries and not the original signals, or just look at the slope on the 20. That's all you have to do. Because when you switch to the daily, within that mess, there will be some nice trades. Okay? There will be some nice trades. But you got to focus on the ones with slope. And that's it. And if you're not finding them, or the chart looks messy like this, you just ignore it and find something else to trade. Do not get married to a stock. I'm sure you've heard that. Don't worry about what everyone else is saying about it in the media, about how great it's going to be in the future and so on. A lot of things can change with this market overnight. Let price tell you what's happening. Let me just spend a quick few seconds on price and why it matters so much. Okay? What you're seeing on your chart is all the actual orders that are actually being placed out there. This is money being put to work here by millions and millions of people around the world. Okay? So what you're seeing in here are the actual orders, not what people are thinking is going to happen with Amazon, not whether people like Amazon or hate Amazon, or not what some analyst is saying is going to happen to Amazon. This is what's actually happening now. This is real money put to work, and that's all that matters at the end of the day. And as a trader, what you're trying to figure out is who has the advantage. Is it bears or is it bulls, right? Is it buyers or sellers? Because at the end of the day, it's supply and demand. That's what this comes down to. So if buyers are dominating, you're going to see the price move up. If sellers are dominating, you're going to see the price move down. Okay? And that's your job, is to figure out who's in control. Our buyers are in control? Because if buyers are in control, like they are right now here on Amazon, they're going to push the price up. If sellers are in control, they're going to push the price down. How do you know? Well, if you want to study price, price action can tell you that. Absolutely. Victory does that for you. It highlights when sellers are in control and whether or not there's a lot of momentum in your favor. Same with buyers, and whether there's momentum using that 20. It's that simple. Ricky wanted to look at LXH. Let's look at what that is here. Is that, Ricky, is that the Lincoln Ventures? I'm going to assume here. Not quite sure. We get people from around the world on these webinars, so I'm not quite sure where that was from. Oh, sorry, he said LHX. My mistake. Okay, thank you for pointing that out. He did put that in the chat afterwards. Here, L3 Harris Technologies. Okay, excellent. And please, if there's a specific time frame you want to look at, let me know. I want to go back and show you some of the 1 minute, 5 minute for those of you who like to day trade. So, when I bring up a chart like this is the daily time frame. When all I do is take a quick look at it. Now, whenever I have a daily time frame, I like to have 1 year of data on. So you'll see back here, it's August of 2021, and now we're at August of 2022. I like to have 1 year of data. When I look at it and I see a chart this choppy, I immediately skip it, okay? Regardless of what they do and, you know, how great of a company they might turn out to be. If I see this kind of chop fest, I'm out of there. Why? Because I'm asking for trouble. To me, choppiness is risk. Okay. Yes. Can you take winning trades if you follow those rules in here? There was one right here, a reentry close to the 20 with slope. When you look back, you don't see a lot of support, and you know, it made a move in that direction. But really, overall, you're struggling to identify where you should be taking a trade. And this is supposed to be a simple system to follow, not complicated. So if you're having a difficult time trying to find that area, you should probably skip the chart completely. He also wanted to look at CELH. Let's see if that one is a little cleaner. There we go. Celsius Holdings. All right, there we go. So a little more trendy here. And there was a real nice long entry here on July 20th that has really worked out well. That met the rules. We can look at different time frames here. Here's the weekly, and looking back, there are some great ones here, and the most recent one here. So if you were looking at the weekly, June 24th would have been the start there. So looking really good. There's a question from JG here. How long vertical do you consider the 20 to be an uptrend? Does it have to reach a new 20-day high or something? There are times when it gets a little weary. No, so like I said, it's the degree of slope that I look for here. And, you know, when this is more or less, I eyeball it, and it's a 45-degree angle. Now, when I go to the scanner and I show you the results, what Jeff and his team have done is created a slope calculation that identifies it by a number, okay? So when you're looking at the trade candidates that the scanner brings up, you want to look for a number greater than 5 for long entries and greater than -5 for short entries. And I'll show you that in a second, okay? But if you're looking at it visually on the chart, you just want to identify more or less a 45-degree angle. That's what I consider significant, okay? So you can, again, you can take smaller slopes, as long as there is some kind of slope, right? That's all you want, some kind of slope in your favor, and minimal overhead resistance. Let's see what else we have here. And Affair was saying, if you zoom in and out of a chart, it changes the slope angle. Yeah, that's why you want a set time frame, right? That's why I said on the daily, what I want is a 1 year time frame, 1 year of price action, right? If I'm looking at weekly, I want 5 years, okay? If you're looking at, say, a 1 minute, right? You want a day worth. You're looking at 5 minutes, you want 3 days, that sort of thing. You know, you want to keep that consistent. You don't want to be doing this to your chart all the time, okay? So you know, reset it, refresh it, let it go back to its proper state, and just have the proper amount of price action on your chart. Let's see. Bob wanted to look at FedEx, FDX. So let's look at FedEx. And again, you know, you look at FedEx, and this is a weekly. You know, it's hard to get a kind of a choppy chart on a weekly, right? But you do sometimes. And so you just want to ignore those signals. Now, there, like I said, will you take some losses? You know, you look at this one, and there was slope, right? And you look below, and there wasn't a whole lot of support. So, you know, it was near the 20. Would I have taken this one? Yes, I would have. Did it work out? No, it would have been a loss, but it would have been a small loss. And that's the point here. Let me show you the daily. One winner makes up for many, many losers. And if you go back here, let me scroll here. You know, you look at these ones, one of these trades would have more than made up for many of those little losses, okay? And that's the point. And again, most chop happens with a flat 20, all right? Most of it happens with a flat 20. So if you took this one, it worked out for a while, then it came back and stopped you out. Now, if you held it right to the end, you'd probably taken a small loss there. Okay, break even at best, probably a small loss. When you go on a run, one of the other things we teach you in the training class is to scale out of your position, is to take some profits along the way. So if you're trading this with options, for example, and you're in this run, I mean, this is a major move, right? If that's happening, you're going from like 280 down to 220 here. This is a monster move. You can scale out along the way, right? If you have 10 contracts, sell 3 at a certain point, sell another 3, hold the final 3 or 4 for the rest of the move. That's right. There's many ways you can trade it. We'll go through that in the training. But again, if you look at this chart from start to finish, and this is April 2021 until April 2022 here, 1 year of data, and only focused on the ones with slope compared to the ones with chop. Ask yourself, would I have made money there? Could I have made money on these trades? The answer is yes. Okay, and I'm not just saying that because I created it. This is simple technical analysis. I've been in this game over 30 years, almost 35 now, and I haven't stopped learning yet. I continue to learn. I'm a student of technical analysis still. I consider myself a student of technical analysis. I never stop looking at charts. And there's a few things that I've noticed over the years that are very, very consistent. And there are only, believe it or not, only 2 indicators behind this formula. That's all there is. And when they align, it tends to go well. And then we just use the 20 as support, okay? Let's continue on. JG is also asking, how close to the 20 SMA for reentry do you look for? Within 1-3% or something like that. I don't really look for a percentage. I eyeball it, okay? And really, it has a lot more to do with how much overhead resistance there is or support below. So for example, right here, do I consider this close to the 20? I do. Now, sometimes you'll see a bar that actually, trades below the 20 but closes just above it. Those are my favorites when it's really close. But, this is close because what do I see overhead? Well, I see a gap that needs to be filled. And when I look to my left, I don't see a whole lot of activity until we get up here. So I figured there might be room to get all the way back up here. So I would take that risk. Okay. And again, part of the comfort level here is that I know that if I get in here and we turn around and it goes against me, it's going to get me out very, very quickly. Okay, so I'm not expecting a big loss anyway, that way. But again, you look at some of these signals with slope and they worked out really, really well. Okay, there's one more here. And Jeff, let me know if there's any on YouTube. I don't know if you're live on YouTube this morning. Let's see. Can you look at SBRA? That's for Leo. SBRA, sure. And then I want to definitely show you some in the smaller time frames. Okay. SBRA. So on the daily time frame, there are some decent runs here, followed by a lot of chop. There aren't many great setups because this one was a flat 20, so we missed that, and that's going to happen, and that's okay. There's a few with slope here, like this one, this one, this one, and now over here. Sorry, I'm getting used to the scroll feature here. Here, back here, and more recently. If we look at the higher time frame, the higher the time frame, the smoother the chart tends to be. You can see it a little more clearly. Okay. And then, of course, one thing I do want to say is the smoother charts, the charts that trend strongly are the ones with the most volume, right? The most popular stocks. So if you look at something like a Costco, for example, right? A very popular stock. Now, you don't have to look for stocks in this price range. There are some very strongly traded charts in the $50, $80 range, $20 range, right? But the higher the time frame, the smoother they are, the easier these are to spot. Okay, again, the scanner will catch them for you, but if you're looking visually, very easy. Now look at this. We go weekly to monthly. Okay, look at the monthly. If you were investing in this over the years, there'd be nothing to worry about. You would just hold this, and you're talking about going from the $100 area, or actually well below it. What was the price here? 49. So about $50 down here to where we are today at 550. Just an incredible run. Now we're going to go all the way from monthly. We're going to go to the other extreme, 1 minute time frame. Okay. Are there setups you're going to catch? It works the exact same way. It really doesn't matter because it's technical analysis. That's all it is. The same two indicators that aligned on the monthly are aligning on the 1 minute. What are those? What is that combination of two indicators supposed to do for you or tell you in this case? It's supposed to tell you that the market is trending. That's what it's supposed to tell you. It's trending. And which direction? It's clearly telling you longer, right? And the only other question you want to ask yourself is there slope? Yes, there is. Then, we want to select the best of the best. So that's why we look at, is it close to the 20 or is it far? Is there a lot of resistance ahead or not, right? Because on any given night, when you run your scan, you're going to come up with several trade candidates. The idea here is not to take all of those, right? If you come up with 7 or 8 trade setups and you go in and buy them all, and the very next day the market reverses, what are you doing? You're asking for trouble, right? You want to select the 1 or 2 best trade candidates for whatever time frame you're trading. Okay, let's look at the 5 minute. See if there's any signals there. Right? Look at that. Boom, boom. Why? Because of volume. Right? Costco is heavily traded, so there's going to be volume on a 1 minute or a 5 minute chart. Another one I think is Lulu that gets traded quite heavily. Right? Lululemon. Right? There you go. You find something with little volume, you're not going to see this. You're going to see big gaps. You're going to see a messy chart on the 1 minute, 5 minute. But if you want to day trade, you got to day trade with stocks that move. Okay. So now, limited time left here. I do want to answer all your questions, but before that, I want to tell you a couple of the other tools that come with this. If you go to your top left on your Metastock platform, click on View, and click on Expert Commentary, this box will pop up. Now you can dock it anywhere here, but the point of this is to kind of hold your hand and guide you along the way. If you notice here, there's a red triangle. It always defaults to the far right. Let me go back to a daily time frame here. Okay. And so now you can move that by clicking above any candle or using the arrows here in the top left of the commentary box. Okay. And the point of this is to not only highlight when we have a trade. So right here, I put it right above this green arrow, and it's telling you the victory system is currently signaling a long opportunity, right? But the main thing here, and then it goes on to talk about what kind of option you want to buy if you're going to do this with options. But the key is throughout the trade, what it does throughout the trade. So if we move forward one, you're going to notice that here it's telling you that you should consider closing the position if there is a trade below this level. So what it's doing is giving you a trailing stop, okay? So if you can't watch this throughout the day, you have a job to go to, you have family to take care of, you can't stare at the screen all day. You can at least put your stop loss at this level or just below it. If we move forward another candle, it updates the level, right? See, now it's at 308.09. We continue to move 308.85, right? It trails it 309.22. It just trails it for you along the way. So it kind of holds your hand along the way. And the green candles help you remain disciplined and not get scared out of a trade. Once you get to that exit here, if I can move it forward there one more, right? You'll notice that suddenly it puts red text in there, not green. The text is consistent with the color of the candles, right? And so it'll tell you what's going on next. All right, so great feature. And lastly, you go to your top left of your Metastock platform and click the P here, the Power Console. Go to the third tab on the left, the Explorer tab. This is where you're going to scan for trades. Now, in the top portion here, this top box is where all the formulas are. You've got to scroll to the bottom. They're in alphabetical order. All the Vora systems are here. You want to look for Vora Victory Filtered or Vora Victory Reentry Filtered, okay? The reason why there's one that is just Vora Victory, right? Or a Vora Victory Reentry and not filtered means it'll give you them all, regardless of slope, okay? The filtered ones will filter for only significant slope, okay? So it saves you a lot of time. So I'm going to skip the regular symbols here. I'm only going to look at the reentry filters for now, and I'm only going to scan for the NASDAQ 100, even though under here you can select any market. I mean, there are over 300,000 different symbols in the database from all over the world. You want to focus on, you want to scan the ones you want to trade. I'm going to focus on the NASDAQ 100. You go to the far right here and you pick your time frame. So do you want to scan on a 1 minute, a 5 minute, a daily, weekly, monthly, whatever you're trading? I'm going to leave it as daily. This box will confirm what it is you're scanning for, so you know you did it correctly. I'm looking at Vora Victory Reentry Filtered, and then I'm going to start exploration. And you're going to notice up here, it's going to tell you how many instruments you selected, and then how quickly it's going through that scan. So we selected 101, and you can see already 45 have been reviewed, and in a few seconds, it'll all be done. Now, I'm running several things on my laptop here, so when I'm not in a live session, it goes even quicker, but you can see how fast, just a few seconds. Now, once you get this list, you can sort them by category. Now, you'll notice that on the long side, there's a number 1 here. On the short, there's a 0. That's because all of these 3 trade candidates are long trade candidates. If there was a 1 on the short side and a 0 here, it'd be a short trade candidate. So you can come up here and sort that way. Here's the important column, the slope. Remember, it's only looking for anything over 5. Okay, so the higher the number, the better. These are 11, 12, 12. So these are good slopes, right? But again, you can sort by it. So I can sort from highest to smallest, which is what I normally do. Or, if you have a small account and you want to sort by closing price, you can do that, or by symbol, whatever it is. So now here, you can cut and paste this list into, a watch list, print it, whatever you want to do, or just highlight one of them and click Open Chart. And you'll see on the right here, let me move this over, right? On the right, it'll show up. So now here's one setup on Ross Stores. So we ask ourselves, is there slope? The answer is yes. Is it close to the 20? Yes. We look to our left. Is there a lot of resistance overhead? Well, it looks like we're coming up to an area where there might be resistance, okay? Right, I'd say right around 90 or just before there. So we can tell now how much room we have to go, 82 to 90, right? About 8 points. We can judge it. We can decide, do we take that or not? But more importantly, before we do anything with this, we want to look at the other ones and compare. And remember, our job is to select the best of the best. We want, out of a long list here, we might have 10, 20, 30 trade candidates. We want to identify the strongest one, okay? This one to me does not look as strong as Ross Stores. Is there slope? Yes. Are we near the 20? Yes. Do we have resistance overhead? It looks like a little more than on Ross Stores. Let's look at the XCM. Now remember, I only search through 101 charts. What I normally do is scan all optionable stocks, which is about 4,300 or 4,800. I forget the number. I mean, it's thousands, but it'll do it in a couple of minutes for you. Okay. And now this one. So you can see how quick this process is. You scan for a minute or two, and you'll have a short list with slope, you know, exactly the ones you want to see, and then you compare them. And again, with this indicator comes a couple of training videos that we'll send you where I go through in detail how you want to compare one to the other and select the best of the best. And we go through money management rules, all of that. Okay. Again, it's a very simple tool that reacts very quickly to market changes, and that is intended to keep you on the right side of the market. When the market is trending higher, you want to go with it. When it's trending lower, you want to go with it. And that's what this does for you. Okay. I'm about out of time, so I'll pass it back to Jeff. If there's more questions, I'm happy to stay on and answer them. If not, you can always get in touch with the sales team at Metastock. They are awesome. Jeff, are you there?
Okay. Hold on.
I'll hand it back to you, Jeff.
All right. Thanks, Vince. Appreciate it.
You're welcome.
Just a sec. All right. Thank you very much, Vince. Very, very good to see you. Thanks for all the work on this one. All right. Very cool. And let me go ahead and do this. Let's go ahead and make the presentation me again. Okay. And then I'll show my screen. I thought there was a really, really interesting question from Rick. He was talking a little bit about Costco. And you should be able to see my screen right now. I wanted to kind of show you how, even though the SOAP wasn't great in Costco, it kind of gave you an opportunity to kind of get back in through the re-entry method that we kind of designed with Vince. So let me kind of just show you this on a chart. This is a chart of Costco. If you look at kind of the recent activity that we've had a nice little move in Costco just recently. But if you were kind of looking at this in kind of the early on parts of it, obviously this isn't a recommendation to buy or sell, you know, that kind of stuff. But right here, we had a bit of a entry signal. We'll just start right here. With that entry signal, if we actually looked at the slope calculation, which you can do anytime by just opening up the commentary, you'll see that the slope is actually on this moving average. The calculation that we have is at a -13. So there's no way you're going to be looking to go this long as just out of it. Okay. If we look at this next little short position, or if we look at the re-entry here, we had a better slope, but it was still -6. So it's nowhere near +5, which is kind of like the guideline that we use. So you would ignore that one as well. Right here, we did have a short position that I bet we trigger into because our slope is -$6. So at that particular point, we might consider taking this long position right here, but we didn't have a penetration of that, so of that low, which is one of the things Vince talks about in his training that he wants to do. So we may or may not have taken that one. If we did, it would have been a kind of a minor loss. On this one here, again, we had a slope of -15. That one would have stopped you out or got you in based on the penetration of the low that Vince likes to talk about, and we would have gotten out the very next day with this move up. So in particular, taking this particular trade, your slope's about 3. So if you're waiting for the slope to be about 5, you're not going to basically take this trade. You can kind of keep taking a look at it, but the slope is not where we want it to be. So if we look at this day right here on July 23rd, again, our slope's about actually 745. So you could buy right here. This gives you an opportunity to buy. That is enough of a slope there. And of course, you'd want to use a stop loss and kind of do the things that are taught about in trading. So the thing that I like about that is if your slope is too shallow, you'll notice that even in this, you could have taken advantage of this very first trade, but there's re-entries that are available all the way up that in case you miss a trade or you want to get in. And you can't scan for either that initial entry or that re-entry as well. So it's very, very well put together. Ollie, thanks for the feedback. I'm glad you enjoyed the presentation. So let me go ahead and just kind of talk a little bit about the scans that are included. If I could open up the Power Console here, there is quite a few scans that are included in the Vora Victory. And I'll just kind of talk to you a little bit about what they are. So with Vora Victory, you get the initial entries, or we call those just the signals. That would be just a Vora Victory scan here. If you run the filtered scan, these are the ones that I run on almost every day, but with the Vora filtered ones, it's going to scan for all the stocks that actually have a +5 or a -5 for your entry or your exit, okay? The re-entry, if we kind of look back at the chart, the re-entry will be these circle opportunities, and then you have a re-enter filtered, which has the re-entered plus the +5 or -5 that you want to look for slope. So very, very well put together add-on. And I do like the way it's designed. I like the way that we're looking at the slope of that trend line to kind of identify what the trend is doing. And I do like the fact that we've had a really good run, but if you miss this one, here's a re-entry you could have considered. Here's a re-entry that you could have considered. Here's another re-entry that you could have considered. So really like the way that this is designed in general. It's been a very, very successful add-on. So let me go ahead and minimize here. With the add-on, you're going to get the detailed commentary breakdown. You get those expert alerts, the full market scanning for the triggers, the re-entries, and the filtered scans, which will make sure that the slope is above 5 or above -5. Then you also get system testing and the ability to do system testing with it. So very, very comprehensive add-on. We released this last year. It was our best-selling add-on of last year. Very, very well liked. $19.97 here at the event. You'll pay $9.97 as part of the summit offer. And if you just get that, we're going to include a Metastock real-time trial, so you can try out our award-winning software. Metastock's been rated #1 in its price category 28 or 29 years in a row now. You'll get 2 bootcamp classes that we sat down where Vince goes in and he talks about the setups. He looks at a ton of them. He talks about other things to look at, other things that he likes. Does a really, really good job with both of those training classes, and those are available instantly as soon as you do the order. You'll also get a 30-day money-back guarantee, which I wish I could get a 30-day money-back guaranteed on most of the trades that I take. But with this one, it's a good risk reward. If it's helpful for you, if you like it, you can keep it, and it's been a great add-on. People really, really like it. So to take advantage of it, give us a call, 800-882-3040. You can visit us online at metastock.com/saleschat. And it is part of that Summit Action Pack where you can get Steve Bigelow's add-on, 3 months of the Trade Trend add-on, the Vora Victory Method, the 3S Code, and the Power Bundle 360. All these are great add-ons. Some of my favorite add-ons on this screen right here. As part of that, you'll get 2 years of Stocks and Commodities magazine. Thank you for the sponsorship, Stocks and Commodities. You'll get 3 months of a website that's called learnmetastock.com. You'll get their premium subscription for 3 months as part of that. You'll even get an Unleash the Power of Metastock workbook and video. So normally all of that would be about $5,126. Here at the event today, it's going to be $2,385. Ollie, I believe this is only available on Metastock. So thank you for asking that. And we will include a free trial to Metastock as part of it. And you can find out why it's been rated #1 for so long. So anyway, $5,126. Here at the event is $2,385. You can take advantage of that metastock.com/summit deal. You can give us a call at 800-882-3040. Or you can visit us online at metastock.com/saleschat. So there you go. Thank you to CMT Association for sponsoring today's event. CMT is a great organization. They do accreditation and trading of partners. Tyler's going to come in and speak in a couple of hours. And it was really eye-opening to me the first time I heard Tyler talk about CMT, about how valuable that can be as a trading career. And I'm sure he'll share those statistics later, but it's a very, very well established accreditation organization. They do a great job. And you can find out more about them at cmtassociation.org. So there you go. Our next guest today, and then Metastock. It's been 29 years because I added up and updated this spreadsheet this year when we won again. So 29 years in a row, Metastock's been rated #1 in its price category. So we'll talk a little bit more about that after Daniel speaks. Daniel has been a guest on our summits and our conferences for a number of years. Today he's going to talk about a new set of indicators that he developed. They look really, really cool. I really like what he's doing with kind of like his efficiency metrics that are in all of his scans. The methods that he's created look great. He's a really good programmer. In fact, he does a lot of work for other people as part of that. I don't know if he does the programming or it's part of his team, but it comes out really good. So Daniel, let's go ahead and bring you on here. I hope you're doing well. How are you doing today?
Hello. Hi, Jeffrey.
Okay.
Hi,
Can
guys.
hear you.
Yes.
Hey, Daniel, how are you today?
Awesome. Yeah, I'm going to share my webcam too. Hey, guys. Nice to meet you.
All right. It's coming through. You're looking nice today.
I try. Yeah, thank you.
Yeah.
It's a beautiful day here in Montreal. I biked to my office this morning. I'm all like, pumped up for this presentation. Ready to go. Yeah.
Okay. I think I made you presenter. Okay, so I should be asking you somewhere if you want to share your screen.
Great.
Let me know if you
I'm gonna
can't
go
see
ahead.
it.
Yeah, I'm going to go ahead and share my screen. Just give me a second. All right. Jeffrey, can you see my screen?
Yep, spearheading scanning for high probability trades.
Perfect.
It's all yours.
All right.
I'm going to get out of the way.
Great. So yeah, hi everyone. My name is Daniel Sinnig, and today I'd like to talk about what we call spearhead scanning. It may sound complicated and I don't know technical, but it is really along the lines of what Vince previously said. When you run a scan with Metastock, for example, chances are you'll get plenty of signals. Now the question is, wow, from all these signals, since I can't trade them all, which one should I trade? Yeah, and then you can listen to the expert and say, okay, you should focus on trades when the odds are stacked. Focus on what is working and skip what is not working. Trade when the probabilities are high. But these are all theoretical recommendations, which are not practical, at least not with the proper tools. And in this talk, I want to introduce our set of indicators, which we call the Power Bundle 360, which will help you with exactly this. They will give you not only clear buy or entry and exit signals, but they will also tell you, along with every signal, how well the signal, historically speaking, has been working out, thus allowing you, using hard evidence, hard statistics, to make a truly informed trading decision and choose the signal which has the best odds of succeeding. So this explains the title, Spearhead Scanning for High Probability Trades. Now, before we start, as you know, trading is risky and not for everyone. If you trade, make sure that you use risk capital. Should you lose your risk capital, it should not affect your lifestyle. When it comes to statistics and hypothetical performance, keep in mind that these are not necessarily indicative of future performance. All right, so now that we have this also out of the way, just a few words about who I am. Jeffrey already mentioned that, I'm actually a programmer by training, so I'm not the typical trading educator on this show. And in fact, I did my bachelor, master's, and PhD in software engineering with the objective of becoming a university professor. And I even taught several courses in software engineering in different areas along the years or throughout the years. But I also had a fascination also with trading, and I was trading on the side. And of course, when I started off trading, I made all the mistakes that everybody else does, or most people do. In the beginning, I took too much risk. I over-traded. I revenge traded. You name it, I've done it. So after donating quite a fair amount to the market, I took a very strong look into the mirror, and I realized, wow, trading is hard, and I need help. And for me, as a programmer, needing help meant, well, I need better tools that help me with my trading, that help me make better trading decisions. This is really how our story, or the story behind tradingindicators.com, started. Now, tradingindicators.com is our online store where we offer trading indicators for all kinds of platforms, of course, also for Metastock. And some of these indicators I will present to you today. I have developed trading indicators for myself, for our online store, but also for other trading educators. For example, for Jeff Tompkins, who was on here earlier, or also for Cedars Peters. I think he's coming later on today, the 3S indicators, and we all work together to help improve these indicators. And now our indicators are my indicators are used by various people all over the world, and they help them become more successful traders. But you know what? We have since grown, so it's not just me anymore. We have an entire team that works for tradingindicators.com with the objective of building something different. And we call this intelligent indicators, which will truly help you become a better trader and get better trade results. I'm trying to build on all kinds of innovative features which do not exist yet, but which can be very powerful. For example, real-time statistics on your chart, which will tell you how well, for example, the signals have been working out so far. And when you can see, look at these statistics, you may realize, well, for this symbol, perhaps our indicator does not work properly, and you will stay away. And sometimes staying away from a trade is the best trade advice you will get. But oftentimes the statistics will tell you, wow, these signals have been working out great. So when another signal comes up, it can be a good idea to follow the signal and enter into a trade. Now, all our indicators are available on our website, which is called tradingindicators.com. So I invite you to have a look and yeah, check it out. But you know what? I don't really want to talk too much about myself today or about our team. I prefer talking about you guys and the audience. And perhaps let me ask you a couple of questions. So, for example, who of you, and perhaps write it into the chat or into the question section, who of you struggled recently with the crazy volatility in the market? Or did you perhaps still hang on to your long position before the market broke down? Perhaps you're still hanging on, hoping it's going to rebound quick. If this happened to you, perhaps write it into the chat. Or did you recently get faked out at a recent bullish uptick before the market turned against you again? We are right now, at least when it comes to equities, in such a bullish uptick. And perhaps you don't know, what should I do? Is the market turning around or not? If you're wondering, write it into the chat. Or are you currently lost and don't know what is working and what is not working? So if the answer to any of these questions is yes, then I have something for you today, because we have built at tradingindicators.com a suite of intelligent indicators which address exactly these problems. Okay, so these indicators are combined under the label of Power Bundle 360, and they're really complementary. And we have designed the indicators in the way that they are working, or each is working in a particular market condition. For example, we have written or implemented a trend following indicator, which we call 1 to 3 strike, which is specialized on catching trends and entering into a trade or giving a signal when a strong trend is established. Or we have developed a reversal indicator, which is specialized on predicting reversals in the markets or pullbacks in the market, which we call divergence cloud. And we've created also a breakout indicator, which is designed to capitalize on breakouts in the hope that when a breakout happens, price will continue in the direction of the breakout for quite some time. And we call these indicators, or the first indicator is called 1 to 3 strike. And of course, if this sounds a bit theoretical right now, do not worry. We're going to switch over to the charts in just a second. So our trend following indicator is called 1 to 3 strike. And it confirms trend direction when 3 things come together. We need, of course, price directionality. We need increased volume, and we need increased volatility. Now, if all 3 things come together, this indicator will issue a signal in the direction of the trend, along with clear exit signals as well. Our indicator number 2, again, in the Power Bundle, is called Divergence Cloud. And if you have studied divergence before, you may know that divergence is a really good tell sign or predictor of that price may continue moving in one direction and reverse into the opposite direction. Now, typically, divergence calculations are based on price move and compare those to, for example, an RSI or a stochastics indicator. We have taken a slightly different approach. Of course, we also look at price move, but we're comparing price move to volatility. if they contradict to each other, then this will tell us something. And it happens that we're very surprised about it, actually, that this was a very strong indication that price may reverse soon. So if price move and volatility does not agree, a trend reversal or pullback may be imminent. And we've determined in our lab that this is a really high chance of succeeding or predicting a reversal. We call this the volatility momentum divergence. And our third indicator, which I also demoed today, is called volatility crusher. And this indicator is specialized on detecting breakouts. So it looks at changes in price and volatility and momentum. And if these come together, a breakout is detected. And then a signal in the direction of the breakout is issued. And the hope is here that price will continue in the direction of the breakout for quite some time. This is where you can capitalize on in your trading. All right, so these are the three indicators I will talk about. 1, 2, 3 strike, our trend expert, divergence cloud, our pullback finder, and volatility crusher, our breakout expert. Now, just one more thing I'd like to mention before I move on to the charts. So all three indicators, they not only give you clear entry signals, but they will also give you clear exit signals, because entering into a trade is just really one side of the coin, because you also need to exit it. And this can be just as challenging. This is why we have designed our indicators to give you both entries and exits. We have tried to keep the visuals of the indicators as clear and as simplistic as possible, so that you can focus on the chart. You can keep the chart clean while focus on on trading. So the indicators will not clutter your chart. These indicators, they run everywhere and anywhere. So on all time frames, all chart types, all asset classes, and they are meant to support your trading style and not to cramp it. So whether you're a day trader, swing trader, or perhaps investor, you can use these indicators equally. And the last point, which I believe is the main distinguishing feature of these indicators, is our real-time statistics. They will tell you how well the signals, long and short, have been working out so far. And you can see at a glance right away whether perhaps this indicator works really well on the long side and not so much on the short side. And this will tell you something as a trader. It will tell you that perhaps I should focus on the long signals only and ignore the short signals. And again, this is invaluable information when it comes to make a decision on whether to follow a signal or not. All right, so let's move on to the chart and see how we have designed these three indicators and how they will help you as a trader to make better trading decisions. All right, so let me switch over to MetaStack. I'll just pull it in here and I drag it into the chart. Okay, so there we go. So here we have, what do we have here? We have a daily chart of target. Now, and I've applied to this chart already our 1, 2, 3 strike indicator. If you remember, our 1, 2, 3 strike indicator was our trend following indicator. Let me briefly explain to you how this indicator works. So the first thing to point out are these arrows here, which are labeled either long entry or short entry. And as the name suggests, these are really entry recommendations to either go long at market or to go short. Quite simplistic. Now, along the way, you may also see arrows in the opposite direction, which are slightly smaller than the entry arrows. Like, for example, this one here, LPE, and this one, LPE. LPE stands for long partial exits. As mentioned before, our indicators will not only tell you when to get in, but also when to book partial profits. This is exactly what these arrows are for. So you would enter into the long trade here and book partial profits here and here. And the number of partial profits or exits that the indicator should give you can be configured in the parameters of this indicator. Now, the same for the short side. For example, here we have a short entry with a set of partial exits along the way. And the other thing that you can see here on this chart is that sometimes the candles are colored green or red. So green basically means that the chart, from a technical point of view, is in an uptrend, and vice versa. If it's colored red, it is in a downtrend. And you will also observe that long signals will only occur when we are in an uptrend, and short signals will only occur when we are in a downtrend. And this makes a lot of sense in this case because, as mentioned, this is our trend following indicator, and we want to trade with the trend and not against it. Now, okay, so this is the how the indicator works, but now let me show you something else. So when I do a right click on the chart and I go to Expert Advisor, and I open up the expert commentary. So let me do this. Now this will open up a new sub window, as you can see, and you can place it anywhere on the chart. Now in this sub window, the first item of the commentary is what I would like to point out. It's called our instant efficiency statistics. So you can see for this indicator on this chart on target, on the daily chart, our long efficiency is at 91%, and our short efficiency is at 56.67%. So what does this tell me as a trader? It tells you that for this chart, our long signals have been successful at a 91.11% success rate. They've been winners. And on the short side, they have been at 56.67%. So for you as a trader, one thing you can learn from this is that long signals have been more successful than short signals. And you can see the success rate here too. So perhaps for this particular symbol, if you get a long signal, you may want to follow it if other things come together. But if it is a short signal, perhaps you do not want to, because the success rate is only just a bit above 50%. Now, for this particular indicator, just as a general information, our winners tend to be bigger than our losers. So because it's a trend following indicator, we ride the trend as long as it continues. And if we catch a good trend, as you can imagine, the winners can be quite substantial. So even with a success rate of 56%, you can still have a successful or profitable trading system. All right, so this was target, but let me switch over to a second chart. I'm just gonna pull up my notes here. So the second chart I'd like to open up is Tesla. And there's a reason for that. So let me quickly open up Tesla. I'm going to keep the same indicator on the chart. And let's have a look at Tesla. All right, so here we have Tesla. And the reason why I picked up Tesla in this case is because Tesla actually happens to have a signal on the last close bar. So I actually ran a scan over the weekend, yesterday, and Tesla came up as a potential entry signal. Let me just explain to you how somebody would act on an entry signal. So let's say you ran the scan just like me yesterday, and you will learn that Tesla has a long entry recommendation, as you can see here. So I can click on it, just a second. The expert commentary will update, and you can see that we do have a long entry. Just a second. Oh, there we go. I should not click on the bar. There we go. Okay. So now the expert commentary is updating. And as you will see is that the expert commentary will tell you, well, a long signal for Tesla has been triggered, and a long position should be open with appropriate position sizing. So it can be closed with 4 partial exits. Again, the number of partial exits can be configured in the parameters of this indicator. So what you would do if you consider this trade, you would wait until the market opens the next day. I would definitely always open or check for gaps, whether the market gapped open a lot, especially after a weekend. But if it is close to the or near the close price of Friday when the market closed, you may want to consider entering into the trade with appropriate position sizing, and in this case, go long when the market opens. And this is how you can action on these signals. All right. So one more chart I'd like to go through, and this is Marathon Oil. So Marathon Oil is not an equity; it's well, it's an oil company, but it's been trending a bit differently from. Just go here from the typical equities because it's following oil. Equities have been in a downtrend for quite a while. We have seen some retracement, but it was the opposite for Marathon Oil. Oil's been a steady uptrend for the last couple of years. And as you can see here, our indicator works just as well in an equity which trends up and an indicator trends down. So you can, if you just follow along the short entries, for example, and the long entries, you can see that these are quite spot on with success rates of 84% to the long side and 70.37% to the short side. All right. So this is our first indicator, which is 1, 2, 3 strike. And before I move on to the next indicator, if you have questions, please feel free to write them into the chat, and Nicola, who's manning the chat today, will call them out to me. So Nicola, if there are any questions, please call them out. All right. So, but let me move on to our next chart. So for this one, I'm gonna open up the Dover Corporation. So I'm gonna go here, open up Dover, just down here. And on this particular chart, we have applied, let me just remove the expert commentary for a second. We've applied our second indicator, which is called divergence cloud. Now, as I mentioned before, divergence cloud is a divergence indicator based on our proprietary volatility divergence formula. And whether there is a divergence in the market or not, you can immediately see by either the bar coloring. So if bars are colored greenish, it means there's currently a bullish divergence, which may predict that the market will continue moving up. Or if the bars are colored reddish, we currently have a bearish divergence, which may be a telltale sign that the market may go into the downwards direction. And you can also see this if you don't want to have your bars colored at the bottom here, which mimics the bar coloring. So if it's greenish, it's a bullish divergence. If it's black, there's no divergence. And if it is reddish, it is a bearish divergence. And similarly to our 1, 2, 3 strike indicator, also this indicator gives you entry signals. For example, this one here, long entry with partial exit suggestions. And it will also give you short entry signals with exit suggestions. In this case, for example, we're still short oil. I have a short entry here. We had one partial exit at this point, a short partial exit, and another partial exit at this point here. We haven't hit our 4 partial exits yet, and we're still holding on to this short position. The indicator will tell us to whether we should close the position entirely or take partial exits along the way up until the point where we have booked 4 partial exits. Why 4 partial exits? Well, that's because this is how the indicator is configured with the current settings. You as the user or the trader, you have the chance to change this to 6 partial exits, 3 partial exits, or perhaps just 1 partial exit. Okay, so let me move on to a different chart. In this case, I'm going to go to Caesars Entertainment. Let me just open this one up. Where do we have it? There we go, Caesars Entertainment. Again, we have applied divergence cloud to it, and you can see the signals which have been generated along the way. We had one powerful short entry signal here, which really predicted a strong move to the downside with a set of exit suggestions, a long entry here with 4 partial exits, another long entry, and so forth and so forth.
Daniel.
And of course, yes, Nicola.
We have a question here from Ricky Laplace. He wants to know if the operation of the indicators goes the same on other time frames like the 5-minute and the 10-minute, etc.
Yeah, thank you for the question. And as Vince said previously, our indicators, they are based also on technical analysis, and technical analysis is not dependent on the time frame. The principle applied to the very small time frames and to the very large ones equally. So in fact, we do have many day traders who use our indicators on the E-mini futures, for example, day trading them on very small time frames, even tick charts. So yeah, and the principles apply equally. Mm-hmm.
And Sean Buckingham wanted to know, what does the black color represent in divergence cloud?
Yeah, so black color basically means there's no divergence. So we have 3 states, if you want to call it. Reddish means bearish divergence, greenish means bullish divergence, and if it's black, then there's no divergence currently.
Perfect.
Okay, great. All right, so this is divergence cloud, and let me quickly open up the expert commentary, and you will see that just like with our 1, 2, 3 strike indicator, also with divergence cloud, we do get our instant efficiency statistics. And here we can see for Caesars Entertainment, we have a long efficiency rate of 92%, which is amazing, and a short efficiency of 70.78%. So quite promising in both directions, the long and the short side. Of course, I have picked these examples ahead of time. It is not always the case that you get statistics that high. Sometimes they are lower, of course, sometimes even below 50%. And And we're very honest about this. And what we want you to know as a trader is, so should our indicator not work for a particular symbol or time frame, the statistics will tell you. And you as a trader will then simply not follow these signals. And as I mentioned earlier, sometimes not to enter a trade is the best trade advice that you can get. Okay. So we're very honest about this. Of course, here I'm showing an example to where it works out really nicely, but sometimes the statistics will be below 50, and then this will tell you something as well. Okay, so let me move on to our third indicator, which is called Volatility Crusher. And before I do this, I'd like to mention that we do have substantial documentation, master classes, and a knowledge base for each of our three indicators. What I can show you today is only a brief overview of how they work. If you want to know all the details, how they can be configured and optimized, we have all the documentation available on our website. Okay, so let me move on to Volatility Crusher. For this, I will open up yet a different chart. And in this case, I will open up Ford. So let me just quickly switch the window. I'm going to switch off the commentary real quick. And I'm going to open up Ford. And here we have Volatility Crusher applied to the chart. Now, Volatility Crusher is a bit different from our other two indicators because, well, similarly to the other ones, it will give you clear long and short entry signals, which is the blue arrow and the this orangey arrow here for shorts. But differently to the other two, Volatility Crusher will tell you at the time of entry where your targets and your stops are. This was not the case for Divergence Cloud and 1 to 3 Stripe, because the idea there was a bit different. If we catch a strong trend or a strong reversal, we want to stay in that trade for as long as it lasts. This is why we do not have a particular target in mind. We're just going to stay in that trade as long as it lasts. It's a bit different for Volatility Crusher. This is our breakout indicator. And the idea here is when a breakout happens, the indicator banks on the fact that it is likely that price will continue in the direction of the breakout for quite some time, but not indefinitely. This is why this indicator comes with a preset target. In fact, 2 targets and a preset stop, which is actually a trading stop. So for example, here, we had a long entry. Our target 1 was hit here, target 2 was hit here, and at this point, we close out the trade. But the interesting fact here is that we know at entry where these 2 targets are, and also where our stop loss is. An example of such a trade which got stopped out is here with a long entry, which then got stopped out at this point. You can see this with the little stop sign here. And of course, the indicator works both in the long and the short direction. And what we can also see here is that this indicator, or this chart, currently has a long trade open. Again, this was picked up last night by my scan. We have a long entry here. And if you go to the expert commentary, just open this up real quick, you will see that you will have clear levels of exits. So 2 profit targets and 1 stop loss. So as soon as this opens up, I have a lot of things running on my machine. You will see that we are currently long. This is the long position picked up here. Our entry price was 14.69, which is when the market opened today. Our first target is 15.73. This is when you would book partial profits. The second target is at 16.77, and stop loss is around 11.76, just around this resistance zone here. So with Volatility Crusher, you get these clear levels right when the trade opens, which is quite useful for many traders. Okay, now let me quickly go back to the charts. And one thing I'd like to mention just real quick is that this is actually a trailing stop. So as the trade progresses in the direction of the trading stop will be tightened and the new level will be posted in the expert commentary. All right. So perfect. So now let me go to back to my charts, my slides real quick. And I'd like to talk a little bit more about the power of the statistics, because this is really where I believe our indicators stand out, because they will tell you right when you apply them to the chart how well they are working. And we believe this is one of the main reasons which will allow you to make a truly informed trading decision. and to trade when the odds are stacked in your favor. Why would you enter into a trade, for example, if the statistics are only around 55%? As mentioned previously, it is very likely, especially with MetaStock, which has such a powerful scanner, that you will get many stocks to choose from to trade, but you can't trade them all. So why wouldn't you focus on the stocks which have the best statistics, historically speaking? Yeah, and to me, this is just a very logical choice to make, and this is what I mean to trade when the odds are stacked. But this should not be based on your intuition; it should be based on hard evidence. And by supplying you with these statistics of how well the signals have been working out, historically speaking, which basically means how well the indicator is dealt into that chart, you can make such a truly informed trade decision. But you can also use these statistics for finding optimal parameters for the indicator. I didn't touch on this so far in this presentation, but all of our indicators, they come with parameters. And when you change them, they will give you different signals. And so oftentimes when you change the parameters, you might get an intuition, okay, this is working better now, or maybe not better, but you don't really know. It's based on your intuition. But by having these statistics, you actually can now make it truly, you know whether the change was beneficial or it was not. That's very easy because you will see the long efficiency or short efficiency go up or down when you make a parameter change. And this is why these statistics are so useful. And this is why we build them into all our 3 indicators. Now, as mentioned before, our indicators, they work on many different platforms, but they work particularly well on MetaStock. And they've been built for MetaStock to take full advantage of MetaStock. So they not only give you clear entry and exit signals, basically getting into a trade, but also they will let you know when to get out of a trade. But they will also come with our expert commentary and the real-time statistics, giving you clear levels, when to enter, when to exit, and what have been the success rates historically speaking. We have packaged in with our indicators pre-made explorations, which allow you to scan very quickly for stocks or equities or symbols which currently have signals. And the explorations, which I will show you in 1 second, they will also tell you right in the exploration how well the signals have been working out. So you can see right at scan time what were the success rates, historically speaking. And of course, we also built on system tests and optimizations, which I will not be able to cover today. So our indicators are really for anyone who is interested to manage their own investment or trading portfolio and get better results by making better trading decisions. And we not only say this, we also take our own medicine. And what I'd like to show you now is the trade which I took this morning, which was basically, it's my trade of the day. So this is not trade advice to you or trade recommendation. This was what I was taking this morning. I went long the Carrier Global Corporation this morning, CARR. It's a stock in the S&P 500 in the industrial sectors. Now, I went long right when the market opened at 40.15 with targets at 43.78 and the stop loss at 35.38. And you can see my fingers from the count here where I entered these trades along with the levels where I want to exit. Now, why am I saying this to you? Because I want to explain to you now, how did I identify this trade of the day for me? What was my thought process? How did I take advantage of our own indicators and of MetaStock? So let me quickly go back to MetaStock. I'm going to open up the Explorations tab. And this is a scan I ran last night. And I ran it on the volatility crusher, the 1-2-3 strike, and the divergence cloud signals. So this is typically what I do. I don't like to run them one at a time. I run them for all 3 indicators. Because MetaStock is very efficient in this, I just start it, I go for a coffee, and I come back half an hour later, or whatever it takes, and I see all my results. And this is exactly what I've done last night. And for example, if I open up 1-2-3 strike here, you can see the result set, and you see all the stocks which have been scanned. You see 2 columns here, long signal and short signal. And as the name suggests, these columns will tell you whether we currently have a long entry or a short entry for that particular symbol. But you will also see what are the the statistical success rates for the long direction and the short direction. You can see this right in the scan. And this is super useful because what I then do, I basically, I sort by, let's say, long signals. You can see all these stocks of a 1, which means they currently have a long signals here. And then I go through my long success rates. And I pick the one with the highest success rate. It's that simple. So here we have 66% for Agilent, 71%, for example, for Archer Daniels. And if I go further down, let's see if I find something higher, 72.5% for Kinder Morgan, and so forth. And this was 77% here, 80% for Accenture. And this, or 85% even here for ADV. So this will basically tell me right off the bat, or ADV doesn't have a signal, but you get the point. This will allow me to identify not only which stocks currently have a signal in the long or short direction, but also what were the success rates. What I do then as a trader, I just pick the one, or I analyze the ones which have a signal and the best success rate. And this is how I identify my trades. And this is exactly what I've done to come up with the trade of my trade of the day. And I did this for 1 to 3 strike. I looked through all the signals. I did this for divergence cloud. I looked for the signals to the long and the short direction. And I did this for volatility crusher. And it's really the same for every single exploration. And for volatility crusher, if you look at the stocks of long signals, and if you look at the success rates, which are in these columns here, there's one stock here which has a long signal and which is 100% success rate in both the long and the short direction. This doesn't happen very often, but this was really wow. What a great timing for this presentation as well. So this is the this corporation CARR, and it tells me basically that for the volatility crusher, this indicator works very well tuned in for the long and the short side. This is exactly what I further analyzed. I saw this finding, really good success rates. I open it up in the chart, so let me quickly do this over here. 1 second, if this moves back. Come on. I have a lot of stuff opened. Just give me 1 second.
Hi, Daniel.
Yes, Nicola.
We have a couple of questions, but the first one is actually about this car trade.
Yes.
And Alabek mentioned that there's a big spread on the risk to reward. So I told him that the risk reward for volatility crusher is actually a configurable setting. Perhaps you can elaborate on this.
Yeah, exactly. So that's a good point. So for divergence cloud and 1 to 3 strike, as I mentioned before, our winners tend to be bigger than our losers, and this is by design. We've tested it, we've optimized it in our lab for years, honestly, and this was the best configuration that we could find, which gives you the best odds and to get most out of your trade.
And users are able to change the profit target distance, though, right? And the stop loss?
Exactly. So for volatility crusher, I just want to explain a little bit the history of this. Our risk reward ratio tends to be, we're going for smaller wins, and we give the trade a lot of room. And why did we do this? Is again, we've tested it in our lab, and this happened to be the best setup. But I should mention that this is all configurable, and you have the option to set your targets as far away as you want, and to keep your stop loss as tight as you prefer. And again, if you make these parameter changes, these statistics will tell you how well this is working out. So you have all the options that you want. Just by default, for this indicator, we happen to choose a nearer target. We have 2 targets and a stop loss, which initially was relatively far away. But as the trade progresses in the desired trade direction, the stop loss is being tightened as it is a trading stop.
And this plays in well to Glenn's question as well. He wants to know, how would you know which of the 3 indicators to use, or which works best, say if you were on a 5-minute chart? Yeah,
great question. So what I did this morning is actually to answer this question, and then I'm going to look at this trade here, is that, well, it depends a little bit on your trading style. So if you're more of a trend following trader, I would stick primarily with the 1 to 3 strike indicator. and follow it. If you're more of a trader who looks for pullbacks, let's say you're in a bullish move and you're waiting for a pullback in that bullish trend, then enter when that pullback happens in the direction of the overarching trend, then divergence cloud could be the indicator to go for, because that's a part of your trading style and what you like to trade. If you're more of a breakout trader, then volatility crusher is the one, the indicator to follow. The advantage here is that trades are well defined right at the beginning. You know where your targets are, you know where your stop loss is, and trades tend to be a bit shorter than the trades with 1 to 3 strike and divergence cloud. But it depends a little bit on what your trading style is. But in the end, what I do, because I don't really have a particular trading style, I consider myself as a very opportunistic trader, meaning I trade whatever seems to work the best. And how do I know what's working the best? I look at the statistics. And this is exactly what I did this morning. Last night, I scanned through the S&P 500 and the Dow 30 and a couple of NASDAQ stocks, which are my scan universe of my favorite stocks. I looked at the results. I looked at symbols which currently have signals, and then I looked at the statistics. When I saw CAR with statistics at 100% success rate in both directions, I said, wow, this is the one to go for my trade today. And you can see here, this was the entry recommendation from yesterday. The market opened up a bit below the close of Friday. This is when I entered this morning in my Thinkorswim brokerage account. And I entered my stop loss level, which was given to me at the time of trade entry, and along with my target. And I'm still in that trade. And this was my trade of the day. And I invite you perhaps to follow through and to see where this trade is ending up in a couple of days. Yeah, so my recommendation for this trade was that to enter to this morning when the market opened, target at 43.78. This is what I entered in my Thinkorswim account with an initial stop loss of 35.38. And again, this is a trading stop. As the trade progresses, this stop loss will be tightened in the direction of the trade. All right. So now, this is more or less what I have to say. Jeffrey, are there any questions on Nicola?
Jeff, if you don't mind, I want to ask a question from Vincent McCroy, and he wants to know if Supertrend Bullseye will ever come to Metastock.
That's a good question. So the answer is very likely, but that's a different topic. This was about a different indicator that we have. It was not part of the presentation today, but yes, we're trying to make our indicators available to as many platforms as possible, of course, including Metastock.
And those are all the outstanding questions.
Great. Jeffrey, do you have any questions for me? Or are there any symbols which I should look at, perhaps?
Let's see, I don't have a lot of questions. Let's take a look at, I thought somebody was asking for a symbol a little bit earlier. If you guys have a symbol request, go ahead and put them in. Let's take a look at AMZN, if you don't mind.
Amazon. Yes, absolutely. So let me go back. Actually, I had it open just a bit earlier. Actually, I believe Amazon also does have a signal. Sorry, Jeffrey. Let's see. Okay, so let me open up Amazon. All right. It's .o, I believe. There we go.
That's right.
Yeah, so Amazon is opening up, and Jeffrey, I think I did this before. Oh, display-based instrument. I was playing around with Amazon early on today, and oops, I just moved this in. All right. There we go. Let me just move this over. Yeah. In fact, Amazon was gapping up over on Friday. I believe something was coming out. And we did get a long signal for volatility crusher. And so you could have went long this morning following this signal. And if you look at the expert commentary, which of course is also available for volatility crusher, you will see that we currently do have this long trade open. That's just because the commentary follows the signals on the chart, and we're also going to see the success rates, the success statistics for Amazon. We can see here, for example, on the long side, on this daily chart of Amazon, we have an efficiency of 50%, and to the short side of 66.67%. To be honest, I would probably skip this trade. I didn't like the big gap. This tends to be filled later on, and of course the statistics are not really in my favor. As mentioned earlier, by default, Volatility Crusher has profit targets which are a bit nearer than the stop loss at a long efficiency of 50%. This is not in your favor, and I would stay away from this trade.
All right, one more. Costco, COST.O.
Let's have a look at Costco. All right. Nope. Where do we have it? This one, COS. Jeffrey, help me, please. Cause what's
COST.O.
Oh, this one. I got it. Okay, .o. That was it. All right. So let's see what Costco is all about. And as this chart is loading, if you have any other questions, yeah, please feel free to ask me. All right, so this is the naked chart. There's no expert attached to this chart, so let me go ahead and first of all hide the commentary, and let's apply our divergence or our 1 to 3 strike indicator perhaps to Costco. So I'm going to go ahead, and if you're wondering where are these indicators, they are grouped under Power Bundle 360, and here we have 1 to 3 strike, divergence cloud, and volatility crusher. So I'm going to go ahead and apply 1 to 3 strike, and we can see here that we actually currently do have an open long trade for Costco. Previous to that, we had a short recommendation here, which worked out really nicely. So we followed along Costco to the downside with partial exits along the way. The market has retraced since then to the upside, and we did have a long signal, issued on July 15. And if then you can go to the statistics by opening up the commentary, and it will tell you that we are currently in a long trade. And the statistics, the long efficiency rates actually for Costco are really high at 79.55%. And yeah, so not so much well to the short side. Doesn't mean it doesn't always work out. This trade was great on the short side, but historically speaking and statistically speaking, long signals have been performing better than the short signals. As you can see here, we did get a nice follow through from this long signal from July 15.
All right, I think we have time for one more. Mason wants to look at gold on daily. I think the easiest way to look at that would be maybe GLD, the ETF.
Yeah, let's look at the ETF. All right. Okay, so opening up gold. So again, we have no expert attached, but let me go ahead and apply our expert advisor. And we're going to use perhaps Divergence Cloud. And of course, you can try out any of our experts to see which one gives you the best signals. So here, Divergence Cloud is applied. And let's see, let me just open this up a little bit. Now we can see here that we did have a couple of nice long entries along the way. A short, which basically exited at the level of entry more or less, and we since then have had a long entry. We're still on this long. Oops, move over. Sorry, I should probably disable the expert commentary. Yeah, we had a long entry here, and we're currently short. We booked partial profits at this level here. Another partial exit for the short trade as well, but this short trade is still open, and the indicator will tell you when to close out the trade as the market unfolds. So here, taking advantage of this short movement. All right, the statistics they will. This is something you need to be aware of. You need to click on the right position on the chart, because the expert commentary will update depending on where you are on the chart. And in this case, it's from May 19th. It's just something you need to know about MetaStock. So what you want to do is to click on the last bar, which is August 1st. It's today. And when you do this, the statistics will update immediately. Here we can see that gold had a long efficiency of 60.71% and to the short at 45.83%. All right. Any other questions, Jeffrey?
No more questions. So
Perfect. Yeah, so it was my pleasure to present our indicators to you. And I believe that Metastock being such a powerful scanning tool, and this is really where I think Metastock really stands out from all the other platforms. What we've developed here is something really complementary. So basically it elevates, in my opinion at least, the scanning feature of Metastock to another level by showing you in the exploration results, if I pull this up again, right at the results tab, how well, historically speaking, the signals have been working out. So if you get 20, 30 signals a day, you don't know which one to choose. Well, now it's much easier. You focus on the ones with the highest success rates, historically speaking.
all right. Thank you, Daniel. I'm going to talk a little bit about how to get this, of course, and that kind of stuff. I want to say thanks for coming in. Appreciate it. I love those efficiency ratios because a lot of times, at least for me, like I'll run a scan and exploration, and if you're running it against like all the optionables, there's like 4,500 of them there, right? So for me to be able to see what the efficiencies look like, and it just gives a better way of kind of looking at it. And I thought that was the coolest thing when you started showing it to us.
Yeah.
All right, very cool. So I'm going to talk a little bit about how to get it. Thank you again, Daniel. I appreciate your coming in.
Yeah. Bye.
All right. And Kelly, in the control room, if you want to turn on the lights, you could. No, I usually get them. No, there we go. See, there you go. All right, let's go ahead and kind of change the presentation over to me real quick. Oh, actually, I'll be talking for quite a minute. So let me go ahead and make me the presenter. We'll go ahead and show my screen. I do have, let me go ahead and go into back into the PowerPoint. So as part of that add-on that Daniel just showed you, you'll get the divergence cloud, the volatility crusher, and the 1, 2, 3 strike method. All of those methodologies include full integration to Metastock. So all the things that we've been talking about all day, the ability to scan markets. I think scanning, it's like one of the coolest things in Metastock. Like I use it every day. We're going to be running some scans, well, if we have some time today, and it's all going to be available with scanning. In fact, I think scanning is one of the things Metastock does best. And with all the markets that we offer, it makes it available and usable just about anywhere on the planet. He does have the system testing. You can go in and test trading ideas. You can find exactly which of the methods work better. With our system tester that we have built into Metastock, you can actually do multiple security system testing, which means you can test multiple ideas all at the same time. You have the customizable indicators and the expert advisors, and again, the plain English commentary. So it's a very, very well-designed add-on into Metastock. It's brand new, and I said Daniel was a good programmer. He really kind of understood kind of the advantages of Metastock with the scanning and the testing, and really built for those. So normally the Power Bundle 360 is going to be $1,495. Here at the event today, it's going to be $995. We will include a 30-day money-back guarantee with that. And a trial of Metastock. So if you haven't tried out Metastock, you can find out why it's been rated #1 in its price category for 30 years straight. So if you have questions, if you want to get in touch with or get set up for this, give us a call, 800-882-3040. You can also go to metastock.com/sales chat. It is also part of the bundle that we're going to be talking about all day long today. So you can get Steve Bigalow, Jeff Tompkins, Vora's Victory Method, the Silas Peters 3S Code, and Daniel Sinnig's Power Bundle 360, as well as 2 years of stocks and commodities, 3 months of LearnMetastock.com, and an Unleash the Power of Metastock home training course and CD that's available. All of that would normally, if you just go up to our website, you can buy it for $5,126. Here at the event, we're going to give you a special offer. We're going to give you $2,385. In addition, most of that's refundable if you decide you don't like it. Anything that's not a subscription is part of our 30-day money-back guarantee. So you can just basically, most of it's refundable. So $2,385 is what you'll pay today. To do that, you go to metastock.com/summit deal. Give us a call at you can call in 800-882-3040, or you can chat online with us at metastock.com/saleschat. So there you go. And I hope you're enjoying. How are we doing today? Are you enjoying today's sessions? Ollie says, thank you, Daniel. Thank you, Daniel. We've had some great sessions today. I absolutely love how good of a job people do. Alakesh says, could you please confirm recording availability or not of the webinar? So automatically, about 1 hour after the session is done today, you'll be sent a YouTube link. And that YouTube link is where you'll be able to view the recording. And so you'll get that by email automatically after the session today. And I'll paste it in the chat for you because I have it right here. So there you go. So in any case, let's go ahead and do that. What I want from you, I'm the next speaker. So we're going to talk a little bit about one of my favorite methodologies that's in Metastock. What I want you to do, before we kind of get into there and all that kind of stuff, I'm going to give you an opportunity to put in what symbols you want to look at. So one of the things I don't like to do when I start to talk is come in with a lot of like pre-picked and pre-chosen symbols. So give me some stocks that you want to look at. We'll kind of take a look at your stocks today with this methodology that we're going to cover. Before we get into that, though, I'm going to talk about CMT Association. We want to thank the CMT Association for their support and sponsorship of the events today. I appreciate it. I'm going to make sure my watch does not disturb me anymore, distract me. They've been supporting us for almost a year now. They started in November. Great organization. We're very, very happy to be affiliated and be looking at them. Ollie, I'm glad you're enjoying this session. Thanks for coming today. So let's go ahead and do that. Okay. And of course, we're Metastock. So I'm going to talk a little bit about Metastock. We've had a good opportunity to highlight a lot of what is happening with Metastock, with the ability to do scanning, testing market ideas. The forecasters are really cool patented methodology that you're just not going to find anywhere else. You do have the ability to get real-time commentary, alerts, signals. Prices at Metastock starts at about $59 a month. We're very, very proud of the fact that we've run 29 years in a row best software in our price category. So we do offer an extended trial. If you buy a month, you can get the second and third month for free. I'll talk a little bit more about that as I get it started. And as I said before, I am the next presenter. So again, if you have symbols, I don't see a lot of them coming in. If you have symbols you want to look at, let's go ahead and get them chatted in, type them up. We'll look at the methodology I'm about to show you here in a second. Before I get too much into kind of me, I'm going to read a little legal disclaimer again for you. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Thank you, Rick. We'll look at J&J. Hopefully we'll get a couple more suggestions as well as we get going. So a couple things just to kind of give you an introduction to me. I've worked at Metastock here. This year will be my 25th year here at Metastock. And I love it here. Like, it's been a really, really good opportunity for me. I started 25 years ago. I started on the sales floor. And so if you had questions about Metastock, I'd actually be the very good chance, like 1 in 5 or 1 in 6 at the time, chance of actually talking to us. Yes, we'll look at silver or JPY equals. No problem, Molly. After that, I kind of moved into kind of like the business development team, or what I call the business partnership team. And that's where I met a lot of the people that have spoke today. Well, actually, all of them. Steve, I remember we worked really hard on his add-on for a number of years. Vora, everybody that we've talked to about today is who I've met through the BD team, and it's been that was also a very, very good opportunity. I still do a lot of that business development. In fact, all of the U.S.-based partnerships I'm in charge of, plan all the events. But my title now for the last 4 or 5 years is actually the director of sales, And that just means I do all this stuff, all the US-based partnerships, but I'm also in charge of the sales team. And it's been a lot of fun. Really enjoy kind of working with our partners, putting together events like the one we've got today, getting their add-ons and their methodologies put together into Metastock. It's been a great company to work for, and I absolutely love it. So there you go. You probably had a chance to read this slide. I'm not going to go through it. From a high level, we started in 1982, literally a company that started in a garage. When I started in 97, we were owned by Reuters. They later became Thomson Reuters. We actually bought ourselves back from Thomson Reuters back in 2013. So it's been a wholly owned company here, based in Utah, owned in Utah ever since then. We still have a really good relationship with Reuters. They have now Refinitiv, which is owned by the London Stock Exchange Group. But I'd say one of our biggest advantages is if you're aware of kind of the Reuters, Thomson Reuters, Refinitiv legacy, they offer one of the best institutional news services on the planet. And they have a huge amount of global news coverage. Just to kind of give you an idea of like the scope, they have like 2,000 full-time reporters in like 200 different news bureaus. It's a real-time news service that focuses on news and information. And 90% of their revenues is actually selling that same data to hedge funds. Now, 90% is from quite a while back. I haven't looked at their financials for a while, but 90% of their revenue is selling their news and data to hedge funds and mutual funds and institutions and banks and brokerages. So literally the same data, the same news, the same information that we sell here at Metastock is the same thing that a hedge fund could subscribe to. Their biggest product is a direct competitor to Bloomberg. So, and a very good one. So there you go. All right. The one thing that I will say, and I need to update this slide real quick, but it's 29 years in a row straight. 29 years straight, Metastock's been rated #1 in its price category. So not only is it a great company to work for, great culture here, very, very well established software. And one of the things I like about it is we run a little software company here that helps people trade. Most of the employees here actually trade with the software that we create. So that's really, really cool. I love how helpful it is. For me, I wouldn't be able to trade without it. Like, how are you going to go through all the optionable stocks and find the good opportunities? Well, scanning is that's how you're going to do it. And we do that very, very well. So there you go. That's a little bit more of the dog and pony. That's probably where we're going to kind of leave that. I will say that I can see all of the questions. Both in YouTube and in GoToWebinar. So if you have questions, go ahead and try them out. I'll answer them as best as we can. Alex says, hello, please, could you do something with the COT report, please? I haven't seen that in the platform. I just found one video, but they talk less than 4 minutes. Thank you. So we do have, Alex, thanks for using Metastock. Appreciate that. I actually put together a really good commitment of trader expert advisor that pulls all the data in. It works as long as you have Reuters. So like if you have Reuters futures through data link, or if you have Zenith, you can get the data for it. It's an expert advisor. I think I actually did do a commitment of traders video when it was launched. And I remember that was probably more like 30 minutes or 40 minutes. So we do have a video on our YouTube channel about it. But you can find it. Get in touch with us. Let me go ahead and type this in the chat real quick. Actually, I'm going to ask Metastock to do it. If you go to metastock.com/saleschat, we can send you a link. The commitment of traders is actually a free download. I actually just wrote it a version or two ago. I updated it with all the new graphics that we did as well. So if you chat in with us, they can send you the link to the download. You can just download it, and it's part of Metastock for free after that. So very good question. Funny that I'm the one actually presenting, and I actually wrote that a couple years ago. So, but it is, I feel like I did a pretty good job with it. I actually really like it. Hopefully you agree. So, and it's just like an expert advisor. You open up the chart that you want. It shows all the different COT stuff and just kind of tells you what they are and kind of what to look at with them. So there you go. Thanks for the question. All right. So today what we're going to talk about is It's called 3 Steps to a Successful Trade. It's one of the very first systems inside of MetaStock that I started trading money with. It helps you identify primary, short-term, and intermediate term trends. It's the reason, there's a few reasons I like to show it, but it's very, very good at finding clear, accurate entry points. If you use it right, you'll also have clear exit points as well, which I think is important. And it's really, really good at managing risk because you have clear entries and clear exits. There's a number of reasons I like to kind of. Uh-oh.
I will indicate a number 2.
Okay, hold on just a second. Got to pause my YouTube playback. Okay. It is a trend following system, so you hear a lot that the trend is your friend, or befriend the trend, or rising tide lifts all boats, all that kind of stuff. We're going to talk a lot about trend identification, trading in the direction of the trend, all that kind of good stuff as well. So this is a system that's developed by a guy by the name of Rahul Mohinder, who hasn't been in our office since like the chaos of the pandemic, but he's been in the office quite a bit except for that. And he's a seasoned trader. He's a panelist on CNN and CNBC India. He does a really, really good job. He runs a trading company. I know we get a lot of people that are in here from India. In fact, actually, most of our YouTube audience actually tends to be from India. If you're in India and you want to get some really good education around trading, you should go to veratechsoftware.com. They have about 6 offices, and one of the things that they do is a lot of training on how to trade. That's a core business. They've been a partner of MetaStock since I've been an employee of MetaStock. I think they've clocked 27 years now. But they do a very, very successful business in India, and we appreciate that. In fact, the origin of actually where the RMO oscillator comes in is quite some time ago, maybe like 10 or 15 years ago. They were in our office, and we asked them to show us what they were teaching students, and the actual methodologies that they showed us, we liked so much we ended up buying it from them. We've included in every version of MetaStock since version 10. So it's a really, really good methodology. The reason I like to show it, this is one of my favorite classes, although I haven't done it for a little bit, is it's easy. So as long as I do a pretty decent job of showing it to you, you'll understand it. It's objective. In other words, we're not trying to make decisions based on like what we think the market's going to do when the interest rate rises 0.75 of a point again. We're going to be looking at objective things. What is the market doing? We're going to make decisions around trading in direction of the trend. It employs solid money management, like I talked about a little bit earlier, works on a lot of different time frames. You can apply it to any time frame, and works on a lot of instruments as well. In fact, a lot of times before, when we would go traveling, I'd go into London and I'd do exactly what I did before. Give me the stocks that you're interested in. Or I've done it in India or Singapore, wherever I happen to be, and say, hey, what stocks are you interested in? Let's take a look at your stocks. You don't care about my American stocks. And the reason I like this is something that works across a broad array of instruments. And it's very simple. It's objective. And I could spend a lot of time talking about, like, here's how system testing works. And that's another class that I do. But one of the goals that I'll have here for today is to give you enough information about MetaStock that at least you do what is called our extended trial, where you try it out for 3 months. And I actually think if you do that and you just trade with RMO and that's all you do, it's going to be successful for you. And it's a good way to get started. With MetaStock, you get a huge toolbox. We've been making it for 30 plus years. And this is something that you can learn about and use while you learn about the other tools and all the other stuff in your arsenal as well. So there you go. Okay. So since it's trend following, the first thing that we're going to do, Rick and Ollie, is we're going to look and we're going to talk about identifying the primary trend and how that works on a stock. So whenever I look at here, it's just a time check. We're doing good on time right now. Hopefully we'll stay there. So let's go ahead and look at that with J&G and silver and Boeing, another stock that's came up a little bit today, and Amazon. So here we go. I'm going to go ahead and close. This is Costco. I'm going to go ahead and close this out for now, and then we'll just open up a few charts. So there's Johnson & Johnson, which I believe the symbol for that is J&J for us. silver or USD JPY. I'm going to do JPY with currency symbols. In Metastock, you just do JPY equals. If it's a US dollar pair, you use the other pair and equals, and that's how you do it. We'll also do Amazon, and we'll do Boeing. Okay, and I think that's the right symbol for Boeing. It's been a minute since I've looked at Boeing, but yeah, okay, I got it right. Okay, so let's go ahead and open those up. We'll take a look at those particular stocks. And the first thing we're going to do again is we're going to identify the primary or the prevailing trend. Okay, what I've done here is this is just the Power Console in Metastock. I've got the chart tab open. We won't play too much with some of the other tabs. This is a quote center. This is a scanner. If we have some time, we'll do a scan and I'll show you how that works. But I've showed you scanning already. We've got the system tester, the forecaster, which is our patented. It looks at a bunch of statistics. It's really, really cool tool. Won't talk about it all today. And then a little bit of an option program that helps you do like graphs and option decay bars and those types of things. So let's go ahead and open these up. What I'm doing here is on this side, I've got, we're just going to open up 1,250 records. I'm going to apply the template RMO trade model. So I've come in here already. I've chosen the apply template. And what I've done is I've gone down to that RMO trade model. And that'll just apply all the indicators that we're going to talk about all at once. It's the same thing you would do as if you're looking at this at home. Okay, we're going to go ahead and open up the chart. And we'll go ahead and open up all 4 of these charts. We won't be looking at the commentary initially, so I'm going to go ahead and close that down just to save some screen real estate. And what I'm going to do here is actually kind of tile this out, okay? And kind of just take a look at it. And I think what I'm going to do, these charts, oh, I typed in the wrong symbol here. Let's try that again. There we go. Okay, now we have a chart for Amazon as well. Okay, and let's start with I don't know, Amazon, I guess. Okay, let's go ahead and make this into a full screen chart. And I'm going to zoom in a little bit. And to do that in Metastock, we're just going to kind of go into an amount of data that's somewhat feasible that you can kind of look at. Okay. Now the first thing, and what I was going to say, what I said initially is, again, this is a trend following methodology. So the first thing that we want to do is identify the trend. When we start to talk about trends in this, in terms of the way that Rahul looks at them, I'm going to be dealing with 3 different trends. There's the primary or the prevailing trend. Okay, that's the first one we're going to look at. The second one we're going to look at is a short-term trend. And then the third one is the moderate-term trend or the intermediate-term trend. Okay, so let's start with the primary or the prevailing trend. Okay, and to look at that, what I'm going to do is I'm going to actually look at what is called the Rahul Mohinder oscillator, this big green indicator. So I'm going to go ahead and just so you can see it and very, very well on the internet, what I'm going to do is I'm going to go ahead and make a full screen. Okay, and I'm going to make a couple of assumptions that are very, very easy to kind of understand with this. With this indicator, it's looking at the long-term trend, okay, and it's very, very easy to read. And one of the things that Rahul is very, very specific about it is he says size doesn't matter, shape doesn't matter. What we're looking at is we're looking to see what the primary prevailing trend is. Okay, now the way that we read this is I'm going to go ahead and bring in a little bit of a vertical line. It looks like my trend line things are gone here. I'm going to bring in like a little bit of a vertical line. I'm going to draw just a horizontal line right around 0. Okay, and then I'm going to double click on it. I'm going to make sure that it's exactly 0. Okay, I'm going to go ahead and click on OK. And what we're going to say is for the primary trend, what we're going to say is as long as it's above 0, that is bullish long term. Okay, so if we're kind of looking at this on 720, I'm going to go ahead and put a vertical line right here from when it went from negative to positive. On 720, it went positive. Okay, and so then it turned into a bullish trend. Okay, this whole time since December 2021, right here, it went from a bullish trend to a bearish trend, and that happened right around December 15th. Okay, so rule number 1 has to do with the trend and the primary trend. Okay, and the only way, the thing that we read about it is if it's above 0, it's bullish. If it's below 0, it's bearish. Okay, so you can look at the line if you want to. You can also look, there's a trend ribbon right here in Metastock right here at the very bottom that says the RMO is bearish or the RMO is bullish. So right now, since about 7:20 or so, it's been bullish. Okay, and it is going up lately. We had the two big gaps that we looked at earlier. It hasn't gone up a lot, but it's been bullish. And in the time that it's been bullish, it's went from about, let's see, what is the price here? I'm just getting the vertical line. Let's call it from here. Went from about the 120 area to about 135. So it's had a nice little $15 move up. Okay. Now we're looking historically. This is if Amazon had a 20-to-1 split earlier, and so it was in the thousands of dollars. Now it's in the hundreds of dollars. So this would have been thousands of dollars back in the time. But I would say that in the time previous to that, we were bearish since December. This whole area is bearish. And we went from a price of about, let's call it 170 or so, down to, well, a low of about 105. And by the time I went bullish again at 7, it was right here back at the 123. So the first rule is if we're in a bearish zone, like we were here, we're not allowed to take a long position, period. Okay, because we want to trade with the trend, it's our friend, et cetera, et cetera, et cetera. So during this huge downward move that we had, we wouldn't be taking any long positions. We'd only be looking to go short while it's going down. Okay, and I'd say immediately, or at least from that perspective, trading in the direction of the trend, only taking shorts while the stock is working its way down, by definition, is going to help us put the odds in our favor. Okay, not guarantee that it's going to work every time. Certainly, there's no guarantees that anything's going to work all the time. And certainly, you'll have losing trades. But by looking at the primary or the prevailing trend, I think we're helping our odds of having a successful trade. Okay, so step number 1, we're going to look at the primary or the prevailing trend. If we're in a bearish zone, we're allowed to go short. We're not allowed to go long. And we're not going to go short just because we're in a short-term trend that's negative. There's 2 other steps, a total of 3 steps that we want to look for. If we're looking at Amazon now, though, we'd be looking for a long position. We'd be looking to go long. Okay? Any questions so far? Make sure to type them out. Every time you see me looking in this direction, I'm looking to see if you have a question. So feel free to look at it. Okay? Step number 2. And let's go back into the PowerPoint because these are all kind of. Step 1, we identify that primary trend. If it's bullish, we're allowed to buy. We're not allowed to short. It's not a trigger to exit. Simply put, if we're bullish long term, we're not going to be looking to go short. We're looking to take advantage of the trend because it's our friend. So step 2, we're going to look at the short-term trend. So we looked at the long-term trend. Now we want to look at the short-term trend, and I'll show you how to do that on this chart as well. Okay, so right here, what I'm going to do is I'm going to open up and I'm going to full screen what Rahul calls swing trade number 2 and swing trade number 3. Okay, there is a slight difference to the way I like to look at my RMO charts, and I'm going to make that change now. And one of the things I'm going to say with Metastock is anytime you want to make a change, it's pretty easy to do. Just double click on the chart. What I'm going to do is I'm going to make this into a line. Okay. And now I can kind of see both the purple and the pink values. It's a little bit. I'd like to view this blue line as a line and not a histogram, just because it allows me to see all 3 of the lines. Okay, what we've got here, and it's a little clearer for me. What we've got here is the swing trade number 2. This little I'm going to call it purplish line, this purplish indicator, and I want you to ignore for now the blue line. Just pretend that we'll talk about it in a minute and the way that you use it to identify entry signals on a chart. But for now, what we're going to do is we're going to focus on this pink line. What I'm going to say is with the pink line, maybe it's purple. If you have a really good color for that, let me know. But what I want to be able to do is identify the short-term trend. Okay, so I'm going to grab that same horizontal tool right here. I'm going to put a line right on 0. And what I'm going to say is you read this the same way. Okay, in other words, if this is down below 0, short-term you're bearish. If it's up above 0, short-term you're bullish. Okay, short-term you're bearish, short-term you're bullish. Very easy to rate. Again, size and shape don't matter for this. What we're looking at is short-term, what are we looking Okay, I'm going to go ahead and move the lines to where the crossovers are again. Right here, we had a cross up above 0, so short term we would have been bullish. Here we had a cross down below 0 a few days earlier. And you'll notice that it is a lot faster because it's looking at a shorter time frame. The long-term indicator, the primary RMO, is going to take in a lot more data. It's going to be less volatile than when we're looking at a shorter time frame, as is always the case with indicators. So what I'm going to do here, we'll just put a couple more on these, okay? And what I'm going to do is actually show you the other way you can look at this, okay? So actually, I didn't mean to do that. I meant to do that, okay? You'll notice right here that when this is up above 0, the color of the chart is blue. So when it's short-term bearish or bullish, I'm sorry, it's going to be blue. When it's short-term bearish, it's going to be a red chart, okay, or a red bar on that chart, okay. So you can, again, you can look at the indicator right here, or you can look at the color of the bar. Obviously, when we're trading on Amazon, we're looking at the hard right edge. Right here, we've got a blue bar, which means that short-term we're bullish, and then we have a blue RMO or a green RMO or a green bullish sign. So we're bullish short-term and we're bullish long-term. That means if we got a signal to go long today in Amazon, we could structure a trade around it, okay? So what we want to do, same thing here, is if we're bearish long-term and we're bearish short-term, if we get a trade opportunity, we can take advantage of it, okay? And that's all it means, okay? So with the short term, what we want to do is we want it to match the primary term or the long-term trend. So if they're both bullish, we're allowed to buy. We're still not allowed to short because, again, we certainly don't want to go short at that point, and it's not a trigger, okay? If neither one of them match, like you don't have a long-term, or if they're giving you different signals, like you're long-term bullish and you're short-term bearish, you're going to wait for them to match, okay? You're not going to ever buy against one of those two trends. You want them to match, okay? Todd says the color is fuchsia. I should write that down. I always say purplish. Fuchsia sounds a little bit better. All right, cool. Thank you, Todd. All right. So once we have a match, right now in Amazon we have a match, and once you have a match, you're allowed to buy. Okay. There is one other thing that we want to look for, and I'll show you what that is here. And to do that, what we're going to do is we're going to look at the relationship between swing trade number 2, the fuchsia line, and the blue line. So let's go ahead and kind of make this full screen, okay? And I'll kind of show you what we're looking for with that. So unlike the other, the long-term and the short-term trend, we don't care if it's above 0. It doesn't need to be above 0. What we're looking for is the relationship between short-term and medium-term trend, okay? So what I want to do right here, I'm going to go ahead and kind of just clean up my chart as I go here, kind of get rid of some of the vertical lines. And what I'm looking for in very particular things is a crossover between my pink line and my blue line, my short-term trend and my medium-term trend. Right here, you had a little bit of time where that was down below 0. It crossed up above 0 right here, so that was a crossover, okay? Also, when it crosses down below, when the short-term comes down below, that's also a crossover. So I'm going to put another line there, okay? And here we had a cross up, okay? And we had a cross down right here. See it? Okay. Now these crosses, if the short term is getting more bullish than the medium term, it's considered, well, it's always considered a change of momentum or a change of force or change of direction, but it just signifies that the market is getting, if the short term is crossing up above the medium term trend, that's a bullish change of force. In other words, the momentum, it's a good time for us to say, well, the momentum may be shifting from the bears to the bulls. This is a good time for us to go ahead and place an entry, as long as long-term we're bullish and short-term we're bullish. And that's kind of what we want to look for, okay? So right here we had a bullish one. Here we had a bearish one. Here we had a bullish change of momentum and a bearish one. So if I'm looking at the chart, when those crosses of momentum happen, at that particular point, if I get a bullish one, I'm going to ignore it, at least until it goes bullish long term. Okay. What I want to do is I want to start back, and I'm going to change it. I'm going to start back from where it goes bullish here to where it goes bearish here. Okay. And what I'm going to do is I'm going to kind of just zoom in a little bit. And I want to show you exactly, because Rahul is very, very specific about where you should put your stop losses, what you should be doing with your trades. And I just kind of want to be able to explain it to you. And so we'll start right about here. Okay. Here, if we were looking, this was back in November. This was right around Black Friday, in fact. And I believe that is Black Friday. I had to look at the exact date, but this is November 29th, 2021. We get a short signal. Okay. Now, if we kind of look at the rules here, we're bullish long term, so we're going to disregard it. And on the date that that signal came in, right here, we're also bearish or bullish long term. So as long as that stays bullish long term and bullish short term, we're not going to do anything. Okay. So we wait. We're allowed to wait. We can be patient here. Here, we're still starting to lose some ground, but we get bearish short term. Okay. So we're still going to wait because we're bullish long term still. So we want all three things to match before we get in. And I want to make what I feel is an important point. Okay. One of my favorite speakers, real quick, was a guy by the name of Robert Deal, a good friend of Metastock. And he was probably one of the first persons I ever traveled with in the seminars that we did. I remember that one of the things that he would say, he was the son of a preacher man, and he was a great speaker. He's a better speaker than I'll ever be. But one of the things that he'd always say that always kind of hit me pretty hard was bulls will make money, bears will make money, but pigs will get slaughtered. And the reason I like to say that when we talk about RMO is a lot of times the comments that I'll get is like, well, you're eventually going to go short on this, but why wouldn't you go short at $185, right? Why are you going to wait until the trend gets weak enough and then take a short position? And the reason, the reason is because we want the trend to identify. Our goal here isn't to get the exact bottom and get the exact top. What we're looking for is we're looking to identify a long extended trend and then take advantage of that trend while things go downwards. Okay, so does that make sense for you? So while you're doing trend following methodologies, you're never going to find an exact top, and you're never going to get out at the exact bottom going short, or in at the exact bottom if you're going long. What we're going to do is we're going to identify these prolonged periods of down and try to take advantage of going short of that, or the prolonged periods of up and take significant profits around those trends. Okay, so don't be a pig. Don't get slaughtered. Okay, in any case, a little bit of a divergence. Here we get a little bit of a short term, but goes back up and it gets short-term bullish for a little bit. Okay, it isn't until right here, and this is December, right here you'll notice right here it goes bearish. Okay, so it's been kind of sideways and a little bit weak and trying to decide if it wants to go up or down for quite some time. It finally goes bearish on 12/15, December 15th. Okay. Now, at this particular case, within about the last 10 or 14 bars, we had your short position. We had that signal of weakness. We had this other signal of weakness. Now we're bearish long term, as you can see with this RMO being bearish. We're bearish short term, as you can see with your fuchsia colored indicator and the red colored bar. Okay. Now everything's kind of lined up and we can take that trade. Okay. Now there's two things when everything lines up. There's two things that I think are very, very important for you to do and that Rahul teaches in the classes that he talks about. So again, December 15th, this is the day that we're looking at to go short. And now to identify where we want to go short, what I'm going to do is I'm going to take a look at the low of that bar, which is right there. I'm going to look at the low of the bar before. I'm going to say out of those two lows, this low is lower. Okay. And what I'm going to do is I'm going to place a vertical line right there. Okay. Right here, 12/15, right below that. And there's just a little bit of white space. I don't leave very much there, but that's where I'm going to go ahead. And if the price of Amazon goes below this price, that's where I'm going to short it. Okay. What Rahul likes to do at this particular point is he wants just that additional confirmation that this isn't going to continue to go sideways the way it's been going for a while. He wants that confirmation that that area is broken and that we're going down. Okay, so that's the first thing. The second thing that Rahul does, and again, I talk about how he likes to kind of have a stop loss, and he's very specific about it. Rahul teaches 2 stop losses actually, and I'll teach you both of them, but I'll tell you which one I prefer. The first one that he looks at is the highs. So right here where we're looking at this low and this low, we could look at this high and this high, and if I was putting my stop loss here, I'd put it right above that high. Okay, so if I ever go short into that, that's the part that I'm going to get out. Me personally, I prefer to have a little bit of a looser stop loss. So what I would be looking at is his second method. So the second method, what he looks for is a recent area of resistance on a short position. So if I was looking at that, here is our entry spot. If I'm looking backward, this right here might be a very good area of resistance where you could put a stop loss. That's probably where I put it, or you could put it right here as well. Now, to be very, very specific, and this isn't something that Rahul teaches, it's just something that I like. The way that I like to place the stop is I look for the last pivot high. Okay, so if I'm taking a short position, I'll look for the last pivot high. If you're not familiar with what a pivot high is, it's easy. You look for a high that has 2 lower highs on either side, which I think is going to put it right. Okay, so where are we entering again? November 15th, right here is where we're structuring it. I have this high right here. And if you look next to door, this high is lower, this high is lower, this is the high I'm going to go with. And that's how I very specifically choose a stop. Okay, even if I'm not using IMO, I'll use that pivot high. So right here, if it goes down below 164.18, which wasn't the price it was, remember there's a 20-to-1 split. But I don't remember what the price was on that particular day. But if it goes down below 164, and what was it, 28, 18, we're going to go short. Okay. If we go short because of that, for any reason, if it goes up above 178, that's where we're going to take our profit. Okay. Or our loss. Well, I guess at 178, it's going to be a loss, right? So 178.84. Okay. All right. My entry, my exit, okay? My risk is the difference between the entry and the exit. So, well, you know, unless there's a gap or something like that. But that's what I like about this, is if we're going to take a position here, what we want to be able to do is be able to establish, okay, well, I'm going short at 164. Unless there's a huge gap on Amazon, my stop is going to be as close to 178 as I can get it. That's going to be kind of a measurement of risk. The other thing I like about stop losses is I'm not making that decision after I get in the trade. I mean, I'm guilty of this too. Have you ever bought a stock and be like, okay, well, it's going to get me now. Should I get out? Right? Oh, well, I should have got out yesterday, but what about today? Well, I think it's just kind of a little bit of a retracement. These aren't decisions that you should be making while you're in a trade. You should have these made in advance so that you kind of know exactly what you're doing. It's a business plan around trading, right? So in this particular case, on December 15th, we made the decision to go short if it gets down below this area, and then get out of that trade if it goes up above 178.84. Okay. I really also like the fact that our stop isn't based on like what we can afford to lose. We're looking at where resistance is, and if that resistance is then penetrated, we'll get out. Okay. So here's where we get in right here. So it's almost a month later, 1/6 after getting the signal and deciding on 12/15, almost a half a month later. Here we get a signal to go in, starts to go down a little bit. It shows weakness. Here we get a little bit of a buy signal. I'm just taking a look at the time. We're doing okay still. Okay. When you get a buy signal and you're in a short position like we are right now, there's 2 things that you want to start to pay attention to. One, the trend, long-term and short-term, right? Because if we're down here and all of a sudden we go long-term bullish and short-term bullish, you're going to get out immediately, and then you're going to start to do the same thing to the long side to structure the trade. Okay. A lot of times, though, the market does come up, down in steps, and it moves up in steps. And so in this particular case, it gives us a long signal. The very next day, it gives us a short signal. And with Rahul's method, when you get a short signal in the same direction, you can use that as an opportunity to move up your stop, okay? Or move down your stop if you're in a short position, right? So right here where I get this opportunity here where it shows me that it might be going down a little bit, I'm gonna go ahead and move my stop. I'm gonna use the same methodology I used before, okay? So I'm gonna look at the high, and I'm gonna look for the nearest pivot high, which in that particular case is right here, okay? And it turns out that stop is a 156. Our entry was at 164, and we actually stopped out the very next day, okay? So we made a little bit of money, 164 to 156, 8 points, okay, ish. Hopefully my math, I'm not really that great. Here we get another long signal on that same day that we stopped out. Here we get another short entry position. And this is a good example of not every single trade is going to necessarily work, but let's just kind of game it out real quick. We have a little bit of time. So if we go ahead and put our entry right below that low, again, this is the lower value of the low in the previous, so that's where we're going to get in. And go ahead and delete these things off of here, okay? And if I'm looking at stop loss, my pivot high is going to be right here. I'm going to hit it. You can tell just by looking to the left a little bit, right here. So in this particular case, we would have went in short when it kind of went down and opened below that line. Okay, we would have stopped out here. Okay, we're going to ignore this long position. That's a little bit of a loss. Okay, which happens. Okay, we're going to ignore this position here because we never went bullish. Okay, here we get another opportunity. We're still weak long term. I'm just deleting this off of the chart. Okay, so here we get another opportunity. We're going to go ahead and take a position right here. And you notice how easy this gets. We're just looking at what the chart is doing. Right here we have 153 as our entry price. Okay, my recent pivot high is going to be probably right here. Okay, right here is where I'd put it. A high surrounded by two higher highs. Okay, here we go down very, very substantially. We get a pullback. I'm going to go ahead and delete this vertical line here. We get it goes up a little bit, kind of starts to work down a bit more. We get that signal. Here's where we're going to move our stop and make sure that we get out of there at a profit. And what I'm going to do is I put my stop right about here. Okay, right there. Okay, went a little bit sideways here. And in this particular last scenario, you've got your bullish trade. Things start to get bullish. And instead of waiting for your stop loss, you get out when everything gets bullish right here. So actually, that's a pretty good example of using all of the things. So we'd get out right here. We would have missed that gap positive. We'd be structuring a long trade, in fact. And we probably would have bought on that gap up. There's a bit of a gap that happened. If we look at where everything kind of lines up and put a trade in here, we would have bought after that gap up. It would have gapped into the trade. And when that happens, if there's a big gap up for Amazon, what you want to do is kind of reassess your risk. Okay, well, my stop loss is still down here at support. My entry is here. I'm comfortable with that big of a loss. So there you go. Don't see a lot of questions coming in. Still doing good on time though. So that's how it works. In general, we'll kind of scroll out and look at a little bit of a larger view. But again, like what we were talking about before, this thing has been bullish during that big move down. Right now it's bullish. It's bearish that whole move down. I would say by just taking short positions while the stock is falling, not taking any long positions, we're going to put the odds in our favor. Let's look at JPY for Oli real quick. Now, this is a daily chart. So I know with Forex, you can control your leverage and that kind of stuff. The thing I really want to point out for that, let me go ahead and zoom in a little bit on this chart. So I'm going to go ahead and just kind of scroll in and we can kind of take a look at this. Looking at the long-term trend right here, since February of 2021, we've been, the RMO indicator, the RMO oscillator has been bullish with a few exceptions. You have a little bit of weakness here, a little bit of weakness here, a little bit of weakness here. But JPY has been going up. In fact, with our new trend line tool, I really like this in the new trend line. If I can come up here, I'd say that right now, well, if we look at to the peak, JPY has gone up 35 34% over that 379 bars. We're still bullish, so let's count it to the very end here. Is up about 28%. And that whole time, if you're just following the signals, just going long when it tells you to go long, short when it go, and ignoring the short positions, just the fact that it's been going up that whole time and bearish that whole time is going to put the odds in your favor. Obviously, probably if you're with this particular one, if you're a forex trader, if you're leveraged, if you have a little bit more time than me, you probably want to look at a 60-minute chart. But this is by itself a good way. Trade in the direction of that trend. Now, it does look like it's kind of coming back down. We'll see if it rolls over to a bullish, or from bullish to bearish. That might very well happen. Right now, it's been very, very bullish for this 28% increase in the JPY equals. So I'd say with that, you're putting the odds in your favor. We could game this out too if we put on our stops and stuff like that. I think you get the idea in terms of how all that works. If you do have questions, let me know. So I'll go ahead and go back over here. We'll look at a couple more examples. Well, let's look at J&J. Now, J&J, with this one, you have a lot more choppiness. If you just look at where the choppiness of where this chart is, this is a trend following system. And you can just tell, looking at the trend, red, green, red, green, red, green. It's a Christmas tree down there, right there. So, well, I don't know that this would be I don't think this is a system that you would want to trade with J&J. There's just not a trend there. More you're looking for like those stocks that generally tend to stay in the trend. Just looking at this, look at the RMO, bullish, bearish, bullish, bearish, bullish. The stock can't decide where it wants to go, and I wouldn't trade it with RMO, to be frank. Okay, and that's okay. That's not a big deal. Let's take a look at Boeing though. Boeing's a kind of an interesting story now. Again, it's been in a fairly established downtrend. This is still a little bit more Christmas tree. But look at this huge bearish zone and all of the trades now. What's kind of interesting about Boeing now is you had a huge bearish area that kind of looks like it's rolling over. And if we're just looking at this, again, it's not a recommendation to buy, but we've had this nice little movement down. You just got this bullish signal that happened right here. It's been bearish for a while. Right now, it's kind of bullish. This might be something to look to structure a trade around. Again, we don't recommend that you trade on any specific things, but right now, bullish long-term, bullish short-term, and a nice little bit of a movement up. So take with that what you want. If we look at the before, it's a nice little movement down with some nice little signals that came in. So again, it's designed to be objective. And one thing I would kind of talk to you about as we kind of get into a little bit more about trading, is you have the ability to look at as many of these signals as you want. This is one of maybe 200 or 300 systems that are in Metastock. I like it because it's very objective. It helps you use money management, and it's just worked well year over year over year. But the biggest thing that you have as an advantage when you start as a trader is the ability to go in and look at signals that happened in the past, decide what you want to do, back test them, get comfortable with the way things are running. Okay, and if you're opening up a business, you probably spend a lot of time kind of figuring out what your drawdowns look like, what your stops look like, what your, what your inventory costs are, what your employee costs are, and that kind of stuff. You should treat trading with that same level of the things. Now, you won't have employee costs unless you're hiring employees, right? You don't have inventory costs, but you can go out and using Metastock, you can test and see exactly what your drawdowns look like, how many times you lose versus how many times you win, and all that stuff is very, very back testable. The other thing, since we have just a couple minutes here, is finding patterns. So if I wanted to find, let's say I didn't like or didn't find something I liked, everything was giving me conflicting signals, the scanning is something I use every single trading day almost, unless I miss the market close. That happens more than I'd like to admit, where I'm actually kind of really busy at something at work and just miss the close. But what I like to do is I'd like to kind of come in here and I like to be able to go through stocks and find the ones that are hitting my parameters. or find those candlestick patterns, or find those, we've had some really good victory patterns. RMO has some scanning in here as well. If I'll just show the RMO scans to you. So you've got the bearish zone, the bullish zone, new blue, new red. Those are the RMO scans that you can run. So if I want to get a list together of all the bullish stocks that are also short term in a new trend blue, what I can do is I can select both of those explorations. What I'm going to do is I'm actually going to run, somebody was running a scan against the Canadian ETFs. That's interesting. Okay, but I'm not going to run that scan. I'm just going to run a real quick scan to show you how easy it is. What I'm going to do here is we'll come in. I'm going to open up our public list right here. Again, there's 313,000 stocks. If you're watching this in India, you can do NSE stocks. You can do Bombay Stock Exchange stocks. If you're watching from Australia, there's over 200 exchanges that are included as part of the data that we offer. What I'm going to do, just to kind of keep things quick, I'm going to go to Index Constituents. I'm going to go to the Dow Jones 30. Okay, I'm going to do all those 30 Dow stocks. I'll grab the S&P 500 and the NASDAQ 100 as well. Okay, I'm just going to scan those major index stocks. I'm going to use the results from the preceding expiration. So it's going to check to see if it's in a bullish zone. If it is, it's then going to fit into the second list. So we'll go ahead and start that expiration. It's going to go through those two lists for me. It's going to say, okay, are we in a bullish zone? And do we have a new blue trend? Okay, and as long as those meet both of those exploration parameters, it's going to kind of give us a true feedback. So, hey, Scott, it's good to see you. It's nice to see you. Scott says, always nice to see Metastock and Jeff Gibby teaching the RMO. It's always good to see you come in. I didn't see you in here yet. So thanks for coming in. All right. Am I going to let this finish? Yeah. Let's go ahead and do that. We have enough time. So you'll notice right now it's gone through about 524 stocks. There's a little bit of overlap. It's now I rejected about 98% of them. It's going through the remaining 374 right now, rejecting 99% of those. So you can see when you're feeding these types of explorations against a huge list, it's a really, really good way to kind of narrow down what you're looking at. And I think one of the best things that we do, if you're looking at other platforms, scanning, that ability to go through and eject all of the stocks that are just not interested, and I'll focus on just out of the one, in this case, that has an opportunity. Well, now we can open up this chart. We didn't have to look at 526 of them or whatever. I love scanning. I run my scans every day as long as, like I said, as long as I don't miss the market close. And so here, you could take a look at this one. This one is BJS Wells Club. Not sure what that is. It looks pretty good. This is something that it could consider and kind of take a closer look at. So, in any case, that's a little bit of the RMO. So, I didn't come back to the slides to recap the rules on this. Oh, I need to stop and pause in that video. Okay. All right. Again, just the reason I like to talk about that. We'll just recap real quick here. It's objective. It's easy. Uses solid money management. Works on a lot of different timeframes and a lot of different instruments. And it's a very, very easy 3-step process. And certainly with some of the other classes I teach where we kind of go in and look at system tests and kind of evaluate the best tests and kind of like what I like to look for and stuff like that. This is an easy class. But again, it's something that I think if you just take advantage of the extended trial, which I'm about to tell you about, and start to use it, it's something that you can just trade with and make money, and it'll be helpful for you. Okay. Again, that's not a guarantee. You should definitely paper trade for a long, long time. So in terms of how much it costs, we have 2 different versions of Metastock. We have our Metastock Real Time, which actually starts at about $265 a month. I'm going to actually do a little bit of on-the-fly editing. Okay, here we go. $265 a month. That includes your Zenith data, real time, your market data, and news. It doesn't include any exchange fees. One thing that's actually pretty cool about what's included there is I talked a little bit about how Refinitiv is a Bloomberg competitor. They spent over $1 billion designing a product to compete directly with Bloomberg. And all of that information that they provide is available as part of our Zenith package. Okay, and that's included. For $265 a month, you'll get the Metastock program. You'll get the ability to test trading ideas, run market scans, our forecaster. You're also going to get all of that premium level institutional data. Okay, so $265 a month is what you'll pay for that, which is significantly less than if you're a bank or hedge fund signing up for it. Okay, we have a real-time version, $69 per month. That basically includes Metastock, which includes the RMO model and everything we talked about today with the scanning. Doesn't include all those really cool add-ons that part of the Summit deal, but it's only $69 per month and includes the big engine that allows you to drive everything. That includes data link, data for whatever region you're interested in, whether that's Europe, Middle East and Africa, Asia Pacific, North America, South America, whatever it happens to be. When you sign up, you can select the region that you want. So that'll be $69 per month. As part of that, what we're going to do here is I'm going to give you an extended trial. So if you pay for a month, we're going to give you the second month free, and we're going to give you the third month for free. So I mean, $69 divided by 3 is going to be about $23 per month is what you're going to pay to literally run the software that's been rated #1 in its price category for 29 years straight, like in a row. Okay. As part of that, you'll get 3 months of Metastock. You'll get Metastock, you'll get data. We're going to include an Unleash the Power of Metastock, which is going to be a training video that is normally $99. We actually, and one of our speakers, this is so cool that I think Tompkins was talking about it. We also provide with that a white glove installation support, where we'll have somebody call you, they'll walk you through some of the tools, they'll answer any questions you have. It's a one-on-one appointment. We call it a white glove installation. Okay. And we'll give you that training, the Unleash the Power of Metastock, that's part of it. You do get, as part of that, unlimited access to the platform, unlimited access to our Utah-based support team. We actually keep more people in support than we keep in sales and marketing put together. So that's really, really cool. So you'll get Metastock, you'll get data for the region of your choice, that white glove installation support, and Unleash the Power of Metastock. All that's available. To sign up for that, go to give us a call at 800-882-3040. You can also visit us online at metastock.com/saleschat. Okay. If the other thing that we're talking about all day today is the Metastock Summit Traders Action Pack, that includes some of our most popular add-ons. Steve Bigelow's Candle Profit System, the Jeff Tompkins Trade Trend, the Vince Vora's Victory Method, the brand new Power Bundle 360, the 3S code, 2 years of stocks and commodities, 3 months of learnmetastock.com, and Unleash the Power of Metastock, the workbook and the videos. Normally that's $5,126. Here at the event today, it's going to be $2,385. So you can take advantage of that at, Hima, it's good to see you, at metastock.com/summit deal. You can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. So I hope that was helpful for you. Hope you enjoyed it. Maybe you learned what a pivot was. In any case, this time I do want to actually, I'm going to do another little bit of on-the-fly editing here. I think it's been a minute since I talked about stocks and commodities. So I do want to say thank you to Stocks and Commodities for sponsoring the event today. Their magazine is amazing. It's great. I've been getting it ever since I started here. They send us copies in the mail. 17,000 articles, 1.3 million subscribers. I've been writing it since 1982. If you're watching us on YouTube, right after you hit like and subscribe, go over to metastock.com/tradersummit, fill out the registration form, and you can get a free copy, as well as like a whole bunch of other bonuses that the presenters put together. So again, metastock.com/tradersummit to sign up for a free issue of Stocks and Commodities. And thank you, Stocks and Commodities, for sponsoring us. We just talked about Metastock for a while, so I already talked about that. Our next presenter is Hima Reddy. Hima has been a speaker at Metastock at a number of these events. She does a really, really good job. I like what she has to talk about. I like the way she kind of talks about it. She's going to talk about her power zones and a lot of good things. I know she's prepared a lot of brand new PowerPoint or brand new charts and examples. And let's go ahead and welcome her in here. How are you doing today, Hima?
I'm good, Jeff. How are you?
Good. You sound awesome. How's your summer going?
It's going good. It's a little steamy here in Texas. Getting used to that, but going pretty good.
Yeah, cool. We're at 100, I think, today. No. According to Windows, it's 76. I don't believe it. All right.
Oh, okay.
Let's go ahead and make you the presenter here. Okay,
Great.
you are. So you should be
And
able
can you
to.
see my screen here, my slide screen?
Yes, I
Okay.
am. But it looks like I'm looking at this. I'm looking at in any market on any time frame Hima. So I
Yeah.
might be looking at the wrong sleeve.
That's me. Okay. And then here I am. Hello. Just saying hi,
Hey.
camera. I'll be back for Q&A at the end. Okay.
Okay. All right. I'll get out of the way.
Okay. Awesome. All right. So welcome, everyone. Excited to dive in here this afternoon. Thanks to Jeff and
Oh,
Metastock.
Hima, before I let you go too far, I think you're sharing your speaker notes is why it looks a little funny to me. Because I see,
Oh.
hey guys. So
Yes, that's why I was double checking. All right.
yeah.
Thank you for letting me know that.
Of course.
I don't
glad
even
we caught it
go off
early
of
on.
those are just there for reference, but okay, let me try this one more time and see. Now, people can see your screen, but it's not giving me a choice. And I have two screens, so I didn't know
Okay.
what
No
to do
problem.
there.
So do you see in the console where it says sharing?
In the console. Oh, yes. Okay.
Yeah. Okay. If you click
Ah,
down.
there it is.
you can
Okay.
actually define-
Yep.
Yeah.
Guess it's
So,
been a while
yeah,
since
that-
I've been on GoToWebinar. Thank you.
You got it. And we can see
Okay.
your screen now. So you,
All right,
you
terrific.
sound great. And we've got the right screen. I promise I'm
Yeah.
out of your way this time.
All right, good. It's good I didn't have anything too scandalous up on my screen, huh? All right. Now you can see it, and it's just the clean screen here, right, Jeff? Okay.
That is correct. And I've actually shared all kinds of internal stuff on accident before. In
Oh,
that
have
screen,
you?
so-
Okay. All right. Well, listen.
yeah, at least I wasn't too
it
big.
happens, as they
But yeah,
say.
everything's
So
right.
I am just looking to where I can see everybody chatting here in the room, and definitely respond if you guys have questions, or I'll take them at the end as well. All right. So, like Jeff said, yes, I'm here to talk about momentum, specifically my indicator that I love to use that Metastock also does provide. And so today, very exciting, for the first time ever, you're going to see I have a completely updated presentation. You've not seen any of this before with these chart examples, all pulled from recent times, pandemic, crazy 2022 and more. So everyone who's here live, who's in the room, if you could just type a Y in your chat or your question box, I just want to kind of see who's here, see who's around, and say hello. And I'd love to know where you're dialing in from. Like, where are you trading from? Right. I'm here in Austin, Texas, and I just love how you can trade and invest from anywhere in the world. So would love to hear where you guys are dialing in from, and we'll dive on right in here. All right, so you're here for how to trade momentum, get a sneak peek behind the one Jedi indicator that helps me accurately predict turns and large moves in any market on any time frame. So let me ask you, have you ever wondered what it would be like to have an expert analyst in your back pocket? Have you ever wondered what it would be like to finally trade with confidence? Have you ever wondered what it would be like to finally make enough with trading that you could live the life you deserve? Would you like me to share an easy way to amplify the power of an indicator that's in every single trading system out there? Would you like me to share an easy pattern that allows me to predict trends in price and momentum for you? Would you like me to share an easy way to trade futures, stocks, and options? Now, how many of you want to get as much as possible out of our time together? Now, I want that for you too. Because for most of you here with me today, this is going to be a long-term relationship. Once I show you how simple this is, once I show you how easy it is to consistently extract money from the markets, once I show you how fast your business and life can grow, you'll want to hang out with me for a lifetime. So in a moment, you're about to discover how to make money with futures, stocks, and options, even if you suck at picking them yourself. You're about to discover how to capitalize off making trades the best prices and the best times. In a moment, you're about to discover how to catch market turns and ride the price waves up and down in only minutes a day. Would you like me to show you that? Okay, awesome. I promise that by the end of our time today, you'll know everything you need to pick the best trade, when to enter, and when to exit in only minutes a day. So would that be okay if I pull back that curtain for you? Great, because here's the problem, right? Many traders are making it way too complicated. Many traders are getting hammered by the trends because you haven't found a consistent way to produce profits by yourself. And it's not your fault, okay? They make it complicated. So as you listen to me now, know my intention is to help you fix that problem because you're ready to take action now. Right, notice I'm going to be absolutely upfront and transparent with you today. I'm going to show you current case studies and figures today. And guys, this is especially a big deal today because with Jeff's help, I actually got fresh, hot meta stock charts off the press. So we're going to look at price action up through Friday of last week, okay? Taking us into this crazy summer of 2022 we've had. So I want you to remember that trading involves risk, and it's your responsibility to evaluate any information, opinion, advice, or other content contained within my presentation. Your results are up to you. I can't predict them. I'm not going to predict them. Anyone who says they can is lying to you, okay? I don't know your trading plan, your account size, or your markets. I can only show you what's working for myself and others. Your success is up to you. So who am I and why listen, right? Well, if you haven't been following me for a while, here's a mercifully short introduction. I'm Hima Reddy, and I'm originally from New York, the hotbed of the markets. I started out at 16 years old learning futures trading from my dad, who was a successful trader in the Gann style of trading. In fact, my dad was so far ahead of his time that he got a chunk of Amazon stock right at the beginning. Now, I went on to become a certified CMT working as an analyst at Piper Jaffray before going on my own to help traders directly. And over the past 20 years, between my professional analysis on Wall Street and my international publications and my proprietary analysis and education, I've helped hundreds of thousands of individuals create a sound plan for their financial future. So I'm an international speaker presenting to institutional portfolio managers and analysts, as well as individual traders like you guys. And I've been blessed to appear in the Wall Street Journal, Barron's, Bloomberg, Reuters, The Street, Benzinga, and all the media alphabet. I'm also the author of The Trading Methods of W.D. Gann. So how did I get here? Well, that's quite a story. Is it okay if I take a few minutes and tell you my story? It'll go by like that. Okay, so here we go. Now I'm a successful trader and educator, but it hasn't always been like this. Years ago, life seemed great, okay? I was in the center of the action as an analyst with Piper Jaffray, making them a ton of money, starting work at 5 a.m., working late, and burning out quickly. Does this sound familiar to any of you? Anybody else a corporate cog, working hard, making someone else rich? I know, right? So I thought there must be more to life. I mean, the money was good, don't get me wrong, but I never got to see my family. You know what I mean, right? I started becoming a ghost in my own life. I'll never forget the moment the bottom just dropped out of my world when my beloved dad and mentor died suddenly. And at first it felt like my whole world was crashing in. I had to leave my job to tend to financial and legal family matters too. But then I realized, this is my ray of light. This is my hope to get out of that corporate grind. And I seized it with both hands. You see, while I was apprenticing with my dad to learn the markets, I had started a futures report that I called my Skinny on the Mini. Okay, it started out as just another exercise, but soon my dad started making money with it and relying on my little report. And I started sharing it with other traders too, and they were benefiting. But all that stopped when I was in that corporate world, right? Conflicts of interest. And all those years, those traders were hounding me to get the report back. So when I had to leave my job and take over my dad's accounts to trade for my mom's future, I realized that it was my time to bring back the Skinny on the Mini and reclaim my life. So I sent out the call to my former subscribers, and they said yes. They would love to get back my report that ROI'd on average 7 times out of 10. Okay, they couldn't wait to leave that hard work to me again. The result? I had time to trade my dad's and my accounts again. I started maximizing the trading methods of W.D. Gann and became the leading expert on Gann. I started teaching others the hard-earned secrets that I had learned from my late father, and in a moment, I'm going to share those very secrets with you. Because what I've discovered is that trading equals freedom. Trading equals what, guys? Right, freedom. I mean, there's only so much time in each day. And when I found this system, I got my time back and my family back. And that's freedom, right? That's what we all want, right? We are all trading for some type of freedom. Type it for me in the chat. Are you trading for time freedom? Type of Y. Are you trading for money freedom? Type of Y. Maybe location freedom, so you can be on a boat somewhere with Wi-Fi and trade. I mean, wouldn't that be awesome? Type of Y in the chat if you're trading for some type of freedom here, guys. And this should be everyone. Yeah, it is awesome, but clearly there are challenges. Many traders lose money because they don't have a proven system, okay? Trading often feels complicated and overwhelming. Often it can be confusing, right? Well, they made it confusing and complicated because you don't have a simple proven system, because what I'm about to share wasn't available until now. And now that it is, you've got to have your winning RSI playbook. And you'll immediately notice how much easier it is to make money trading stocks, options, futures, and more. And I'll show you that a little later. So what's different about the winning RSI playbook? The winning RSI playbook gets you started with my Jedi indicator and exact settings, along with market examples that help you accurately predict turns and large moves in any market on any time frame. But more on that in a bit. Okay, first we're going to dive right in. So trading momentum can be easy, but first you need to understand how it works. Now, I'm sure we have traders of all levels here in this room, so we're going to get us all to the same foundation and use a Formula One car racing track to have us all understanding momentum the same way in no time. Are you ready? Just type a Y for me in the chat. All right, awesome. Let's head to the track. So let's put ourselves in the driver's seat, okay? You are starting at the first line here in the track. You rev up your engine in that hot little red car and you go. Now you pick up speed really quickly or accelerate on the straight runs of the track. Then you see a turn coming up and you prepare accordingly. Now you ease off the gas to slow down or decelerate, even if it's just a little bit, so that you can have more control as that car whips to the other side of the turn. Then after you make the turn and the road straightens out again, you hit the accelerator once more. So are you guys getting the idea of how you'd accelerate and decelerate on this track? Well, if you do, then you know exactly how momentum works. So let's take this, let's go up in that helicopter and translate this over to a price chart. So if you're up in that helicopter looking down on the track, what you'll see is a bird's eye view of it, right? And in that case, the racetrack becomes price as you see it on your stock charts. And momentum is generally plotted on the bottom as what's called a subchart. Making sense? Okay, great. So when price is trending higher, you've got upward momentum that's improving. Now that upward momentum generally begins to slow down and peak before price does, making momentum a leading indicator. Now in situations of falling prices, there's falling momentum that's becoming a more and more powerful force. But when a price bottom is approaching, you usually see momentum bottom first. Therefore, momentum indicators can warn you about hidden strength or weakness, giving you a heads up, especially when it comes to potential market turns. Making sense, guys? This is real simple foundation, but we got to establish it before we move on. So type a line in the chat. Let me know if you have any questions, and we will keep moving along here. All right, fantastic. Now we're going to dive into the indicator. Okay, but first, let me share with you results from my trading family. Hima, I value your insights. Your momentum indicator is an integral part of what I've put together. I believe I'm ready to go from paper to live trading, said Jim. Go Jim, right? All right, now that I've made momentum easy to understand, okay, in a moment, I'm going to show you how you can make money trading momentum. But first, do you guys want to peek inside this indicator? Would you like to get to know it, go on a little date, see how you like it? All right. I'm going to let you peek behind the scenes of my trading and show you how momentum moves through markets that you know using this special Jedi indicator. And that indicator is called the RSI power zones. Now you can use it on any market in any time frame. So here's a few combinations listed here. So I want to take a moment for those of you here with me live to let me know in the question box, in the chat here, what markets do you trade with what time frame? For example, if I was sending this out, I trade the E-mini S&P, and my main trading time frame is 3 minutes. That's how I'd enter that. Go ahead and let me know in the chat, what do you guys trade? What are you looking at in the markets? Because I want to show you by using a variety of examples here that this applies to all types of markets and time frames, right? Not just the one I trade. So down the left here, we have a variety of asset classes, and we have different time frames on the right. There's more than the ones shown here. So we're going to look at a daily chart for today's examples because I wanted to really kind of get the essence of the trend no matter what you're doing. So if you're an intraday trader or if you're a longer term trader, the daily chart is very helpful here. But like I said, in the winning RSI playbook, I have examples of multiple time frames that cover different types of markets. Okay, great. We have Glenn here, who's an options trader using a 5-minute chart. Fantastic. You'll definitely be able to plot the RSI power zones there. And I think you guys let me know, we're going to explore more of the types of markets you trade, but let's start with one that I know everyone's familiar with here, okay? It's a commodity. And again, we're going to look at it on a daily time frame. Now, this is an extremely recent capture of the daily chart of oil. Okay. Full name, NYMEX WTI light sweet crude oil futures. And this is specifically the September 2022 contract, which Jeff kindly grabbed for me. And I have completely taken the recent action. Guys, I didn't even go back past 1 year. Even though I've been using this indicator for 20 plus years, I wanted to show you fresh here today that even in recent market action, this has been extremely helpful, even with the trendless environments, even with the choppy back and forth. All right, so let's take a look, okay? Everyone bring your eyeballs. So you're gonna follow my little purple cursor here. Bring your eyes to the bottom left of the screen. Are you there? Okay, notice that's August 2021, okay? I'm not going way far back in history. Now what you see here, this black squiggly line is the RSI, and these red and green lines determine what I call the power zones. Now the full settings and more are in the Winning RSI playbook, but here let me just give you the verbal description of these zones. You can follow along. So the two lower red lines make the bear support power zone, and you'll see why I call it that as we dive into the indicator. The two lower green lines are the bull support power zone. The two upper red lines are the bear resistance power zone, and the two upper green lines are the bull resistance power zone. Now, here's the thing, guys. The reason that the RSI power zones work better this way, which you're going to see shortly, is because the original RSI was designed for a trendless environment or a sideways range. It didn't really give you what you needed when the market was moving strong in one direction or another. But the best trades come from when we ride those big trend waves, right? So now you're going to see how as markets shift and change, the RSI power zones can give you that heads up and guide you. So we're going to go on a little date here with RSI power zones and crude oil, and then maybe a second date if you're ready, and then we'll dive in deeper from there, okay? So let's start with the oil rally last fall. Everybody remember that? Started up in September, really kind of kept going through Halloween. And notice that as that rally unfolded, marked by this orange arrow, the RSI power zones moved from the bull support zone to the bull resistance zone. And again, these are not your mama's levels of overbought and oversold, guys. And it's extremely important to understand that these are not customized to a certain market. These are not tweaked on time frame. The RSI power zones indicator is fixed, and it doesn't matter if you're in a daily chart, on oil, or anything else, it stays the same, okay? So that move from one green zone to another would have allowed you to kind of focus on the long move higher and not get caught up in any of those short moves along the way. Now notice there was a consolidation. It kind of went sideways there for a few weeks. Then we pulled back lower. And when it pulled back lower, the RSI power zones went back to the bear support power zone. Guys, can you see how being aware of that peak right here, this peak that I'm circling up, touching, kissing that bull resistance power zone, how it would have been having you more on guard for a timely exit of your longs in the market and then staying out of the way of consolidation, right? Half the battle of trading is knowing when to not trade. When there's going to be consolidation or some sideways pattern forming, go put your money somewhere else, even in cash. Okay, awesome. Now from here, there was a huge move higher. Oil ran up into the spring. And we all know it, we feel it at the gas tank, right? And you can see that there was once again a peak where in the bull resistance power zone. If you just use the traditional RSI levels, you are going to miss this. And this is extremely important because one of the biggest ways to boost your trading profits, like I said, is to ride those trend waves, ride the big strong moves until they change. And the power zones would have helped you to do that. Making sense, guys? Are you getting this? Type a Y for me in the chat if you're seeing this. All right, awesome. Now, oil went into the sideways range for a few months. Things started to kind of calm down. But check it out. Every single low that we've had in oil in the past few months here has coincided with the RSI holding the bull support power zone. And it was also holding my triple moving average filter, still pointing up and to the right. And that moving average filter is in my full RSI system. And we'll get to that in a moment. So this kept me on guard, not getting too relaxed about when I fill up my own gas tank. I was like, this positions oil to break higher, and that's absolutely what it did. Now that break higher in oil in May, it wasn't indefinite, okay? The prices moved higher, but then they actually came into one of my favorite measures of supply in the market. And again, I teach that in my full RSI system. So between the behavior of the momentum and the price action, I saw a warning sign that that breakout, okay, this breakout from this range wasn't going to exceed this winter high, and then things started dropping again. So can you guys see how looking at the RSI power zones on oil might have better helped you navigate trades in oil over the past year or on markets related to it? Okay, type a Y if you see that, right? It's kind of like seeing it with those glasses when you have those games that kids have where you kind of wear a different colored glass and then you see a different layer of information. That's what we're doing here. You're seeing deeper information than what the standard indicator gives you. Okay, fantastic. Now let's go on another quick second date here, okay? We are moving this relationship on pretty quickly, but you'll see why. So for our second date, I'm going to take you to an ETF that many of my coaching students trade, and you probably do here too. It's the SPY, SPY ETF, following the S&P 500, which is essentially the economic indicator for the US, right? All right, so here we have the zones again. I just wanted to brush up your memory and share those with you. We have the SPY daily chart on top, and again, the past year. I'm not going way back in history. I brought it right to the current action. Now, I want you guys to follow my mouse here, okay? Notice there are these spaces in between the zones. There's a distinction between being in between the two same colored lines versus being outside them, guys. And you can see here that the SPY was kind of all over. It wasn't really specifically holding one zone or the other. So why would I show you that if my whole premise here is that these zones are so amazing? Because the zones alone don't give you all the market opportunities. If that was the case, there would be like a red light, green light system, right? Buy between green and sell between red. It is not like that. What actually helps you even further are patterns that emerge. And we're going to talk more about patterns in a moment. For now, I'm going to do something very unique with you, okay? I'm going to unfold price action as if we are in one of those, time-lapse cameras where you watch a flower grow. And so what takes weeks takes minutes, right? So watch the screen as it unfolds. I'm going to try to slowly reveal a price action to you here. All right, you can see it unfolding. So just watch the price along with the RSI power zones. Do you see it, guys? Do you see that shift in momentum versus price? Take a look for a second here. Those bear zones, the two upper red lines and the two lower red lines, they aligned with the moves in price on the SPY since the end of last year. If all you did was notice that bearish shift and then kind of realize that we were living in the bear zones and then add in patterns and everything else, that would have been huge, huge to your ability to navigate all this recent action. So can you see how looking at the RSI power zones on the SPY these past few months might have better helped you navigate trades in the SPY or markets related to it? Guys, type a Y in the chat if you see that. Okay, fantastic. Okay, now we're going to check out trade setups. But first, let me share with you more results from my trading family. Susie shared, my first month using RSI power zones was also my best trading month so far. All right, by now you guys are getting it, okay? So I'm going to show you the RSI power zones action in recent market action just from the past couple months, showing you actual setups that I called out to my trading family. Now, there's a real value in seeing a call that I can direct you back to a specific video, an actual publicly shared or tribe shared piece of data, as opposed to me just pulling out market examples that look good from the past. So think about that for a second, okay? The next few charts I'm going to show you, every single example was something that I called out to my tribe as it was happening. So if you're not in my tribe, that's a good reason to join. And the reason I want to do this, again, to show you a variety of markets. And like I said, today, to kind of stay in the middle ground between day trader and swing trader, we're going to stick to daily charts. But now we're going to shift to stocks. Who here's a stock trader? Type one in the chat. I would think we have a lot since we're here with our host MetaStock, right? And we're going to look at results from calls I made right now here in 2022. All right, let's start with this chart, Tesla. Anybody ever heard of Tesla? They make some sort of electric vehicle or something? I kid, of course, because it's a very big stock in the news, lots of drama and everything else, right? Now, where you see me chopping off the chart on the right here is right after the buyout of Twitter by Elon Musk was announced, okay? So when it was announced, this got me looking not only at the stock of Twitter, but also at the chart of Tesla, because he owns both that company originally, right? So where you see this market just sort of, this chart sort of drop off, that was the day that I captured this call. So what I did was the following. I pointed out that the chart of Tesla was weak based on the price action, and I gave 2 support levels and talked about what it would look like if it broke below those, because there was downward momentum pressure, and I gave these 2 support levels, and I pointed to what would likely unfold if things fell through. Now, I didn't even add all the other observations I was seeing, but I knew that the momentum behavior was feeding into this, along with one of my favorite price resistance patterns being present. And again, all of this, all these techniques I teach in my full RSI Power Zones approach, okay? So would you like to see what happened after I said, hey, Tesla looks weak here? All right, here we'll see. I would say there was some weakness there. So altogether, the call I made on Tesla for weakness was followed by this price action here. Shares traded down from $1,000 per share on April 26th to $628.16, the low on May 24th. Guys, that is a $370 drop in under 1 month. Because the math is simple on a $1,000 price start, right? That's a 37% move lower in price. Would you like to know the techniques that would have gotten you prepared to take advantage of something like that? Type a Y in the chat if the answer is a yes. Now listen, guys, I know money isn't just money, okay? It's the blood, sweat, and tears that it took you to make it. And you can't afford to lose any of it. So I'm here to help you maximize it. So don't go doing this and thinking you can figure this out on your own. Because if you could, and if you didn't need help, you wouldn't be here today. Okay, I'm going to continue to explain to you how I can help you. But I want to show you the power of this indicator and how bring it into the mix with what's already working for you is really going to make a difference in your trading. All right, would you like to see another stock in action, another popular stock? All right, great. Let's look at Amazon. Now, Amazon had some big news this season, okay? Where you see the chart drop off here at this yellow vertical line, that was after the company announced its 20-for-1 stock split. The first stock split since 1999. That's a long time. So I pointed out a pattern that was occurring in the RSI power zones that suggested that there may be a change to the upside, okay, at this time marked by the yellow vertical line. So again, this is what I saw happening, but in combination with the RSI power zones and patterns, I was able to warn my tribe, hey, if you've been short on this or you've been looking for the next down move, you better kind of watch out because I think there's more strength ahead. And here's what unfolded. We did get that immediate strength. So focus in on this move right here. Shares traded up from the 14th of March low to the 29th of March high. Now, when you look at this in today's stock price numbers, okay, because the chart here is captured after the split, let's just look at it in percentage, guys. That was a 21% move in price in like 2 weeks. Are you getting this? And of course, like I said, I've been using this for a long time. I can't teach you everything that I've learned in 20 plus years in an hour. This is a good inside peek into how this can help you. Okay, fantastic. Now, for those of you who trade commodities or ETFs, you're gonna love this one. Here's a chart of GLD, okay? So that one of the most popular ETFs for trading gold, trading the movement of gold. Now on February 11th, so that's the date marked here, the last price bar, okay? Into February 11th, I did my process that I do every quarter. So every 3 months, I personally analyze 20 of the hottest markets and I put them out to members who come in, they get those reports, we do a review session together, and it's really insightful for a long-term game plan on a variety of markets. It includes gold, and what I saw on February 11th of 2022 was that this purple vertical line, which is March 8th, okay, was going to be a key timing point. So momentum is part of my three-pronged trifecta, if you will, in my trading. I use price action, I use momentum, I also use market timing or forecasting. So this is where they start to blend a bit. So I had a forecast for action into March 8th. Would you like to see what happened on gold between February 11th and March 8th? Maybe you don't have it in front of mind. I'm going to show you here, okay, as if we're seeing it for the first time. Check it out. March 8th is exactly to the day when GLD made a high. It surged. The ETF surged into that timing point, supported by the momentum action. Guys, look over here. You can answer me in the chat now. You're learning. Where did we make a peak on the RSI power zones? What zone? Right, it was the bull resistance zone. So can you see how in this whole run-up in GLD, if you were looking at the bull and bear support zones as opposed to just the traditional RSI, it would have helped you stay with this long move and squeeze as much profit out of it as you could? Awesome. So let's measure that, right? Show me the money, you're wondering, right? What was the size of this move, Hima? And I literally called this right when it was happening. Well, we went from that low on February 11th at 170.71 to a high of 193.30. That's a 13% move higher in just 16 trading days. So guys, I'm very excited to be sharing this with you today because I'm really passionate about the work I do to provide traders with the best analysis and education, okay? To trade the market so you can take control of your financial freedom and live the life you and your family deserve. And that's the results my trading family loves seeing too. Like David, I installed the RSI Power Zones indicator and it's just amazing how accurate it is in all markets. It actually gives advance warning before the price moves. So would you guys like to see a few more markets that we captured recently that you can look at and see if the RSI Power Zones work? All right, then we're going to get to those here in a minute. But for those of you who already kind of getting the sense of this RSI Power Zones and you want to dive a little deeper, let me ask you, did I provide value for you today? Are you learning? Are you ready for more? All right, awesome. Then it's time to master RSI Power Zones. We're going to continue to take a look at more charts. I want to show you how you can begin your mastery of these zones. So far, you've heard about how I've come to really benefit from using the RSI Power Zones, but here's what more of my students have to say. I was very impressed with the education Hima provided that came with my indicator. Hima's RSI Power Zones indicator has become the standard on all of my charts, said Rob. Norman shared, a day after learning one of Hima's RSI Power Zones trend continuation entry signals, I tested it out on a 5-minute chart of Tesla. With this one trade, I made over triple digits, covering the cost for newest course. I got your RSI Power Zones training, and the next morning when the market opened, I found UNH as a short candidate using the weekly chart. By the time I sold the position, it nearly paid for the whole course. Thank you for sharing your knowledge and keeping your content reasonably priced, said Aaron. So will you be our next success story? Making sense? Are you getting this? How simple it can be to trade when you have help? Great. So imagine and picture this. You finally able to turn your trading around and make money with trading and live the lifestyle you've always wanted. Giving back to your community the way you've always wanted to. Spending all the time you want with your kids and grandkids. Great. So here's what I've got for you. The system that can give you all this, it starts with the winning RSI playbook. So before I give you this opportunity, let me show you the features and benefits using this system will give you. So we start with rapid results, right? You can learn to use the system in as fast as 60 minutes and you'll be up and running. It's perfect for any account size, $5,000 or $10,000 or $100,000 or $1 million or more, you can trade this. You pinpoint your trades faster, so it takes less time. Get more profit because it's perfect to add to whatever you're doing right now. Perfect for beginners, so easy that anyone can do it. Perfect for experts to diversify their accounts, because the Winning RSI playbook starts you on this journey. But first, who's this not for? This is not for those who are trying to get rich quick. Like anything worthwhile in life, trading takes consistent work to get consistent returns. So if you're here to play the slot machines, this is not for you. So who is this for? This is for those who are ready to analyze the markets like the expert to optimize and boost their trading. This is for those who want to diversify what they're already doing for additional profits. This is for those who are ready to step up and take action for their own financial freedom. So since you're still sitting here with me, you're taking the time to learn to boost your trading, you're ready to take action now because it's time to remember what you forgot to remember. You can let it be easy. So like I said, guys, it all starts with a deeper understanding of how the RSI power zones work. The Winning RSI playbook gives you the complete rundown and indicator settings, along with further market case studies and timeframes that help you accurately predict trends and large moves in any market on any time frame. Inside my Winning RSI playbook, you'll discover my exact indicator settings that I use in my personal trading, how to analyze fading momentum, how to discover potential turning points, how to compare zones on the RSI with high accuracy, the key to spotting an impending trend collapse, and so much more. Now, this is for both beginner and expert traders. Now, this ebook is normally for $14 on my website. You can grab it there anytime or here today. The thing is, guys, you are taking the time to learn to boost your trading, right? Carving out time in your summer Monday here. And so I appreciate that. And so as a special favor for our host Metastock, and especially my friend Jeff here, today I have agreed to completely gift you with this groundbreaking book. Hey, usually $14, they twisted my arm, and it's free for you who are here today. Now, it's not going to be forever. So you want to head over to himaready.com/metastock to grab your free copy. And I'm going to continue to take a look at how the RSI power zones are working on current markets with you here today. I'll keep that link ready for you to go. And I really want to thank you for spending your valuable time with me here. And I hope you learned something that's set you on the road to financial freedom. So let's take a look at some other markets in motion. We covered a couple stocks, and I have a few more charts ready that I'm going to analyze here with you. Would you like that, guys? Type a Y in the chat as you get signed up with your book. All right. So here we have it, okay? I've got these charts. I don't have anything hidden. I don't have any reveals. This is not a let's go learn from Hima teaching step by step. Let's look at it together. So now I'm going to try and pull up the handy dandy annotation tools here in GoToWebinar. So let's test that out. Do you guys see a smiley face? Then I know it's working. All right, cool. I think if I hit erase, there we go. Fantastic. So let's start this party with an analysis just like I would be doing if I was opening up my charts, and this is what I saw of Meta, okay? So we're talking about Meta, aka Facebook. So I see a question here about the settings. So the full settings of the moving average settings, John, that's in my full RSI system. And you can learn more about that once you go ahead and get your playbook. So that's called the 4 Zones RSI coverage system. So that has all my settings, as video tutorials on all the different patterns and more. It includes a coaching session with me once a month and more. All right. But I want to give you guys a quick start, a way to kind of get going, and the Winning RSI playbook will do that for you. It will give you the settings of the indicator, and it will give you more examples to kind of get you practicing. So let's look at Meta here together. Everybody start back here, okay? We're going to start around here with this market peak last fall. So we saw the market fall, and look at how it pushed down into the bear support power zone. Now, once it did that, you might have thought, okay, a lot of us thought last fall, oh, all right, well, that was just a correction, coming back to some longer term moving average, again, full details in my system, and that we're going to trade higher, but that did not happen, right? Instead, things started tumbling. So when they did tumble, where did they go? Well, notice what they did is come back right to the bear resistance power zone. Price formed a high, and this also coincided with one of my GAN trading signals. I started learning GAN, G-A-N-N techniques from my dad when I was a teenager, like I said, and that's my main mode of trading. And that's a lot of what I cover in that book I mentioned that I wrote. So the combination of what I'm seeing here explains, oh, this led to this down move. And then with this price action right here and momentum action here, there was room for a rebound, but look, that rebound could not clear the bear resistance. Guys, do you see how helpful it would have been just to know the bear resistance power zone? Let me highlight that for you again. Just understanding this zone here during this time wouldn't have kept you ready for some of the weakness ahead? Yeah, it would. So then we have, earnings related big gaps come into play, right? Big, small, and more. And what's going on most recently? Well, most recently on Facebook, I keep saying Facebook, it's fine, it's Meta, fine, fine, fine. Based on this chart captured on Friday afternoon, we're kind of hanging out above this most recent low. And on this time frame, RSI power zones aren't really giving me new information. But guess what? Like I said, the RSI power zones are a set indicator. Doesn't matter what time frame you're on. So what I would do if I was doing this live for my own analysis, I would take this and go up a time frame. And I teach in my full system what higher time frames I use. Or I'd go down a time frame. And again, I teach in my system what time frames I use and why. So that's going to give you some insight. And in the very short term, let me leave you with this. Look at this resistance created by these two moving averages. Okay, that's about halfway up from this move that was lower. That's an area to watch. Not necessarily it's going to hold a strong resistance, but that's an area to watch. And we may have been trading there today, right? We're in the middle of the trading day after these charts were captured. So is this walkthrough, is this helping you see even more how the RSI power zones can be helping you here in the land of Meta and Facebook? All right, cool. So let's move along. I believe I have another FANG stock after this one. All right, yes, here's Apple. Do we have any Apple traders? I know Apple has a lot of traders who like trade options on it. Okay, great. So let's take a look back. Again, I'm just kind of giving you a little tour here. Look how beautifully there was this price peak after we hit the bear resistance, the bull resistance zone. And right here between price and momentum, specifically the RSI power zones, was a very, very important warning signal of what Apple was going to experience in terms of potential weakness ahead. Notice that after shaking out and making what looked like just a corrective move, when Apple rallied again, look, it could not clear the bear resistance power zone. Also, I can see that it came to, again, one of my favorite resistance areas. So couldn't clear bear resistance power zone. And then based on this price action back here, it came to one of my favorite ways to measure resistance, which is in my entire RSI power zone system. All right, so let's fast forward to where we are now, okay? We have this run up starting in June. We captured more than 50% of the fall off of this high from March. So there's definitely room to run higher on Apple. And there's sort of a zone of resistance based on price action in this area right here, okay? So that's like a 175, let's call it. All right, let's take a look at a couple more. If you guys have any questions, or Jeff, if any questions are coming through, please let me know, because I like to keep my presentation New York style, to the point, get the main message out, and leave plenty of room to let folks sign up and to get some clarity. So I have a few more charts here, but if any questions are coming through, if you could let me know, Jeff, that would be great. All right, let's move on to another chart here. Netflix. Like I said, we're in Fangland, right? Now, the chart of Netflix here did a couple of very interesting things. And one thing that I remember, and I believe I called it out to my tribe as it was happening, is that from here to here, as well as from here to here, okay? On two levels, all of this action that was happening, it was telling me that this market was not going to go down much further. So while that might have been information that's about the end of a trade, sometimes it's good to know when to stop selling, right? Let's say you were selling back here or selling back here or selling back here, wouldn't you have liked to know that this is where you should protect your profits and potentially exit your short trades, guys? The RSI pattern zones can give you that kind of information. You have different types of patterns, defensive, offensive, like football, okay? Like sports plays. So that was very, very helpful. And then since then, you can see we've been in this kind of sideways range. So what's going on more recently is it's attempting to lift after breaking out of this range. We've cleared the 2 shorter term resistance levels. And in my full RSI system, I have very specific rules about how to use my moving average filter to help you determine trend. That's for those of you who are maybe not so comfortable with determining trend simply by the price action. If you want a little kind of helper, the moving average filter can really do that for you. And it's a nice little grid laid out about, well, when we're sitting between this average and that average, what does that mean? Okay. So with where this is now, it looks to me like there's still some room to kind of fill in some of this gap. Now, this is a very wide gap that we had, but this whole zone here could be an area that shares attempt to kind of fill in. The only concern is how it's starting to keel over here in the bear resistance power zone. Now, again, these are charts from Friday. So obviously there's market action today. And so you have to compare against it. But this is a good exercise, right? For you guys to see what did it look like on Friday and then start paying attention to what it looks like today after the close and the rest of the week. All right, let's see. I have a couple more here. Now with Google. Again, a lot of these FANG charts look very similar, but because I know that they're commonly traded stocks, thought these would be good examples to bring in. And then we'll round out with a couple more. I think I have an ETF or 2 here. So on Google, we have been in this sideways range. So my eyeballs immediately are just like seeing this right here, right? This kind of hot mess sideways business. What are you supposed to do with that? Well, check it out, guys. Since the beginning of the decline, even though it was kind of steady and range bound, notice the domination by these red zones. If all you did was notice when the RSI power zones shift and move from one rhythm to another, that alone can be extremely valuable to managing trades, whether it's entering, exiting, placing protective stops. Okay, and I'll teach you more about those specifics too, like if you get deeper into my RSI education. So let's take what this is going on here with the current action. So again, without looking at today's action, this is just based on what was going on Friday, there's room to come back to these highs from the consolidation, right? So those are providing a little resistance magnet, if you will. And if that area is cleared, then we can see this moving average might provide some short-term resistance. But to me, guys, the moving averages are not about support and resistance as much as they're about a guideline for direction, just a guideline. So I don't trade crossovers and things like that, but everything I do with the moving averages, I do share. Okay, so let's look at a couple more that I know I have here. Okay, here we have the Qs. Robin, it's your lucky day. You just asked me for the Qs and it was literally the next slide of my chart. Way to go on timing. All right, so what do we have here in the Qs? So let's bring ourselves back. I don't know what happened here, why this line is covered, but this is the green line that would be all the way through. Okay, so I'll just fill it in for fun here with a color. So there we go. All right. Now, not only here, but here as well, between price and momentum, there were lots of telling signs at the end of the year that something was amiss. Okay, the momentum wasn't behaving like it had previously, especially since our pandemic low, which you know was back here in March of 2020, okay? Things were starting to act a little funny. And the first sign that we were really going to start moving lower was when we started to break and make lower highs and lower lows in price. Because as much as I'm talking about momentum here, guys, price is king, okay? Price is the data from which all these different indicators, momentum, moving averages, etc., they're all derived from price, open, high, low, close. And of all of those, the most important is the close, actually, which is why line charts are a thing. If you've ever traded line charts, the line chart would take what you see here and be, you know, plotting it with its little squiggles, and all you would be monitoring is the close of the bar. So price action is still what dictates how to best navigate the RSI power zones. And then you look at the RSI power zones on top of it to say, okay, what else is it telling me? So now let's bring the pen back here. And yes, the slowdown of this fall was also easily navigated by the movement with the RSI power zones, especially when you go down time frames. Look at how beautifully, I mean, this is like picture perfect, guys, how we came back up in March, right into the end of March, into early April, and formed this high with the RSI power zone still staying in the bear resistance power zone. Bulls could not push through. Bears were still like, nah, we're still here, right? And then push lower again. Now, again, based on this chart captured from Friday, we're still in the zip code, right, in the vicinity of the bear resistance power zone. So those of you who join my tribe, I'll be sharing later today my latest update on, hey, does this rally have legs that we're seeing? Or are there barriers coming up close as early as this week? Okay, my forecasting techniques are suggesting that that's possible. So lots to watch here, but the RSI power zones, what they do is they allow you to see the context of trend and momentum, not just, oh, you know, I've got a sideways range and let me trade the edges of it. All right, I think I have one more. Oh yeah, Bitcoin. I decided to mix it up a little bit. So Bitcoin, this is the chart as of Friday. Not sure if we have any crypto traders here, but hey, it doesn't matter. It could be a widget. It's good for practice, right? So here you can see we have this move lower that did not happen in the bear resistance. That's why it's not going to just be, oh, red to red, green to green. That's why I'm telling you, understanding the patterns, understanding the underlying price and more are very important. Notice though that here, it didn't live above the long-term moving average for very long. Same thing here. So it couldn't really get past that black line and then it fell. And look at how beautifully my moving average filter has held the rebounds on Bitcoin since then, right? It did it back here. It did it back here. So I'm going to use a highlighter. I'm getting the hang of these drawing tools, so watch out. Okay, so back here, here. Okay, and then this became consolidation. Here, 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 even here. Whether they resulted in bigger declines or just small moves lower, can you see how using moving averages as like a little cushion or a little cloud on top of the RSI power zones could help? Because look at how here, we weren't even able to get back to the bear resistance power zone. The market was having that much weakness come in. And look at how this over here, it pushed down to bear support, pushed to bear support, pushed bear support, and then some. What the zones do is they keep you flexible and fluid enough to be able to adapt to accelerating or decelerating market conditions. A simple overbought or oversold line makes people very rigid. That's what I have seen in my experience on Wall Street, in my experience in dealing with traders. And unfortunately, the markets aren't this exact science in the way they move. So when you couple different things, the momentum indicator, my moving averages, price patterns, momentum patterns, and more, that's when it all really comes together. So I'm happy to take any questions. I really want to give you guys some time to get ahead in the line before this goes back to $14 and go ahead and sign up for your gift that you get from me today, free copy of the Winning RSI Playbook. And again, I thank you for taking your time to come here, learning to boost your trading, and I thank my hosts here, Metastock and Jeff, and I'm open for any questions.
Right, we have, let's see, Sean wanted to know if you would talk about the moving averages that are used.
Yes, I mentioned earlier that the moving averages are in my system, the full settings and all my rules of how to use them. So you sign up for the Winning RSI Playbook. That'll kind of give you a starting point, Sean, of what more you can learn with the RSI power zones. If you want, you can go right to you can email my team and say, hey, I'm ready to kind of dive in and learn here. And it's the 4 zones RSI coverage system. That's like a full course and everything. So yeah, it's all detailed in there.
I don't have any other questions. But I did want to point out that we are the original Meta stock.
Ah, yes. I saw you type that, Jeff, but it like took me a second. I was like, okay, no, yes. Did you have a copyright chat with the Zuck over there?
Letters may have been sent. No,
letters.
No.
Nice. Awesome. Well, I will tell you guys this here. I'll just come on camera here for a second. I'm not used to being on camera, but I want to be more used to being on camera. So I don't know if you can see me. Yes, hello. Yep. Okay. I just want to say I really enjoy being here because I find that the traders who come to this event, I don't know if Jeff is the draw, I don't know what it is, but you all are very much focused in, paying attention. And I used to go to events like this. When I was learning trading with my dad, there were a lot more in-person events than online. And I grew up in New York and Long Island. I have like very little accent left, except for maybe 3 words. But we were fortunate enough to be able to take the train or drive into Manhattan for various events. And I think it's amazing that you guys have the opportunity to learn from the comfort of your own home and can come and get education like this for free. And so I just want to thank Jeff and his team for hosting. Like, I know, I can imagine it's a fair amount of work. And folks like me, we get to kind of just show up and do our thing and head out, but appreciate it. And I look forward to being back again soon.
We love having you, Hima. It's always great. And it's good to see you on camera too.
Yes, like I said, I'm working. I finally cleaned up my office this summer. So that's part of it. So now I don't have to use one of those Zoom screens. I can actually be on camera. And yeah, I'll definitely be back soon. So I hope you have a good summer. And yeah, if anybody has any questions, you can just write us support@himaready.com. Otherwise, there's my playbook, and look forward to seeing you guys soon.
Sean says, thank you, Hima. And he's in addition, you have a good eye for price movement. So
thank you,
always
Sean.
great to have you.
I appreciate that. I'll tell you this. I learned from my father, and this is the first thing my dad ever had me do, which I will probably never torture my students with, is he didn't tell me what anything was. He just made me watch a 1-minute chart of the ES for like 3 weeks, a few hours a day. That's how I got learning with the market. So I'm saying that because, Sean, I think for me, I didn't learn fundamentals. I didn't learn about all these other things, the talking heads. I just learned price action first. And I hopefully made it easier for people to get good at price action without having to stare at charts for hours a day. But yeah, that was, I called it a self-made graduate school of technical analysis 20 years ago when there was no formal education. So appreciate that.
All right. HimaReady.com/Metastock. Yes. Thanks again, Hima. All right. Good having you. We're going to do this. We'll do this. Okay. And it's good. Okay. There we go. All right. I hope you guys are still enjoying the event. Hima does such a great job. I just think the lineup has been great today. I hope you agree. So in any case, let's go ahead and talk a little bit about the Traders Summit Pack that we're doing today. It includes all of the add-ons that we sell for Metastock. So you've got the CPS, 3 months of the trade trend, the Vora victory method, the Silas Peters 3S code, and the Daniel Sinnig's Power Bundle 360. You get 2 years courtesy of Stocks and Commodities as part of the sponsorship that they do as part of it. 3 months of LearnMetastock.com and Unleash Your Power of Metastock. Now, all of that is normally $5,126 here at the event today, $2,385. Most of it even has a 30-day money-back guarantee. So I think your real risk here is like $198. If you're not happy, they'll refund everything else back to you. So metastock.com/summit deal, 800-882-3040 or metastock.com/sales chat. Again, what a great opportunity to try some of these products and some of our best-selling products here at Metastock. So, and a couple brand new ones as well. I did say thank you again to Stocks and Commodities Magazine for sponsoring the issue. And the thing, if you're watching this on YouTube. It's getting a little bit later in the day, losing my train of thought. If you're watching on YouTube right now and you're watching it live, not the recorded version, and you want to get a free issue of Stocks and Commodities, head over to metastock.com/tradersummit. The URL is right here. I'll type it in the YouTube chat. You can sign up a little registration form and just get a free issue, as well as Hima's RSI Power Bundle and a whole bunch of other really, really cool stuff free just for registering. But you'll want to do that today. August 1st. If you're watching this in the future, we'll come to an event live. We'd love to see you live too. So in any case, our next presenter is Tyler Wood with the CMT Association. I promised earlier when we were talking about how awesome the CMT is and how good of a job that they're doing that Tyler does a really good presentation. It's very interesting. I like the stories. And when he started talking the first time in one of our seminars about the CMT Association and how it can help you professionally as a trader, it's really blown away. So let's bring him on here. Tyler, how are you doing?
Great, Jeff. Can you hear me okay?
Yes.
Awesome. I'm not sure where you got that old picture, but the beard is a lot longer these days.
I Googled best picture of Tyler Wood.
What a fantastic day you guys have been running. Incredible sessions. Lovely to see my friend Hima Reddy, who is a CMT charter holder and longtime friend of the CMT Association, and really appreciate you having me here, Jeff.
Yeah, great to have you. I'm going to get out of the way. It's all yours.
Sounds great. Hey, everybody. Markets are closed. Take a deep breath, right? It's after 4 o'clock. What we're going to do this next hour is just talk about process and tools. This is low pressure, high educational value. And so grab a notebook, grab a fresh cup of coffee or cold soda, whatever beverage you choose, and let's dive right in. As Jeff kindly introduced, my name is Tyler Wood. I'm the managing director for the CMT Association. It stands for Chartered Market Technicians. It's been around for about 50 years, and we do two things. Try to help investors improve their decision making, teaching them technical tools, testing their mastery of the body of the knowledge through the CMT program. And then we also open career opportunities. So we have a ton of advocacy initiatives working with employers, big banks, mutual fund companies, hedge funds, you name it. I talk to a lot of employers in the space, not just in the US, but around the world, about the value of hiring CMTs to their firms. That's a little bit about what the organization does. As I mentioned, we've been around for about 50 years, and what started as a very small club of sell-side equity research analysts in New York City has now grown to a global credentialing body. We're in 137 countries around the globe. We've got over 65,000 folks participating in educational events, webinars, seminars. We publish a lot of research. Most of the technical analysis tools we're going to talk about today were created by, observed, and developed by charter holders, CMTs, and members of what was originally called the MTA. But we've been growing by leaps and bounds. We tend to be kind of counter-cyclical. So big leaps after the tech bubble burst in 2000 and 2001, the great financial crisis. And yes, yet again, investors are flocking to the technical side to try to understand how to manage rotation, risk management in their portfolios, and thereon. Quick shout out, we do publish a lot of free content. If you guys are interested in learning from some of the best analysts and money managers and traders in the world, you can check out Fill the Gap, the official podcast of the CMT Association. Every month, volunteer board member Dave Lundgren and I get to interview these guests, the men and women of Wall Street who have helped create these tools and developed the discipline of technical analysis for the last 50 years. So make sure to check that out wherever you listen to podcasts, Apple Music, streaming services, Stitcher, you name it. But it's also right on our website, cmtassociation.org/podcasts. What we're going to talk about today, it's enough of the intro. We're going to define technical analysis as we define it at the CMT Association. We're going to talk about the tools that help improve decision-making. And then I'm going to share with you what I've learned from some of the best institutional money managers on the planet on how they employ these tools for better and more consistent returns on their portfolio. How's that sound for an agenda? All right, so first things first, what is technical analysis? Well, it often starts with the picture, right? Price and volume. The first episode of Fill the Gap, we actually got to interview a gentleman named Bob Farrell, who is the chief market strategist for Merrill Lynch very, very long time. And in the mid-1960s, he was approached by some young bucks on the street to help found the Market Technicians Association, now CMT Association. And Bob Farrell said he's never really liked the term technician or technical analysis because it's too limiting to what technicians actually do. They study so many things like price trends and momentum and money flows, but also cycles and waves and investor behavior and sentiment and supply and demand relationships and volume and insider activity and monetary policy and macroeconomics and historical precedent, and the list goes on and on. The point being, there are a lot of ways to define this. In the CMT curriculum, we lean heavily on the founding fathers of modern technical analysis. Edwards and McGee published in the 1930s a book that said technical analysis is the study of the market itself, the price action, what is happening with investors. And that's really probably the best definition out there. I graduated from an MBA program at the Kelley School of Business at Indiana University, understanding nothing about how markets worked. I understood a lot about corporate finance, a lot about intrinsic value, how to create a DCF statement, making sure that I understood the fundamentals and the accounting basics of companies. And that's one way to understand your investment horizon. But we know that the market itself is full of information. And why would we ignore all of that data? So back in the 60s, it was our founding members who were kind of the original big data groups of Wall Street banks. They had all of the market information. Obviously, we carry around in our pocket on our phones many more charts in Metastock than they ever could produce pencil to paper in their chart rooms. But we know that the market itself is providing a ton of useful information. We also know that technical analysis is the study of supply and demand. And we're going to talk a lot about that throughout today's session. But just think about, how does price get set? It's where bulls and bears meet and they agree. A buyer and a seller decide that a price is correct. That's what establishes price in the marketplace. And that's what establishes the real value, the non-estimated value of any share for any security. And then lastly, I want to reference Perry Kaufman, who's an author featured prominently in our curriculum, and he talks about the systematic evaluation. And I want to pull out the word systematic because we're going to talk a lot about rules and repeatable process, a discipline that you can use in any market regime. We're going to talk a lot about trading strategy today. And I don't want anybody to confuse algorithmic trading or systematic, something that's coded into Python and completely managed by a computer and not a human, as anything other than technical analysis. All of those rules that are going into an algorithm are the building blocks that we're going to talk about today. So whether you have discretion over your trades or you program everything, that's just up to you. But I've talked to a lot of college students who say, yeah, I'm not really interested in technical analysis. All I want to do is quant finance, and I'm writing some algos in Python. Well, God bless them, but what they're using is technical analysis. All right, so how we define at the CMT Association, to give a nod to my fundamental friends, we talk about how technical analysis provides those tools to successfully navigate a gap between intrinsic value and market price across all asset classes through a disciplined, systematic approach to market behavior and the law of supply and demand. That's a mouthful. But we really started pulling these ideas from a blog post by none other than Aswath Damodaran. Damodaran is a professor at the NYU Stern School of Business. He's also one of the most heavily cited authors in the CFA curriculum. So that's the fundamental understanding. This guy is the guru of fundamentals. He lives and breathes discounted cash flow statements. So what is he doing writing about this gap between intrinsic value and price? Well, what he was trying to explore was the fact that the market is so often wrong. All these fundamental analysts agree that the intrinsic value of said company is $50 a share, but the market is priced it at $100 a share or at $10 a share. Why does price move so far above and below their estimates of intrinsic value? Well, we learned that comes from the technical influences on the market. And Ralph Akampora, who I'm proud to say is a good friend, and he's been a close mentor my whole time at the CMT Association, over a decade, he said, Tyler, if you're ever talking to anybody about technical analysis, make sure you use this chart. Well, I adapted. When Ralph taught for 40 years at the New York Institute of Finance, he used IBM. That was the mega cap equity of the day. We're going to talk about Apple. So if you're doing your analysis, you could look at the company. And that's the fundamental side. And the company Apple has a PE ratio, price to earnings. They might have competitors that you want to be aware of who are also launching products that might outcompete Apple in the marketplace. They have a management team, their CFO and senior leadership that might be very efficient at allocating capital throughout the firm, or very inefficient at developing these new expansion efforts for the company. We know that they might pay a dividend. There are other important fundamental factors. And of course, the products that they are creating are going to generate those cash flows. And that's all going to be baked into our intrinsic value model. It's an estimate of what we think the company Apple is worth per share. But unless we're Warren Buffett or we're a private equity venture capital group buying a whole company, most of us are just going to buy some shares of the stock. So to complete your analysis, you need to understand the stock, which is very different from the company. That stock has a price. It has a volume that it trades at. There are other market internals like open interest and other data that we can look at to get a sense of the supply and demand relationships for shares of Apple. And then, of course, we have to understand the psychology of the market itself, not just the psychology around Apple, the company, but psychology around the tech sector, psychology around US equities versus alternatives. Maybe investors are seeking cash in their portfolio, or they're allocating to commodities, in which case the entire equity space, or the tech sector in particular, and certainly Apple in particular, will be out of favor. There are a lot of forces beyond the fundamentals that we have to pay attention to. It doesn't mean that we don't respect the fundamentals that are out there, but I want to make sure that everybody understands why we're so passionate about this bottom half of this graphic here for Apple, because there's so much information in the marketplace that we got to pay attention to. All right. My dear friend, Mark Abraham, I don't know Mark, he doesn't know me, but he's an incredible trend following investor. He's written some great books that I know and love. He said that ultimately it's the dollar weighted collective opinion of all market participants that determines whether a stock will go up or down. And that consensus is revealed by analyzing price. Hima just said 15 minutes ago, she said, price is king. All other indicators are derivatives off of price. And this is exactly what we're talking about. So I want to take you all back to Econ 101. I know, I apologize. It might have been many years ago. But when we look at the supply-demand relationship, we know that at a fixed rate of supply, an increase in demand is going to move us up that price equilibrium, increasing our price point. Well, that's exactly what's happening in the stock market. When we have a fixed set of shares for a company, increases in demand are going to move price up, decreases in demand are going to move price down. That's why we have important supply and demand relationships identified as support and resistance levels. That's why we know that people anchor to some of these important areas on the chart, because of those key supply and demand relationships. And for anybody who tells me that technicals don't really add value, it's really about the fundamental story, and that these other drivers, they're only adding value around the margin, I would just point to some of the meme stocks this cycle, these last couple of years. Shares of AMC, I mean, it's a movie theater company. And sure, post-COVID, we'll all get healthy and we'll go back to the movies. But is this anything more than a $6 stock? On a fundamental basis, there's no explanation for what happened on this price chart and why we were trading up in the 260 range. Thank God for log charts, eh, Jeff? Same thing with GameStop. Same thing for Bitcoin. What is the intrinsic value of any coin in the cryptocurrency market? Certainly, the lower level protocols, they're solving different problems, but unless you have a PhD in on-chain analytics, it is only price action that is driving the chart. All right. So as technical analysts, knowing the price is so important, knowing that to complete our analysis, we cannot just focus on the fundamentals. What is it that we're trying to do? Well, we're trying to objectively identify things like trends. Now, we know that human behavior is going to guide price along trends because humans herd. We learned this as, Cro-Magnon man 10,000 years ago. It was safer to travel in the pack. Once you got out by your own, you might be eaten by a saber-toothed tiger or something poisonous. So we tend to herd, and behavioral psychologists have identified a lot of these other heuristics beyond just the herding principle. But we know that's why prices trend. And so John Henry might be a familiar name to many of you if you've ever read the book or seen the movie Moneyball. This gentleman grew up in a very humble beginnings in southern Illinois on a soybean farm where he learned the commodities trade. And what he learned was that you needed to quantify what was actually happening. not forecast, not predict, none of the should be or would be or could be, but just what was happening, and then react responsibly to that. Identify the trend, hold it through the trend, and then take your profits when that trend ends. Now, that's a very simple statement, right? Let profits run, cut your losers short. Very simple to say, very difficult to do. So we're going to talk a little bit about the importance of routine. When I first started at the CMT Association over a decade ago, David Keller was the president of the board of directors. David just recently moved up to Boston, where he became the managing director of technical research at Fidelity Investments. He was also learning how to fly a plane. So he's talked in many of his seminars about the similarities between flying a plane and running a portfolio. And so all of these hours spent on the tarmac before you ever even get into the plane, standing there with your flight instructor going over checklist after checklist after checklist, all about what the instrument panel is telling you, what to do in case of an emergency. You have all of these tools at your disposal, but unless you have a very routine process, a checklist, if you will, to go through, he said once you get 10,000 feet in the air and the instructor kills the engine and the plane noses down, the only thing that happens is you panic, right? You're 10,000 feet above the ground in a little steel cannon, you're going to die. And so you stop thinking about your checklist and your routine process, and your lizard brain takes over. And so you freak out and you don't make any of the right decisions. You don't follow that simple checklist to say, oh, maybe my knee bumped one of the knobs and now my fuel mixture is too rich. It could be as simple as that. So with trading and investment management, we also want to have a routine checklist to dealing with market volatility. That might include different trend analysis or trend identification tools, moving averages, looking at support and resistance areas that we just talked about. You might study momentum. You're going to look for volume. You're going to look at market breadth. You might look at that over multiple time periods. The important thing is that you and every trader develop their own checklist. What for you identifies the trend and what for you identifies when that trend has ended. That's what's going to establish your trading rules for entries and exits. All right, so let's dive into trend identification for just a minute, and we'll get into a number of technical tools that could be used that are available widely on Metastock. And so first and foremost, we want to make sure that as trend followers, we're capturing the meat of the move, right? Now, we could just eyeball this chart and see that it's moving from bottom left to top right. Great, that's a trend. Hard to see except in hindsight. So how do we get an earlier entry and an earlier exit to knowing that that trend has begun, right? We want to profit on the meat of the move, which means we need to get in as that trend is beginning. And so we want to quantify what's happening instead of just eyeballing. We could use something like Donchian channels. That's going to, programmatically identify new highs and new lows, right? A series of higher highs and a series of higher lows is going to indicate our trend, but we want to automate that system. For anybody who's read the fantastic books about the turtle traders, Richard Dennis set out in the 80s to see if he could teach anybody to trade successfully, and indeed he did. Folks like Jerry Parker and Ed Sequoia and others who came out of that turtle trader tribe have gone on to be some of the greatest hedge fund managers that we know and great trend following investors. Donchian channels was one of the most important tools that they used to time their entries. So we can move beyond a visual tool and automate something like Donchian channels. We might take a look at something else like Bollinger Bands, right? We want to make sure that we're trading in the direction of a break. John Bollinger, a CMT charter holder, he developed the idea that volatility is not a static number. In the 1970s, it was thought to be just static and perhaps changed slightly over the life cycle of a company when it went from small cap to mid cap to large cap. We know today that volatility is absolutely malleable and it changes based on market conditions. And so we can look for these areas of volatility contraction. We can trade in the direction of the break. So when Bollinger Bands are narrow, when they break out of that squeeze, we're going to trade in the direction of the break. So that's great. We'll put some Bollinger Bands on our chart to tell us when that new trend breakout is beginning. All right. What about something like a simple moving average? That's probably already on all of your charts. For many folks, it's not even considered a technical tool. A lot of folks in the fundamental world, they'll pull up a price chart with moving averages on it, and they say, I don't really use technical analysis. Of course you do. Simple moving average, a 200-day, as Paul Tudor Jones said, that's his metric for every investment he looks at. price in relationship to its average over 200 days. So simple moving averages, maybe you've got 1, 2, 3 moving averages on your chart, hopefully not any more. We might also look to something like volume. So that was the first confirmatory indicator besides price that Charles Dow identified over 130 years ago, talked about the volume of shares being traded. And the way that we want to use volume is to understand, in a price trend, are we seeing heavy volume in those moves in the direction of the trend, or are we seeing heavy volume on the counter trend moves, meaning there's more enthusiasm, there's more shares being traded to the downside than to the upside? That's going to give us confirmation or divergence of whether our trend is healthy or not. We might move on from there and we might add something like the MACD, first developed by Gerald Appel. We actually honored him as the annual award winner of the CMT Association in 2017. Great moment to meet Gerald and his son and the rest of the family. MACD is kind of a combination between trend and momentum. We're going to look at MACD crossing above its signal line, MACD showing positive results to let us know that we're in trend. Now, this is a pretty simple checklist, right? We can look through at somewhere on the left side of the chart, the evidence is really stacked in our favor. Price is above its moving average. We're breaking out of the Bollinger Band squeeze. We've got a new Donchian channel high. We've got volume confirming the move to the upside, and MACD is positive and above its signal line. Great time to enter the trade. The problem with technical analysis, and the problem that I think many of us face, I certainly went through all of this, is that in our pursuit for a better understanding of the marketplace, we're going to add indicator after indicator after indicator to our charts. And what happens? You start to lose sight of price, which, as Hima said, is our most important indicator of all. What about important areas of support and resistance on this chart? What about key areas, historically that have been pivot points? If we have all of these other panels going and we have all these lines crowding our price panel, we're going to develop analysis paralysis. We're going to get behind all of our advantages with technical analysis by introducing lots more of our behavioral biases. With enough squiggly lines on the chart, we can all make the wrong decision, getting in too late or getting out too late. All right, or maybe never getting in at all. Congratulations. We're moving on to the second of our 3 sections in today's talk. We're going to talk about trading system development. So beyond market analysis, we want to think about developing repeatable processes, a strategy that is going to stick with us. And I'm going to share a little bit of, well, I guess it's kind of dark data. It comes from Terence Odion and other behavioral finance professors who studied a very large data set. 360,000 day traders studied over a 15-year period. So they got tons of redacted, anonymous data, but a huge data set to go over and to find out how traders perform. And for all of you who are still online, if you want to throw into the chat, what's your guess at this question? Out of 360,000 day traders over a 15-year period, how many do you think lost money? How many of them failed to be profitable over the long term? I'll give you just a second. The answer is E. 87% failed to be profitable over the long haul. That's a little terrifying, right? Now, less than a third of 1%, 1 in 360 made money year after year. They had a consistent, disciplined approach to their trading, which kept them on the right side of trends. All right, let's do one more piece of data. This is from DailyFX, 43 million trades looked at over 15 currency pairs. Now, the question here is not who was profitable and who was not, but what percentage of their trades were profitable? So how many times out of these 43 million did they pick the right side of the trade? The answer, surprisingly, is over 50%. So these day traders had an edge. More than 50% of their trades were winning trades. And yet we know that they did not make money consistently over time. 1 in 360 made profitable returns on their trading strategy. Now, the problem with why all of these folks lost money is not that they didn't have an edge in the marketplace. It was that they didn't manage risk. Their average loss per trade far outweighed their average profitable trade, meaning they hung on to their losers far too long. They got outsized losses because of their behavioral biases. what started as a quick trade then became an investment. They stuck with it because they just had this strong conviction it was going to come back in their favor. It was going to be profitable. They did not want to lock in that loss because they knew it was going to turn around and come back in their favor. Well, that's a great way to enter the risk of ruin. So that's 43 million trades, and we know that over 50% were profitable, meaning they had that edge. Their analytical approach was correct. They were picking the right trade more than half the time, better than a coin flip, but their discipline of money management was not there. So we're gonna dive into the expectancy formula, and I promise not to get too heady with all the math. But what we're talking about in this behavioral finance context, the things that limit our ability to be profitable traders are things that are innate to our human nature, right? Evolutionary psychology tells us that we were equipped with some of these mental shortcuts to help us survive over the last 15,000 years. But as traders in the marketplace, it's actually getting in our way. So just consider this chart. Right here, we've got the efficient frontier. Everything on the right side of this curve is going to be a profitable trading system. Everything down here is unprofitable. Let's just consider this point on the curve. That's a 50% win rate, meaning you're just flipping a coin. Half the time you're right, half the time you're wrong. Okay, so probabilistically, if you have no edge in your analytical approach and you just flip a coin, whether to buy or not buy a stock or any security, as long as you manage risks so that your winning trades double the size of your losing trades, you could still be profitable. And all the way down here, Paul Tudor Jones has often said he can be wrong 4 out of 5 times, but as long as when he is right, he really leans into those trades and gets those huge outsized gains, he can still be profitable over time. So what we want to talk about today is how we improve our discipline, our trading discipline to manage risk, but also improve our analytical approach and develop a better edge and a better strategy to get better than 50% winning trades. All right, so here's how the professional analysts do this. We're going to talk about 4 things: divergence, relative strength, market breadth, and multiple time frames. All right, just 4 simple things, core pillars of technical analysis, things that are covered in all 3 levels of the CMT program, things that all of our members write and lecture about all over the world. So let's start with divergence. Now, we know that from price, we developed all of these indicators, and as an analyst, we want to see if they are confirming or diverging from what we're seeing in the price trend. It's really that simple, right? Now, we're going to start with something called momentum. Hima just spent an hour talking about RSI. Hopefully, you guys all got to see that great session. I'm going to talk about it very briefly. Momentum measures the rate of change in a price trend, okay? I want you to think in terms of acceleration, right? I've got the picture of the rally cars here. As you, if you're driving, particularly in the New York City area, you're going to enter the freeway and you're going to be, your car will be accelerating at the same rate, right? 10 to 20, 20 to 30, 30 to 40 miles an hour. You're accelerating at the same rate of change. But as you reach highway speeds or as you reach end of day traffic in rush hour, you'll continue to accelerate, but more slowly as you start to merge onto the freeway. So maybe 40 to 45, 45 to 48 miles an hour. The point is you're still accelerating, but you are accelerating at a slower rate. You're getting faster more slowly. And when we think about price momentum, particularly in trend, this is what's going to happen. We're going to see surges in momentum, and then we're going to hit congestion zones, and that momentum will dry up, or our speed will slow down if we're talking about traffic on a highway, and then it'll clear up and we'll speed up again, and the same process goes on and on. So we can look for surges in momentum to confirm our price trend. Let's look at a chart. So as price is making new highs, right, in our top panel, we're looking at a bar chart of, I believe, growth equities. In the bottom panel, we're looking at just the simple RSI. At each new high in price, we are seeing divergence in our momentum oscillator, in the RSI. Price is making new highs, momentum is making lower highs. Still positive, momentum is still coming up to confirm those highs, but we've got an overall divergence as momentum is not hitting ultimate highs with each of these new price moves. So think about that price trend. There are fewer buyers at higher and higher points of price. Makes sense, right? We were just talking about supply and demand relationships. There is less enthusiastic buying as price hits this ultimate high here. Same thing, so this is a bearish divergence, precedes the contraction in price. We can also look for bullish divergence. So when we're in a downtrend, price makes a new low, but our RSI makes a higher low, right? We have a divergence. There is less enthusiastic selling at this new low, and we don't see that confirmation from our momentum oscillator. All right, really simple concept. You can use this with any indicator. Is the indicator confirming the price action or diverging? And that gives you a leading indication of what might come. Now, obviously, the first pinnacle here, that's a divergence, but we know that it's not an automatic sell signal. Price still managed to make new highs. We just know that that trend was becoming exhausted. All right, same thing for the downtrend. Exhausted as the momentum oscillator made a higher low. All right, let's move on and talk about our second topic, relative strength. If you are a fan of basketball and you think about the Bulls in the 1990s, the Chicago Bulls had an incredible lineup. Obviously, Michael Jordan, star player. Scottie Pippen was incredible. Dennis Rodman was incredible. The whole team had a great balance. They had really strong bench strength. We can think about the same thing for market internals and what the nature of a market rally is. Are we seeing just a few stocks participating in the upside, or are we seeing a less enthusiasm in that market breadth picture? I apologize. I was jumping ahead to market breadth. We're going to talk about relative strength first. Comparative studies in technical analysis. This is a huge value add. Obviously, we can eyeball. Right here, we've got growth equities, and here we've got value equities, right? With an eyeball approach, we see that they both collapsed in the COVID pandemic, and then they both rallied out of the lows, right? Charts look almost the same, growth to value. Relative strength is going to give us a quantifiable approach to understanding what was happening during and following that COVID collapse. So we're using this as a case study, right? They're both trending up, they both collapse in the COVID crash, and then they both take off again. Using the relative strength line, dividing growth equities by value equities into a single ratio chart, we can get this relative strength line. Now, what's fascinating to me is that preceding the collapse in price of the COVID pandemic, we saw growth equities outperform value, right? Growth starts to rally ahead of the pandemic crash, and then through the collapse, they're both moving down, but relative strength tells us that growth equities are suffering much smaller drawdowns than what we're seeing in the value stocks, and the line goes on. Interestingly, that relative strength index changed when we saw rates start to hike in 2021. Rates were rising, and we saw value lead sectors like energy and financials and industrials. Obviously, 2022, the first half of the year has been entirely a defensive and cyclical sector story. The energy trade was great through July 1st, through the first half of the year, and of course that has rotated again. So when you talk to portfolio managers, financial advisors, other traders who are doing tactical asset allocation, what they're using is relative strength, and they might be comparing many sectors against the benchmark index. They might be comparing across asset classes. They might even just be looking at how a security is performing relative to its sector. So if we know that right now, this week, technology sector is leading the market, we might look at tech stocks within the XLK on a relative basis. What's outperforming the XLK, which is outperforming the S&P 500? That's our relative strength. And when we talk with large-scale institutional fund managers, the thing that matters most is how they do against their benchmark. So if the S&P 500 is down 20% and they're only down 2%, meaning they allocated capital to the sectors that were leading or performing the least egregiously during this market collapse in the first half of the year, they stand to outperform the benchmark. All right, back to that Bulls analogy real quick. God, I love the Chicago Bulls. Hopefully you guys do too. Market breadth. Here we're talking about the bench strength of the team. We want to measure the balance between advancing and declining stocks to tell us really what's happening under the hood. Are more stocks participating in this rally or not? And a lot of this is coming from Perry Kaufman. There are a lot of members of the CMT Association who've done great studies on market breadth. Lots of different indicators you can use, like the advanced decline line. That's what we're going to talk about next. But the idea is it's not just a market, it's a marketplace of stocks. And we want to make sure that we're paying attention to what the crowd of companies within an index is doing to tell us whether that supports the rally or not. All right, so market breadth really quick. Here we are, same case study going into the COVID pandemic crash in 2020. We've got the Russell 2000. And as we approach February of 2020, we saw a massive drop off in our advanced decline line, meaning price at the index level continued to make one more new high. But participation amongst all those 2,000 companies in the Russell fell off the cliff. A lot of damage being done under the hood before the index collapsed. Now, we saw market price pull out of this tweezer bottom in March of 2020 and take off at the index level, but we didn't see breadth improve until this rotation in the fall of 2021, where we saw a lot of additional, spring of 21, April of 21, we saw rotation into many other sectors. It wasn't just a few companies leading the rally higher. And of course, we pay attention to that rotation because leadership will change between the sectors, between the industry groups as the market rally continues. So really simple concepts: divergence, breadth, and now we're going to talk a little bit about multiple time frame analysis. Got to give a shout out to the OG, the original technical analyst of the modern era, Charles H. Dow, founder of the Wall Street Journal, the Dow Jones Indices. This man understood more about markets and market data than most of us will ever forget. Now, he was a nautical man, and he observed, even 130 years ago, that markets were moving in multiple time frames, meaning investors moved into and out of trades according to different time frames. So as a nautical man, he said the primary trend, the thing that is inflappable, the thing that is driven by GDP expansion or contraction, the macroeconomy and the underlying fundamentals of those companies in our indices, that's the long-term trend, years and decades to these structural bull and bear markets. And he compared that to the tides of the ocean, meaning it was not influenced by any news of the day. It was long-term, and it was really quite steady. So understanding the primary trend is very important for all investors. Are we trading in the direction of that trend? Now, a lot of technical analysts have really made hay on this secondary time frame, because we know that price is generally drifting in this primary trend. We can also look to the secondary period to see periods of oversold and overbought conditions as it moves along the primary trend. This is where a lot of our mean reverting indicators are going to add a ton of value. And of course, the minor period, the secondary period, he called the waves of the ocean, right? To stick with that nautical theme, you've got tides, you've got waves. And then he said that minor period is like the ripples on the surface of the water. This is the day-to-day fluctuations, the noise of the marketplace, the reaction of traders to the news of the day or to fundamental announcements. And those are very short-term moves. And if that is your time period, if you're trading intraday, small time periods, fantastic. God bless you. Make sure that you also zoom out and understand what's happening on your daily and weekly charts. Is the market generally trending lower, or is it generally trending higher? In which case, you're placing trades with that generalized or longer time frame bias in mind. So that multiple time frame is really critical to all technical analysis. You'll hear the phrase fractal, meaning that markets move according to all of these time periods, and technical analysis tools are going to work the exact same way, whether you're looking at a 5-minute chart or a quarterly chart. It can be the exact same analysis using the same tools. All right. Boy, I'm right on time, 40-minute mark. Last 20 minutes, I wanted to talk to you all a little bit about the CMT program. So in addition to identifying trends and having a responsible top-down approach to our market analysis, understanding things like breadth and divergence and momentum and making sure that we're looking at it across multiple time frames, we do want to develop consistent trading strategies that are going to be profitable over time. So job number 1, 2, and 3 is risk management. And the CMT curriculum is actually comprised of a marketplace analysis. We talked to all of the employers on Wall Street and Bay Street and Dalal Street, all over the world, about what they are looking for in terms of skills and knowledge and abilities in their next hire. And it's from that feedback that they give us that we actually develop the curriculum and then develop the test questions. So these 4 categories that I'm talking about right now are sort of overarching to all 3 levels of the program. risk management. We do have a lot of statistics, a lot of mathematics in the courses, and we lean on a lot of quantitative methodologies to understand things like signal strength, what happens in the 30, 60, 90-day periods following a signal in your trading system. How do you evaluate one strategy over the other? If you're an asset allocator and you've got a few billion to go to the hedge fund managers, how do you select which one, and what do you look for in their portfolio returns? We do offer the curriculum completely around a portfolio management approach. So instead of just focusing on individual security trading, we're talking about how you would develop a portfolio. So position sizing, asset allocation, making sure that you're constructing a reasonable and responsible portfolio and then managing the risk around that. And then, of course, we've talked a lot today about behavioral finance, about those heuristics, those behavioral shortcuts and cognitive biases that we all have as human beings. We're going to talk a lot about that in the program, not only how to identify it amongst investors writ large and what happens in the marketplace according to those behavioral biases, but also your own trading psychology and how you can help to identify where you are exhibiting overconfidence bias, or where you're anchoring to certain information, or you have a confirmation bias, you name it. All right, so the CMT program, broadly speaking, is a global credential in technical analysis. It's the preeminent, most widely recognized worldwide. We have approval from FINRA here in the United States for exemptions on their Series 86 exam, just for CMT charter holders. We have ongoing advocacy projects with regulators around the world. And it's awarded to those who have mastered this core body of knowledge. There are 3 exams that test your ability and skills in that mastery of the body of knowledge. They do have to be completed in sequence. So we offer the exams twice a year, once in June and once in December, and you do have to complete each of the exams in sequence. So you can only take one level per exam cycle. I know for some of the overachievers that we talk to, they want to knock out all 3 in one window. I promise you, 3,500 pages of reading and 8 hours of examination is too much for anybody. So take them in order. The next time to sit for these exams is going to be December 1st through the 11th of this fall, and then again in June of 2023. But why would anybody give up all their nights and weekends to study this heavy set curriculum? There's a textbook for you. Why would you study 1,000 pages for each level of the exam? Well, the reason is that it offers a structured approach to studying technical analysis. A lot of the professionals in the industry have picked up a desk or from senior management. They've learned on the job while doing. And that's a great way to understand some of the basics, but to have a comprehensive knowledge, a broad understanding of all of the technical tools and their most appropriate use and combination, that's what the CMT program provides. There's a lot of differentiated value in the industry as well. Most folks go to an MBA program like I did, and they basically just understand the fundamental side of the marketplace, not the technical side. And so we know that offers a ton of differentiated value to firms and to clients. But the real story behind why most people sit for the exams is that there are intense career benefits. So promotions, new positions, salary increases, bonus increases. But I want to draw your attention right here to more responsibility. About 60% of our new CMT charter holders, 1 year after getting their designation, reported higher assets under management, meaning their firm was allocating more capital to their strategy and clients were bringing more money to their fund. That tells us that there is a sort of consistent industry-wide appreciation for the discipline that CMT charter holders bring, and that they trust what these men and women are doing with their capital. They know that they have a strong risk management approach, and they're able to capture alpha according to market trends. So that's why most people pursue the CMT designation, is to have that charter after their name and to increase their career opportunities. All right, our good friends at John Wiley & Sons, that big heavy textbook that also serves as a great doorstop, is published by John Wiley & Sons. CMT Association is the editor of the collection. We define the curriculum for the program, and they've been a great publisher for us. They also do lots of other things around the CMT program. They have self-study courses and question banks and all sorts of other materials that they develop without us. But they did let me know, our good friends at Wiley wanted me to share with you, if you're interested in picking up a copy of the curriculum, you can go ahead and enter that discount code, CMTTW30. CMT-TW30 to take 30% off of whatever you purchase from Wiley Efficient Learning. So that's their website, efficientlearning.com. You can check out everything about the CMT program curriculum and the particulars of what they offer. Now, on our website, and really one of the best parts of my job is that I get to sit with some of the best portfolio managers in the world. And I talk to a lot of them about, where is the confluence of fundamentals and technicals? What is it that drives your process? How much technical analysis really informs security selection? Is it all around risk management? How do you do portfolio construction? And so we've got a lot of testimonials and interviews with our members, the men and women of the CMT Association who've been doing this for decades. Many of them very, very successful, Lipper award-winning fund managers. So you can hear all about that right from them at cmtassociation.org. You don't have to just take my word for it, but there's some great stories in there about how this has impacted their careers. Now, to get started, it's a really simple process, right? You enroll in the CMT program. You're going to register for your level of exam. There is no time limit to completing the whole program. We have candidates who, once you're a candidate, you're always a candidate. And if life gets in the way and you have a new job or you expand your family, you can come back and pick up right where you left off, even 5-10 years later. But every time you register for your exam, and then once you complete the 3 levels of the CMT program, you're going to be able to become a professional member of the CMT Association and have the right to use the charter. So again, we test all around the world in a single testing week. Levels 1 and 2 will be December 1st through the 11th. Plenty of time to study and prepare between now and then. And I just wanted to mention that for all of you, whether you are aspiring or current professional traders, this is really a program that's changed the way I think about the markets. And I certainly want to encourage all of you who are interested to go check that out. And at the very least, check out the curriculum and use that as a reference text in your own trading. The good folks at the CMT Association also asked me to share a little deadline with you. November 15th is when our registration closes. The early registration period ends August 31st. So if you register this month, you can save $100 on your exam registration. So that's the basic process of the curriculum. Obviously, lifelong members of the CMT Association continue to come back for continuing education, professional development training. We do produce a ton of written and video content, as well as the podcast and many other things for all of our members worldwide. And last but not least, I want to make sure that everybody knows we want to be a part of bullish trends, right? So the CMT Association has been growing by leaps and bounds. I got to update this chart. This goes back to the fall of 2020, but we have been at all-time highs the last 3 test cycles as the program really has gained ground worldwide, and we're seeing test takers from all over the place. So that really concludes the bulk of my prepared remarks. I was going to take a couple of questions from the chat here, Jeff. I see one. I have the CMT certification related question. I've just completed level 1, thanks to the Metastock event in November last year. Now on track to pursue level 2 and get the CMT after level 3. Alibek says, in order to get level 3 CMT, there are a couple requirements: 3 years experience in the industry and being recommended by sponsors. And so started trading markets. Great. What I would say for you, Alibek, is shoot me a note. I can introduce you to some members of the organization. That sponsorship mechanism is really to just help all of our new charter holders be connected to the association. We are not just a credentialing factory. We want to make sure that we have a wide and very robust member network worldwide. Folks who are developing new indicators, who are advancing the discipline of technical analysis, need a community where they can share ideas and share what they're working on, what's working, what isn't in this marketplace. So I can introduce you to some folks in your local area or around the world and help you get all of that done. Jeff, were there any other questions in the chat that I should answer here?
I didn't see a huge amount of questions. Let me double check again real quick.
Is it possible to register today and finish all 3 levels of the CMT this year? Amit, I love your ambition. That's fantastic. If you register right now, you can sit for 1 exam in December. You could complete the whole program in 1 calendar year. So if you did level 1 in December, do level 2 in June, you would wrap up your level 3, if you're successful on all 3 levels, in December of 2023. So the fastest you can do it is a 12-month process. That is how I did it, and it's pretty grueling. Make sure that you've got a good study plan in place and that you've reserved enough time to prepare. But yes, you can do all 3 in succession in 12 months. Great questions,
All right.
everybody.
Yeah. Any other questions, guys? You got a few minutes.
I sure do have a few minutes.
Did you injure your thumb?
Oh, well, on the weekends, I tend to do some home repair, fixing up a house for my mother-in-law. I managed to, well, most of my thumb is still there, but it's doing a little light electrical work and had a skill saw going to open up a wall, and I got nicked. But hopefully that wasn't too distracting during the presentation.
No, I just noticed, and I was like, you got an owie.
This is definitely advice that I should stick to my day job.
I like the fact that it looks like it's electrical tape.
It is electrical tape. I got that on last night, and I just haven't taken it off. Word to the wise. Nobody ever loses blood trading stocks.
Correct. That's correct. Well, I mean, there was that saying that was like, if there's blood on the street, it's the best time to buy, even if that blood is your own. So
I guess so. I guess now is a good time to buy electrical tape when there's blood on the.
All right. Very good. Thank you, Tyler. Appreciate it. CMTassociation.org. Thank you for all the help, the support over the years.
Absolutely. No, this is always a pleasure. And honestly, what Metastock is doing with these trader summits is it's really right in line with the mission of the CMT Association, which is just to bring people together, do some education. And I applaud all of you for taking time after a long day to stay online with me. Hopefully some of what I shared was useful to you. And please, by all means, reach out to us, admin@cmtassociation.org, or you can hit me directly, tyler@cmtassociation.org as well. So thanks again, Jeff. Looking forward to seeing you again soon.
Thanks, Tyler. Good to see you. Thanks for coming.
Bye-bye.
All right. And of course, we're going to use that as an opportunity to talk about them as a, let me go ahead and make me the presenter here. Go ahead and show my screen. I'm looking at stocks. Let's go ahead and kind of go back to the PowerPoint and go ahead and hit slideshow. This will be fine. I hope I'm in the right spot. I can check that real quick. Oh, I'm at the very, okay. I'm in a good enough spot. So do want to say thank you to CMT Association for sponsoring the event. I absolutely love having Tyler come in. Again, you can check that out at cmtassociation.org. You can call them at 646-652-3300. And really a big thank you for the sponsoring of the event. So we appreciate it. Also want to remind you about the Summit Action Pack. You get all of the add-ons we talked about today. Steve Bigelow's Candle Profit Systems, Jeff Tompkins' Trade Trend, the Vince Vora's Victory Method, the Silas Peters 3S Code, the Power Bundle 360, 2 years of stocks and commodities, 3 months of Learn Metastock, Unleash the Power of Metastock, the workbook and the videos. All of that, normally $5,126. But if you do here at the event, we're actually, it's more than half off, $2,385. So visit us online at metastock.com/summit deal. Give us a call at 800-882-3040 or metastock.com/sales chat. And Bubba, before I talk about anything else, are you okay to start just a little early?
I'm always here. I watch. I was getting educated by Tyler. He did a great job. So all the stuff I talk about, I'm just not a CMT, but it was good stuff.
Yeah, he does a good job. Always does a good job.
No, I mean, listen, it's a lot of the facts that we have to know as traders. You know, I've been doing this, as you know, for 44 years. So as a trader, you have to understand and know certain things, whether you go through all the stuff or not. You still have to know what you're trying to get done. Okay, so now let me see. I guess I'm going to share my screen somehow. So which one am I going to show? Which one am I showing?
I am seeing a bunch of charts.
Okay, you're seeing my price adders, right?
Yeah, I see a lot of price adders.
Okay, so I'm on the wrong, and I can't move this. I think if I remember correctly, I have to move. I have to actually move my. Oh wait, I can't move it. Okay, hold on 1 second. I want to go to screen monitor. Oh, you guys are probably different too. This is what I want to go to, and I want to clean. Okay, so let's see. Now you should see my presentation. Is that yes?
Yes, the day trader's dream.
Yeah, there you go. Okay,
And,
that's my trading side. I got my charts and everything on this side. I only got like 8 monitors here, so I'm trying to figure out where to put you all.
Yeah.
And I'm even going to say hello for a minute because I do have video. The camera does not face, it faces my ear when I'm working. And so, but I will let everyone know that I am alive somewhere in here. And I'm a real person. Where am I? There we go. Where am I? There you are. Hi, everybody. What's up?
We can see you. Yeah. I like the.
It's a pleasure. Unfortunately, everything I do is over there. So, but I do have a camera. And I actually have set up for all the TV I do. But I'm going to go back to hiding because it's easier. And then I don't have to look at the camera. So let me get rid of you. Okay. So I'm ready. You want me to start?
Yeah, speaking of hiding, I'm just going to get out of the way. It's your turn. Go.
Well, it's great to be here, Jeffrey. Always a pleasure, my brother. I appreciate it. Thanks for having me back. All right. What's up, everybody? Great to be here with you, as always. I'm a big fan. I'm a big fan of Metastock. I'm a big fan of Jeffrey, and I'm a big fan of the people he brings because typically they give good education, and I think it's always fun to watch. And I kind of zoom in and listen to all of Tyler, and it's a lot of things we talk about and teach. And we've actually designed something that actually uses the tools that he talks about, but we actually put them into our own algorithm. I think that it's something that I believe in, and get a little bit of my background. But this is day trader's dream, and and what does your gut tell you now? And that's always the problem, as you heard by some of the statistics that you heard earlier. I'm sure you're tired. It's late. It's a long day, but I'll get through quick, and I'll do the best I can for you. And if your winning trades give you a buzz and losing trades make you depressed, you belong in a casino. Okay. Trading is not gambling. Trading is an edge game. Okay. It is not about the gamble. There's too many out there that believe that they're firing and they're taking a shot. No, you're trying to get the edge. No matter what you're trading, no matter what time frame you're trading, you're trying to get the edge. Okay, and that's what we've developed and what we use to get the edge in our trades, which is what the day trader's dream algorithm is all about. And of course, before I can get too much further, I must share the disclaimer because I'm going to show you past results. Okay, later, and I'm not going to project forward. I don't make promises about anything. Okay, I don't think it's fair. I don't want you to become a member because you heard the magic hope words and the billions that you're going to make in 5 minutes. No, that's not the case. Okay, trading is a grind. It is work, and again, we relieved a lot of that work. But again, it's about understanding. But there is always risk, and past performance is not indicative of the future. But I always like to talk about this first. Okay, drawdowns. Okay, it's a subject you probably hear very little about. But it is something that is real. Okay, there are drawdowns. Okay, in any world of risk, even if you're getting the edge, you're going to go through bad periods. You're going to go through drawdown periods. Now, really, if you learn to understand what the drawdown is, you will also learn how to take advantage of that at some point as you make enough money. Okay, and then you understand what your win rate is or your win percentage. Okay, you will be able to actually press your portfolio and trade at a bigger size, provided that you have enough money that you've earned, not money that you have to add to your account, but money that you've earned through a successful program. So you are using what we would call organic growth. Okay, that is what we're big advocates of, organic growth, not adding money type growth. Okay, but drawdowns are a part of the business. And in fact, I'm going to show you our last full month that I have the records for was a losing month. But again, I don't worry about it. After 44 years, it's not something that becomes my problem. And for those of you, if you didn't see me, that is me. Okay. I've been a trader for 44 years. I've been a member of all 3 exchanges and still a member of the board of trade. I was one of the original market makers in the SPX, and everything that leaves my office, okay, I'm in. I trade everything that I recommend. Okay, so I'm not just recommending, I am trading with you, and I am trading at the same time as you. Okay, and that's why I'm getting the same price as you. All right, so remember, those are important things to understand, okay, because part of our programs are that everybody has to have the same opportunity to get the same price. Okay, so in the meantime, that is my badge. That's where the company comes from, Bubba. And you know, trading is not a get-rich-quick scheme. It's a progress. It's a process. Okay. You need, no matter whether you become a member with me or not, whatever you're doing, trading is a process. You do not start out at the top of the food chain, firing away big dollars, trying to make big dollars. You have to learn and grow yourself. And fortunately, the CME has been very cooperative because they keep reducing the size of the contracts, which allows average traders to come in and get involved for much less money. You know, just a quick bit of history. The S&P 500, we've all mostly heard of that. And of course, the S&P futures. When I first started trading, the S&P futures were $500 a dollar. Okay. And then they actually cut the index in half and made it 250. And then they came out with the minis, which are 50. And now they have the micros, which are 5. So it's been, you know, in 44 years, I've seen a lot of changes, and each change has been a benefactor to the individual trader. Okay, because again, it gives you a lot of access and a lot of ability to do things. So today we're going to talk about just the facts. If you've ever heard me before, you know I don't believe any bullshit. Excuse me, but I just tell it like it is. I'm not interested in convincing you that something's going to happen. I'm going to share with you ideas. I love to teach this stuff. I love to be involved. I've been very successful at it, and it's been good to me, and I want to share it with others. The BS we all must contend with: the price discovery, manipulation, algorithmic trading, margin and leverage, the mental game, letter of direction trading, which is going to be part of this, real results as of Friday, July 29th, how you can take advantage, and then, of course, I will always answer any of your questions, okay? And again, so when I talk about just the facts, everything I tell you is factual, okay, to what that I can prove, okay, that I can share with you and show you anything you want. I don't believe in nonsense, okay? I want you to be successful. I want you to be better at what you do. And again, it doesn't matter whether you become a member of me or not. That doesn't make a difference to me. I'm glad that I can help teach you something and make you a better trader either way, okay? Now, again, we all get these marketing schemes, okay? Now, these numbers are ridiculous. Those numbers are impossible, okay? But yet, here they are, okay? And they come out, you get them every day, okay? Of the promise of billions. That's not what you're getting here. You're not taking 5,000 today and turning it into 100,000 tomorrow. It does not work that way, okay? And I want you to be very clear for yourself, not for me. I've already been through the wars, okay? I want it for you so that you understand that this is working. This is making sure that you got your plan, you're disciplined, you know what you're trying to get done, because that's going to be the difference between you making money and not making money. And of course, we all may or may not understand what price discovery is. Okay, but price discovery is where parties meet to exchange wealth. Okay, you know, if you buy a new car, you're negotiating the price. You eventually find the price that the dealer's willing to sell it and you're willing to pay, or vice versa. Same thing in markets, right? You get to a price. That's how the markets determine what the next print is going to be. So when you see a market that is moving strongly higher, yes, we have relative strength. We have all those indicators. However, what do we know is we know the buyers are being more aggressive at that time and willing to pay more. Okay, and price continues to rise until it doesn't. Then they start to sell. So the sellers are then in control. So the market switches between weak hand and strong hands. But at every point, at every trade, you're seeing price discovery take place. And if you're still quite not sure of what the price discovery process is, I urge you, although I'm not a fan of the news nor CNBC, but Bob Pisani did a great piece on BABA when it first came out as a new issue, okay? And he went through the entire price discovery process as it was happening live. So if you ever want to really understand it, that's how they determine the price on these new IPOs. That's how they determine price on everything. It comes where a buyer and seller can meet, okay? Now, we constantly hear the claims of manipulation, and especially in the metals markets. And look, nobody's got enough money to do total manipulation of a market, of a big market. Now, little piddly penny stocks, I can't ever speak for those. I don't trade those, okay? But manipulation is not really what they're talking about. What you're really talking about is spoofing or some short-term action that can take place based on where there's some order flow or some paper sitting, okay? But overall manipulation is really does not happen in the markets. The markets are too big and can overcome all of it, okay? It's the spoofing that we're talking about. Now, spoofing technically is illegal in markets. You're seeing JP Morgan, who is on trial for that right now, okay? There's some of their traders. But at the end of the day, I will guarantee you that every one of you that are sitting here listening today have done some spoofing on something, whether it be a home you were selling or a car you were selling, because all spoofing really is either making something look like it's worth more or worth less, depending on which side of the eye you're on. You're spoofing the market to create a market, okay? But understanding it is important because, again, it does leave a market footprint, okay? And when you talk about the algorithmic trading, okay, and the things you do, and as it turns out, you know, Tyler before me mentioned the name Richard Dennis. Well, I know Richard Dennis. Richard and I traded together on the floor of the CBOE in the early 80s before he developed the turtles, okay? And all we've done is taken his stuff a step further, okay? We've actually automated it where you don't have to worry about it because everything is done for you, okay? But trading is about the math. It's a numbers game, okay? That's what you're playing. You know, if you look at the markets as a game, because that's really what they are, they're a mathematical game. Okay? If you understand that, then all you have to learn is how to grab the edge. Now you saw in Tyler, I'm going to make the Tyler because it was so good, but you know, Tyler showed you that over 50 trades, 43 million trades, whatever it was, that were over 50% were profitable. So you have to learn, you know, how to detail with inside that for yourself. And that's the math of the market. That's the markets at work. And again, whether you're playing poker, which is a math game, and you have the edge, doesn't mean you're going to win every time. Bridge, gin, and backgammon, those are all games that are determined by the better player over time. Any given day, any given trade, there is no guarantee. But if you do the same things over time, they do become real. And that's where you learn how to make real money, okay? Now, margin and leverage, this is a big part of what we do and about how you're going to be successful. It is knowing what they are and how to use them and how to use them successfully, okay? You have to have enough capital, okay, to overcome any drawdown, any period, which means that if you're over leveraging your position by too much, you're never going to make money because it takes one hit to wipe you out of the business. But leverage is the key in the futures market, which is what we're going to use in our day trader's dream. Why? Because it creates the best opportunity. It gives you the most amount of leverage. It takes away all the requirements from FINRA and all the other day trading garbage that participates in the equity markets. Okay, so each future or commodity that you're trading has margin requirements and leverage, and of course, you get day trading margins. So there's a lot of benefit to be able to create a position which is not over leveraged to the market based on the percentage that you have in your account, and they can allow you to benefit from trend trading. Right? You heard the word trend. That's what we're using. We're using trends, okay, on our day trader's dream, and we're using an hourly trend to try to grab on to trends. And there's a lot of rules that we have that you don't have to worry about, but I'm going to share them with you, okay? But there's a lot of rules because you have to make sure that you're repeating the same process over and over again, which means that yes, you can trade and control a large position, okay, with little money. You know, on day trading margin, there are brokerage houses that will give you as low as $500 day trading margin, as long as you're out by the close. Okay, now think about that. The mini S&P at today's value is worth just over 200,000. So you can actually control 200,000 for $500. Okay, and of course you couldn't do that in the spiders in the equity market. You would need probably 50% margin for that. Okay, and you'd have all kinds of other rules that go along with it, which goes again back why we're using the futures market. Okay. Now, the game itself, okay, and we call it trading as a game and gaming the market, right? Because the mental game of trading. Now, has anybody here ever, you know, reached out after having loser after loser and said, I'm firing it up here because this has got to be a winning trade? Okay. And or you chase down the market? And I know the answer has to be yes. Okay, because again, I've been doing this long enough, and we all have those sometimes revenge battles with the market. We all have things that we do that we shouldn't do. Okay, which is why you have to learn to play the game properly. Okay, you have to use the tools that are in front of you that allow you to establish your plan, your win rate, your risk, and the whole process, so that you have an entry point and an exit point. Okay, whether you're trading overnights, whether you're trading much longer periods, it really doesn't matter, because during the day, okay, every morning between 9:30 Eastern and 10:30, actually 9 to 10 Eastern, I trade live. I trade 4 minutes, okay, with my members. Okay, they're members of my futures program. Okay, we trade live for an hour. Okay, and I'm using 4-minute time frame. So it really doesn't matter what your time frame is, and you can use multiple frames, but multiple time frames will also require multiple plans for those different time frames. Okay, but again, you have to master the mental game that you're playing, because you cannot revenge trade. You cannot assume anything is going to be better because you did poorly on the last 3 trades, because if you don't have a plan and you don't understand what you're doing, then you're not ready to go. Okay. Now, again, we like when you invest in yourself. And of course, this is a way to start investing in yourself, because you're going to let a algorithm do the trading for you. And all you're going to do is watch. Okay. And we're using futures, and why are futures the best? Because again, they're highly leveraged. They're much more liquid. They don't get involved. They don't have implied volatility. They don't have big bid offer spreads. Okay. Anything that has a big bid offer spread is not liquid enough for us to trade. Okay. Commissions and execution costs are lower. Futures are more efficient. Short selling is easier. You get day trading margins, and of course, there is no FINRA day trading rule when it comes to the futures rule. So now you've got every advantage in the world helping you, putting you in a position to be able to make money, okay, without having to meet all these ridiculous demands of $25,000 minimum account to do this, and all the things that come along with many of the rules. Now, we auto trade all of this for you. Right? Actually, I don't. This is in partnership with Capital Trading Group, which I will tell you all about them as well. But we automate everything because, first of all, I could never get you the signals fast enough. Okay, but it keeps you disciplined. Okay, it helps you diversify. It avoids mechanical failures. Okay, some of the front ends went down today, but we always have access to the back end, so we can always execute our trades. Okay, you can monitor your own trades. You never miss a trade, and then you don't have the temptation, which is very common in the industry, to cherry pick. And, you know, you're watching the news, you're watching somebody talk, and they say something. Oh, I got to sell this. Well, again, remember one thing. Okay, the news you're hearing is already old and probably already priced into the market long before you hear it. Now, when you're doing algorithmic trading, you've got to have a clear plan, because we're taking, for example, okay, we're taking all of those indicators that you've seen during the day and putting them into one algorithm, because obviously if you put them on your chart, you'll drive yourself into an insane asylum. Okay, you'll be looking at all these, which is what? Well, we have a trigger that tells us which way the trend is going, if there's a trend. Okay, because if there's not a trend, we're not trading. Okay, and again, you're using something that becomes automated. Okay, that keeps you in line with the market. It keeps you in line with your plan and everything that you're trying to do. Okay, and it can accommodate and use all these different types of strategies all at once, which will also give you the way to get to exit if it's wrong, or to exit if it's right. And of course, we always exit by the close. Okay, so we're never carrying any positions overnight. Now, again, short-term fluctuations, those are drawdowns. I can't worry about those. If those are going to bother you, then you probably don't belong trading, because I don't care how good you are or who you are. Okay, they're going to happen. Okay, be prepared that they're going to happen. If your process is good, okay, and you can improve your process, then that's all you need to know, because the math will always win out if you are following the process. Trend following, which is what we're doing. Okay, again, this goes back into, you know, Richard Dennis, the turtles, and the different trend following systems. But again, one of the things about trend following is the triggers that you're going to use. Okay, and of course the exit points you're going to use, because you don't want to be triggering too quickly back and forth. You'd be just churning your own account. So it's very important to understand that trends can last for an extended period of time. Nobody knows how long a trend will be given, but we have, again, obviously, we have the end of day that we must exit. Okay, and we also have trigger points for profit targets, and we also have stops. And of course, using a shorter time frame algorithm, that is how we use for our stops when we are wrong. Okay. Again, we don't make every trade is not a winner. We actually make about 66% is about our win percentage. Yeah. Now, the day trader's dream automation is simply, we trade what were originally classified as the pit hours. Okay. If you've ever looked at your charts, you will see, in fact, I'm just going to show you real quick. I'm going to share with you. Okay. Here, you can see, now these are Pacific Coast times, because I'm in Las Vegas. I'm in my home in Las Vegas right now. You can see there was no volume before 6:30 a.m. And then, of course, boom, in the NASDAQ, the market, the volume picked up, in the Dow and all the other futures. And of course, in the currencies, they open up at 7 o'clock Eastern, 8 o'clock Eastern time, 7 o'clock Central. Okay, so you can see the volume picks up there. Okay, and the gold opens up at 7, and crude oil opens up at 8 or 9 Eastern. Okay, and those have different closing times. The closing times for the currencies is 3 Eastern. The closing time for gold is 1:30 Eastern. The closing time for crude oil is 2:30 Eastern. And then, of course, the equities is 4 o'clock Eastern. So if we're in gold at 1:30 Eastern, we're closing. No matter where we stand, win or lose, if we're not out, we're closing it at that time, because we do not stay past the time that the markets are actually open based on what the pit hours are. Obviously, again, we know there is no more true pits, although they are coming back in a much smaller scale right now to accommodate some commercial business, but the true trading pits are no longer open. But that is still where everybody's volume takes place, because it's typically during our day or during our work day. Okay, we only use either micros or minis. Okay, we have 2 setups. We have an aggressive and a regular. Okay, which will require 2 different types of capital. Okay, all the trades are done in block orders. Okay, so everybody gets the exact same fill. There is no variance on the fill. It is just strictly, we buy 1,000 contracts, they're averaged out, and each person gets their distribution at the exact same price. All trades are executed by the Capital Trading Group. They are a partner in Day Trader's Dream, because I needed somebody who could be there when the signals trigger. Okay, because they only trigger on the hour. Okay, so if they don't trigger, then obviously we don't have to worry about it. But if they do trigger, somebody's got to be able to execute immediately. Okay, and once the execution takes place, of course, then the stop goes in based on a shorter time frame algorithm, and of course that stop will create and move, and then we will use some selling points like ATRs, okay, for a time frame that will take off portions of those positions as they go in our favor until we finally let the balance run until it closes. Okay. Now, we can do this worldwide. Okay, we have relationships even into Canada. Okay, we can do, which is always a pain. If you're from Canada, you know what I'm talking about. But we can do this worldwide. So wherever you are in the world, and we've got members from Singapore to China to Japan, Australia. Again, of course, Australia, they love it because they don't have to get up. They're on the opposite day we are. Okay. But again, we can do it through Capital Trading Group, worldwide trading. Now here is just a few of the last like 30 days or whatever results. Every day I get the results. Okay, you get them obviously in your account. You get to look. Okay, but you can see the balances of where you are. Okay, and you will actually get this spreadsheet in full every Saturday morning. Okay. Every Saturday morning, you get a report how we did for the week. You get to see the aggressive and the regular for yourself, so you can view and see. And these results are all net after all expenses. Okay, and of course here is the regular, which requires a $10,000 account. Okay, and we're trading 2 micros in the regular. Okay, and at this point, since this year, it's up just about 5%. We went through a little bit of a drawdown. Okay, which again is great because it does give you. If we had a little bit more profit, we would have been ready to add to our position, but we didn't. So we just obviously are trading along. But we're always monitoring it, and this is a grinding out system, not a get rich type of system. But this takes 10,000. This is the exact equity curve of real lifetime trading. I have results going back further, but you could not access the trading system at that time. So there's no point for me to show them to you, all right? Because it doesn't matter. I only want to show you what you can actually get. Okay. And these results are audited and looked at, okay, and from a third party. Okay, so you can see in monthly, goes through June, which I told you we had a losing month in June. We've actually had 2 out of 6 months we're losing, but obviously still profitable. And that's in the regular. But again, this is so that you're always comfortable with what you're seeing. And since you're all getting the same fill and they're being executed by the same people, there should never be any questions to where you stand. Okay. And then, of course, the aggressive, which again, the results are 10 times as good. And why? Well, because basically we're trading 10 times the size. Okay, we're trading a mini instead of a micro, so it's 10 times the size. Okay, and of course this account takes 30,000 to function. Okay, and you can go with more, but again, my recommendation to everybody is always start with the minimums. Okay, look, if I'm telling you straight, okay, then it's going to be here and it's going to make a lot of money. Okay, and you're going to make money over time. You don't have to fire it in on day one. In any trading system that you use, again, whether it be with me or with anybody, there's no reason to ever fire it in. The markets are open 241 days a year. And as far as I know, the markets aren't closing. Okay, so it's better and healthier for everybody to start with a small amount that makes them comfortable and grow from there. Okay, so this is obviously up 61%. And again, the size is different. Now, there's one more little variance here. The aggressive didn't start at the exact same time. It started about 20 days later because what happened is we put the regular out and people wanted to trade bigger. So we made a regular and an aggressive. Okay. And this also has the results that are brought in, through an outside source, third party, to make sure that everything that we report to you is accurate. Okay. So again, remember that again, you're going to see what accurate results are, and they're going to continue to run and roll, which is what we want to do. We want to continue to grow this. So what is letter of direction or auto trading? If you're not familiar with it, letter of direction means that Capital Trading Group, who is going to do the trading for you, can only trade what the system tells them to do. Okay? They cannot trade anything outside of that. They can only trade exactly the orders as they are spit out by the algorithm. Okay? That is known as letter of direction. Okay. And you can listen, you can take money out anytime you want. You can stop trading anytime you want. It's your account. You do as you wish. Nobody's going to force you to stay in, nor is nobody's going to churn through your capital trying to make you stay in. This is something that, again, we believe in full disclosure and open results. This is why you know the results every single day. Okay. So again, but you can do anything you want. It's your account. All CTG can do is to execute the trades as written. Okay. Now, what are the benefits? You don't pay data fees. Okay. You take all your emotions out because the trades are being made for you. Okay? You maintain total control of your account. You stop whenever you want. All clients receive the same price execution for every order. There's no pattern day trading restrictions. And then there's the big bonus. Okay. And I tell you, I urge you to talk to your accountant. Okay, which is on futures, they're taxed at a better rate than equities. Okay, they go on a 60-40 tax. Okay, which is a big benefit if you're making money. Okay, and if any of you trade like the SPX, that they're taxed like futures. Okay, and again, talk to your accountant. Don't take my word for it. Okay, I want you to be very comfortable with what I'm telling you. Who is Capital Trading Group? Well, they're a independent broker. Okay, that also introduces and has a number of different places to clear through. You know, they've been in business themselves since 2006, so 16 years. But Nell and Pat have been in the industry for over 30. In fact, I know them from when they worked for Chicago Corp and for the other companies they'd worked for on the way up, and they decided that they wanted to be the best service in the industry. And I got news for you. They are. Okay. There's nobody who gives better service. Okay. And when you're calling your broker, you ain't calling up to say how you doing. You got a problem. That's why you're calling. Okay. And CTG is there to answer, and they do answer the phone. They don't have the voicemail jail systems you got to worry about. Okay. And again, the 60-40 tax, there's no wash sales. There's nothing to worry about, but it is something that you do need to talk to your attorney or your tax person about it, accountant, because again, I want you to make sure that they understand and they understand the rule, because this is legit. This is a real tax rule when it comes to the futures markets. Okay. And, so you open up an account with CTG, Capital Trading Group. Okay. They make all the executions. Any live trade variances across all blocks are averaged across all clients to ensure that all receive the same net result for each trade. You can see the trades are in your portal. Now, there is one glitch to that. Okay. As we're taking proportions of a trade off, because we don't take it all off at once unless it's a stop. Okay, we take it off. As I said, we're using the average true range as one of our mechanisms to take it off. Also using a stop that is rising, with the trend, or falling if it's in a downtrend, because we trade either side of the market. We don't go. Okay, and so the stop is going up, and we're also triggering the ATR. And the truth of the matter is everything depends on how fast, the speed at which the market works is how fast the stop from the algorithm will be pulled up. Okay. Now, how do you keep track of your account? You got your own portal. You get a statement emailed to you every night. Okay. You can see every single execution, all of your fees, but everything I showed you is including the fees. Okay. You get to put yourself and be in total control with one exception. You're not doing the trading. You're letting us do the trading based on our algorithm, which is going to, again, keep you from trying to cherry pick, chase trades, do things that hurt most average traders. Okay. And that's very important when it comes to the business, because too many people in this business, they go on tilt, is what they call it. If you're a poker player, you know exactly what I'm talking about. Okay. And again, there's futures, there's options, but why don't we use options? Because you have to give up too much to trade options. You've got to give up too much of an edge to trade options. There's implied volatility, which changes prices. There's too wide of a bid offer spread. So again, that's why futures are the cleanest. When you look at a futures market, all you're seeing is a one tick wide market. Okay. So if you like what I had to say, and you'd like to become a member, I'm going to tell you how to do that. And I will also take any questions you have as well. Okay. But if you'd like to become a member, okay, we're day trading futures, so we have no overnight risk. All executions are by CTG. All the trades are determined by a proprietary algorithm. Okay. No emotions. 15 people, $99 a month or $800 annual. Okay. And you go to bubbatrading.com/dream. Okay. Now, if you become a member today, okay, I'm gonna let you join me for 30 days of live trading. Okay. I trade every morning, okay, from 9 Eastern to 10 Eastern with my members, my own money. Okay. I call out all the trades. I teach at the same time. But if you become a member today, you are welcome to join us for the live trading as well for 30 days, which is based on these charts that I'm using. I use 2 time frames. And I think I heard that earlier. Okay. I use a 4-minute. During our day trading, 4 minutes. A long-term capital gain is 4 minutes. We're using 2 time frames, 4 and 1. Okay. And we're trading these 8 products. Okay. Actually, that should be the Dow. But we're trading 8 products in this market, okay? And those are the most liquid. They're the easiest to trade, and certainly, you know, I could trade more, but you know, we get all of them trigger off at one time, so we got to figure out how we want to handle it. But in the meantime, if you become a member today, I will give you as my gift 30 days free of trading with me on a daily basis. That might not be a benefit to you, but pretty good. We've done pretty well and made some nice money. So it's bubbatrading.com/dream. Both options are there, either the monthly or the annual. Okay, and these are normally $199 and $2,000. So it's a nice little discount because Jeffrey Gibby is the best and Metastock is the best, and we always appreciate doing them. If you have any questions, please feel free to fire them in. I know I got through quickly, but hell, I know you guys all want to go home anyways, or you're home, but you're done for the day. Yeah. So if you have questions, please feel free. Hello, Jeffrey.
Hey, Bubba. Amit has a question, but I meant to say, wants to know if your accounts are segregated.
They are. Each account is your own account. Okay. Everybody's got this is not a CTA. It's all, everybody's got their own individual account, and the executions are done in bulk, and then they are delivered to the different accounts. But the results will be the same in every account.
Got it. Okay, very good. And you can sign up. I don't see a lot of questions. If you have some questions for Bubba, better hurry and type them. But you can sign up at bubbatrading.com/dream. So.
Yeah, again, listen, I'm telling you, it's a great program, and it ties in with, you know, basically, other than the hour that I day trade every morning, I basically am totally automated on just about everything else I do now. And I was a floor trader until, you know, after 2010, because there really wasn't a floor. Once they went to decimals, it kind of destroyed the floor. So, which is what their plan was anyways, but that was good for the retail trader, because it brought the bid offer spreads tighter and it brought commissions down. So it was all good for everybody. Well, Jeffrey, I certainly appreciate being here. It's always great to be a participant, and I think I'm the cleanup guy, right?
Always great to have you. We always enjoy having you, Bubba. Thanks for coming in today.
Appreciate it. Have a great day, everybody. Thank you so much for your attention. I appreciate it.
Oh, we have one more question real quick.
Oh,
since you're here still. Are your decisions done in the hour you day trade in the morning? Is that when you make your decisions?
I'm sorry, one more time, please.
Are the decisions, I guess, that you make done in the hour you day trade every morning?
They can be, yeah. In fact, interestingly enough, today we actually had a break-even day in gold, but at one point, the day trader's dream was long gold, but we were short gold for a few minutes. So, you know, yeah, one does not affect the other. Okay, because, you know, what I'm doing on a 4-minute scale has nothing to do with what I'm doing on an hourly. What I'm doing on an hourly has nothing to do with what I'm doing on a daily, and so on, right? Because one's going to end much quicker than the other, and one's not going to change that day. Like my day trade, my swing stuff doesn't change during the day; it changes overnight. So it's never going to be. I'm either going to be extra one side or the other, or I'm going to be neutral. But it doesn't really matter, because at the end of the day, you're benefiting from both sides of the trade because of the time that they're going to be on.
Sounds good. All right, that's it. Bubba, thank you. I promise
Thank
that's the
you,
last
guys.
of the questions.
Very, very pleasure to be here.
Great having you. Thanks again. Enjoy your summer. What's up?
Oh, no, I don't want to do that.
All right, very good. Let me go ahead and kind of, we'll go ahead and wrap this up. Hope you're doing well. Hope you enjoyed it. Let me meet the presenter. Want to remind you about the Summit Action Pack. It includes all of the add-ons we talked about today. Steve Bigelow's Candle Profit Systems, the Trade Trend, Vora's Victory Method, the 3S Code, Power Bundle 360. I'm also going to throw in 2 years of Stocks and Commodities. Actually, we're not. Stocks and Commodities is. Thank you, Stocks and Commodities. We'll give you 3 months of Learn MetaStock as part of it and unleash the power of MetaStock as well. All of that would normally cost $5,126. Here today, $2,385. So get in touch with us, metastock.com/summit deal. Give us a call at 800-882-3040 or chat online with us at metastock.com/sales-chat. I would say for sure, there is a reason MetaStock has been rated #1 in its price category for every single year for the last 29 years. And if you haven't tried it yet, this is a great way to get started. So get in touch with us, metastock.com/summit deal. Give us a call, 800-882-3040, or chat online at metastock.com/sales-chat. All the speakers today that came in, spent some time with us. I want to say thank you to all of them. I thought today was great. I hope you are enjoying your summer. Hope you're staying safe, healthy, all that good stuff. Make sure if you're watching YouTube to like and subscribe and do all that good stuff. It helps quite a bit. Thanks for coming. We'll see you next time.
MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.